Alrighty. Are we live? Wait for it. Wait for it. There it is. Good morning, ladies and gentlemen. I hope you're having a wonderful day. If you're watching this and it does not say it live at the bottom of the screen, unfortunately, you're watching the recap. The good news is we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on that video. Make sure you're subscribed. You're on mobile. Press hot chat. X out the chat. Hit the thumbs up button. Second link for the nightly Watchlist in May channel. First link for the Scream Alerts boot camp and real estate course. But ladies and gentlemen, boys and girls, yes, it is that time. You have CPI coming out here in 15 minutes. We're going to get all of that info. Yesterday was already a wild day. We're going to be watching rate hike odds, seeing if anything changes. This data is going to be big. You had a little bit of a rebound so far in the banks. Nothing too crazy overseas. Everybody seems to be waiting. Everybody's going back and forth on what Powell's going to do. We heard a lot from the banks yesterday, so we are going – we are going to find out here very, very shortly, but it all boils down to CPI. So I'm going to have the breakdown for you. If you're not aware, CPI is supposed to come in at 6%, 5.5 on core, 0.4 on the month over month. But all this is boiling down to is the rate hike odds and how this is going to move things. Where is it? Fed rate monitor tool. But Chattadonia, this is what it's going to come down to. It's going to be a wild one. We're bright and early, so we actually have a lot of time. We have 3 more minutes until we get to the analyst. Then the report comes out in 13 minutes, and then we're going to spend 30 minutes, and then the bell. So we brought this up yesterday. Just watch out that today does not play out how the past CPIs have played out, but granted, a lot of people are very excited about this morning. I could already tell. All eyes are focused. The banks have cooled down, so we may be able to be in our own little world today, and then we get back to freaking out about a bank run and anything in the middle. So, Chad, good morning. How are ya? We got a couple of minutes. Are you ready? It's CPI day. Oh, Chattadonia. Good morning. What's up, Stacy Racy? What's up, S. Jones? JP Colt member, Hostone. What's up, Antonio? Carissa, Wavy Gravy, Lori. Good morning, Danny. Colonel Crust, Subwoofer, Smars, Data Junkie, Shameless, Stafford. Good morning. What's up, Carissa? What's up, Drew B? Oh, you feeling good, Caesar? You feeling good? There wasn't a bank run. There wasn't. I tried to go and I tried to see if they were worried. They were chill, man, so I hope you guys watch the watch list. So I feel a little good today. I forgot, somebody even bought Schwab. A couple of other people bought the banks today. I mean, not everyone, the freak out level is calm, so just hopefully CPI doesn't destroy it or CPI doesn't get everybody thinking for no landing. No. I didn't try to run it myself. I was just curious. It was a social experiment. It was a prank, dude. Chill. It was a social experiment. I was trying to experiment socially. They were so chill. Honestly, I was surprised. I should have got $500 in quarters. I feel you, man. But Chad, either way, nothing matters until what, next 10 minutes? For 10 minutes, we're going to be focusing on that. That's it. It's weird. I'm telling you, bank stocks, everything's bounced. I think like FRC is up like 40%, 50%. Western Alliance, they ran up there as well too. Schwab, again, I think they're up like 20%. Oh, no, 11% right now, but it's pretty big. There was a lot of other individual news as well, too. You got like UAL and a couple of others. I'm sure we'll get to it. Again, we have a lot of time, actually. So, Chad, you're here bright and early. God bless you. I'm glad that you are here. Let's have a good morning. Let's make it through the quarter. And remember, Friday is the Ides of March. It is the middle of March. And once we get past there, that is it, man. Salute, my friend. We will, before you know it, it's about to be April 2023. Yeah, that's how fast this year is running. So, let's get into it. I think the reports should start coming in. Good morning. I hope you're ready. Take a gander at Fed future odds one more time. Again, the pause rates are on the board today. So let's go 26%. Love that chat. Oh, I didn't even have pre-market on. You're at 0.82. So let's go. Welcome to the live experience. Today's report is a big one. So let's get into it. That is the first read right there. Make sure you like the video. Good morning. CPI is the final major economic report for the Federal Reserve they will have prior to the March meeting. The mixed jobs report after Friday, payrolls was hotter than expected, but wages touched a little bit weaker, means CPI was suddenly that much more important to gauge inflation. Today's report will clarify whether January's surge in prices was lasting. Yes, we are live, baby. We are kind of live, I guess, right? I think we're fully live. That's it. Everything's slow right now. Even the data. Again, used car prices, that's going to be a big focus of today. Manheim Car Index went up 4% on the last month, so keep that one in mind. That will be another big set of data. I believe real estate is expected to come down a little bit, but should moderate more in spring. But then the Silicon Valley bank collapse sent shockwaves through equities and treasuries and increased the risk of a U.S. recession. Some economists, including those at Goldman, suddenly saw the Fed prioritizing financial stability over inflation at the next meeting and holding rates at the same level. Last week, a 50 basis point rate hike was priced in. As of Monday, traders are expecting no hike at all, with even rate cuts on the year. Where's my dot plot? That's going to be something to watch here, too. I forgot about the dots, you know? Don't ever forget about the dots. You remember dipping dots? You go to the mall, you get to the dipping dots. Oh, wow. Very, very big. So this is the big one. Right here, young dot plot. So we are pricing in rate cuts once again for this year. That is a big one. Given all the tumultuous in the banking sector, the CPI report is not at the forefront of traders' minds. The usual statistics, even one as critical as CPI, have taken a backseat to the banking crisis, said Steve Snosnik, chief strategist at Interactive Brokers. I can agree with that one. I can agree. What would you do if CPI is positive? I would trade it for a little bit, but we don't know. I mean, that's what I'm worried about today, is just we don't know how everything's going to hold, whether it's good or bad. You know, realistically, right after the report today, I am going to be looking at the bonds and the Fed futures and seeing if that actually moves. The post-SVB banking pressure has had a material impact on inflation expectations. Below, you could see the fall in implied term structure of headline from CPI from Monday, most notably from inflation swap trades in the 6 to 10-month tenures. By the DTCC, these trades imply headline CPI will fall around 2.6% by the October release. So pretty much people are not expecting, they're expecting inflation to cool, especially even in line now with everything going on with SVB. So here's what economists are expecting for February. CPI is up 0.4 month on month. A slight slowdown from January's 0.5 pace. Core CPI, excluding volatile food and energy, up 0.4 on the month, matching January's pace. CPI up 6% on the prior year, a step down from 6.4 in January. That would be the slowest pace since September 2021. And on a core basis, CPI up 5.5, the lowest in about 15 months on core. Oh, I forgot. We do need the poll. Look at you. God bless you. What time is it? We have what? We only have 6 more minutes? Oh, man. We're getting to it, Chad. We are getting to it. So make your vote. The market is green now. I know some of you are going to hold your vote till the last minute. Just vote now. Don't be scared. Don't be shy. So Bloomberg, again, I just gave you the economist expectation. Bloomberg is expecting a 0.5 increase in CPI and then a 0.5 in core, higher than consensus for both. That corresponds with 6.1 year on year and 5.6 for core. Bloomberg sees energy costs creating upside risk to consensus. For core, we see an acceleration in core goods inflation, particularly car prices. We expect housing rents to show more definitive signs of monthly deceleration. Our model is predicting that the primary residential rents or owner's equivalent will both edge down 0.6 month on month, and year over year will continue to rise after spring or fall. Bloomberg Economics expects see a downside risk to the forecast. The model expects headline and core to match the consensus of 0.4. The financial stability concerns Katia mentions that erupted in recent days made Fed Chair Powell's warning of 50 basis points on March 22nd seem particularly poor timed. A big increase in prices in February would really complicate the Fed's job. Turmoil in markets could argue for doing nothing next week. Subdued CPI numbers could be helpful in making that a live option. Powell's been putting a particular focus on core service sector of inflation excluding cost of housing. This is because the area of price pressure concerns at the moment is in services, given that the goods sector of the economy has seen diminished supply chain problems and a trend towards deceleration in demand. The CPI's version of Powell's measure softened in January, though the version derived from the Fed's preferred gauge, the PCE, showed an acceleration. Let's see what we get for February. So that's something I'm picking up on right now, but I hope you guys got that. But essentially, if you have a cool CPI, then the odds of a rate pause become that much higher today. But then a hot CPI will complicate things, but I still think it's going to be complicated no matter what. But that is something to keep in mind. Cooler CPI is really going to put a Fed pause on the table here, and I'm sure that's going to make those odds move a lot. So here's a geographical look at the two core services gauges, excluding housing. How much time do we have? We got 4 minutes. CPI 2023 for February. Oh, I hope you're ready, Chattadonia. So this is PCE. Blue is PCE core services excluding housing, and then this is CPI services excluding houses. So both of them have a measure of Mr. Powell's favorite gauge. While Nomura predicted a surprise interest rate cut, and some economists like Goldman Sachs, Barclays, and Wells Fargo immediately pulled back expectations for interest rate hike at the Fed meeting this month, others aren't so sure. Analysts at Deutsche Bank and JP Morgan are among those that still expect 25 basis points in March. The argument is that inflation remains a top concern, despite a fallout from SVB, which has largely been contained, especially if the CPI report is hotter than expected. We've seen wild moves in the market expectations for the Fed target over the recent days. This is how it looks. That's actually insane. So take a look. This is the market, what they expected with rates. Here's the curve on March 9th. Here's the curve on March 10th. Here's the curve on March 13th. And then here is today coming in here into March 14th. So pretty much this is showing you had at one point you were pricing in a peak rate on March 9th above 5.5. And then yesterday, your peak rate went lower than 4.3, or just above 4.3, to give you an idea of how much rate hike odd expectations and the rate curve has changed. So which components likely drove the CPI in February? Energy costs likely increased on the month, as Bloomberg notes. Energy rates in California, excluding are skyrocketed in February. Car prices continue to exert upside pressure. The February increase in used car prices was the biggest month since 2009. At the same time, some analysts suggest that this lags retail data by several months, and the acceleration may not show up in CPI until March. Analysts are split on the impact of rents. Deceleration could show up in February report or in later data. Given the methodological quirk in calculation of health insurance within Medicare services, it may be worth paying attention to the change in Supercore, excluding medical care. As shown here on the white line, Supercore fell year over year to 6.19 versus 6.23, and excluding medical cares rose 5.3 from 5.1 January to December. Yes, don't forget about Supercore. Well, Chad, we got 1 minute. It's about to come out here. So, again, I'd watch month over month as always, but we're just going to take the totalitarianness or the totality of the data. We're going to find out. But you got about 45 seconds. I hope you're ready. I hope you're locked and loaded. Good luck. Watch the bonds. Again, I think IEF, SHI, TLT, TYD, TBT, they're all going to move pretty big here. I think the bond market will probably be the biggest winner. That's something we've been saying here. But, again, I'm ready to throw out the playbook. So let's find out, Chattadonia. Let's find out. You got 30 seconds left, a little bit less. Good luck. I wish you the best of luck. We will make it through, Chad. Oh, and get ready. Yeah, like the video. Get some of the jitters out. 15 seconds. Ba-da-ba-ba-ba. Why am I nervous? Everybody's nervous. Even Jerome Powell's nervous. Yeah, I'm just kidding. He already knows the answer. Oh, look at Jerome. Expected numbers. It should. Most people are expecting. So, whoa. It's not even out yet. Oh, there it is. Came in line. Everything came in line. Core came up slightly hotter than expected at 0.5. Month over month came in at 0.4. Headline came in at 6%. And then core headline or core CPI came in at 5.5. That's weird. Core moved a little hotter than expected, but it still came in at 5.5. And then average hourly earnings all dropped. So that was kind of bullish there. But for the most part, Apple and Tesla are up. Most part, everything seems in line. You got some updates. Yeah, Tesla and Apple are running off of it, but everything's in line. Honestly, dud. It's a dud, or maybe we go up off of wages dropping. But yeah, no surprises at all. Your 25 basis point may be alive here today, so I'd be watching out for that. Let's check SR3. Yeah, the rate hike odds are still kind of holding up here. All right, so core is slightly stronger than expected, but all other headline data is in line. Core is up by 0.1. Everything else is chill. FRC, huge rebound. Yeah, a lot of regional banks are up 50%. I think the data is good for now. I think if anything, though, I think it supports going a quarter. At the very least, you didn't get a hot CPI. Everybody was worried about that, so if anything, this reaction's tiny, though. I don't know if you guys realize how small this is. 1% right now, but you already were up 0.8. So you're only up by like 0.3. I don't know if this data guarantees a hike because it wasn't hotter than expected. I mean, I think we'll see with the bank, but maybe this, if nothing freaks out by Friday, maybe we could kind of guarantee a 0.25%. But yeah, those odds didn't really move. That's why SR3, these are the short-term interest rates. They're coming back up. Up is implying lower rates or pausing. Down would be more hawkish, but nothing's really tweaking out too much. So futures are up 1% on those on the NASDAQ. Again, real average earnings decreased by 1.3. February consumer prices 6% year over year. Core 5.5, and this is all in line with estimates. And again, wages actually dropped month on month, and then they revised last month wages lower. But the overall trend on wages is going up. And remember, we had that little mixed report there with the non-farms on Friday. Remember, it was like a mix of wages and people getting hired. So it's hard to see this reviving forecast for 50 move by next week. Inflation isn't coming down, but it's not a horrific reading either. And obviously, the Fed has financial stability concerns to think about. Shelter was the biggest contributor of CPI again, accounting for 70% of the increase. So that's not good. Rent prices are still showing up sticky on the report. Well, not your first read right now is some people are saying it's not horrific, but at the same time, it's not. I mean, inflation is still pretty high. So right now, even off the read, even though everything came in line, right now it does look like some people are a little bit sour towards, sour towards 6% inflation still, considering where we're at. So Fed swaps show odds of 25 basis point move already steady around 4 and 5. So you're coming down a little bit. First candle was down, then you came up. So now rate hike odds are coming a little bit lower here. So that's more hawkish in terms of the rates. Fake pump. I don't even think we've moved a lot. So this is what I was telling you coming into today. Like, this isn't your same CPI. I mean, just imagine how hyped up this data was. Imagine how much we've waited. But right now, you're like, this is your pre-market. Like, we're barely moving. So maybe we'll give it like 10, 15 minutes and we'll see where it goes from here. But as of now, though, I would even argue all of this is still a very, very small move considering it is CPI. Oh, let's see if it loads. I have to wait. I'll get my charts here in a second. Something to consider. Priya Misra, head of TD, said this morning is she anticipated a 0.5 gain in CPI, but even then, as it happened, she didn't think the Fed would move by 0.5. She expected 25. Futures are bussing. I'm waiting for my shit to load. They're going to update the services chart and all that. So please hold while we connect your call. There's also increases in food, recreation, and household furnishing. Interestingly, the energy index, despite expectations for a pickup, they actually had some declines in some parts of the U.S. This is the most underwhelming CPI yet, probably in the last 12 months. So climbing S&P futures extended post-CPI gains for the most fragile U.S. banks shows confidence that the hotter-than-expected core number won't push the Fed towards a more hawkish position. So that's a good sign for the equity markets. That's the other read right now. Some people saying slightly hotter than expected core could mean that the Fed can't raise higher. Liz McCormick of the Bloomberg Rates team advises swap traders held mostly steady at 84% probability that the Fed will lift rates by 25 basis points at the meeting this month. So here's a breakdown of Supercore month on month, moving up from 0.3 in January to 0.5 in February. So Supercore a.k.a. if you exclude everything, still found a way to go up. So that's not a good sign. Again, last 3 months, you've had Supercore on the rise since we've seen a decline there since middle of the year last year. Starting to come down here. Stock futures coming down. They were chilling at 0.7 on the S&P versus 0.9 versus the release. So futures were at 0.9. You're down to 0.47 or down to 0.5. It's a very, very small move right now. This CPI sucks. If you were looking for a gigantic move, you did not get it, especially considering how hyped we got up for this, and now you have Powell next Wednesday. It's a very, very small. Very, very small. Stock futures coming down. On the annual numbers, at least, it looks like inflation is heading in the right direction. The 6% gain was the smallest since September 2021, and on a core basis, it was the weakest since December 2021. Still, it is running too hot, though. Yeah, we still got a lot of time. Let's even give it the first 15 minutes. It's only been about 6 minutes so far. You had big drop, a little bit of a pop, but realistically, you've stayed within a third to a fourth of a percent. It's really, 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 really small. Really, really small. Annual numbers looks like inflation heading back down. Again, biggest drop since September 21 and the weakest core reading since December. Here are the top contributors for the slightly hotter core in February. So shelter made up 70% of the increase. Looks like the next big one, what's that blue? Is that transportation services? And then other. That's what is other. And then apparel had a slight one. Apparel's been getting expensive, I feel like. That's the second time we've seen apparel come up here. And then household supplies have also gone up there. And then medical services brought things down. And then transportation, again, those were a little bit lower. So not too bad. The core inflation measure Powell watches, core services excluding rents, went in the wrong direction, up 0.5 versus 0.36 in January. The year-on-year came down slightly to 6.1 from 6.2. So rent was a real big problem here, which could be good for next month, but as of now, that did not slow down at all. Good morning, Mr. Kingsley. Yeah, no, clothing, apparel went up a lot. That's the second month in a row, but, I mean, at least energy and transportation services came down. And, bro, we are doing nothing. And Fed future odds, they're not really tripping out too much. Again, they've moved 0.3. I think that goes in line with the market here. Again, futures are near the high of the day, or where they've been at since midnight and near the higher levels of yesterday. But, I mean, you've had a little bit of tweaking out, but nothing too big so far. IEF, bonds didn't move too much. Though they're trying to go up. Top of mind, obviously, for everybody is what the Fed will do given the turmoil in the banking sector amid persistent inflation and still strong jobs. Analysts and strategists aren't in any agreement on what we could expect. The BlackRock Investment Institute said on Monday that the central bank will press on with their rate hikes, while Goldman Sachs and Barclays said that they will stay in pace and pause. Costco apparel. Yo, that shit was discounted, bro. I think that sweater was like $10 or something from Costco. Nah, man, I bought it at Costco. I bought the Costco sweater at Costco while shopping through Costco. You know what I'm saying? It was crazy. I get my 2% cash back, executive member. You know what I'm saying? Stop playing with me. Stop playing with me, man. Ethan Harris, global head of economic at Bank of America, says that the complication for the Fed right now is that we are in a stress event. He says on Bloomberg TV that this call is ultimately the Fed's effort for the right fence of the regional bank troubles will work and allow it to focus on fighting inflation. Top and bottom set. What do you mean? We got right now, inflation came in at 6%, headline 5.5 on the core. Slightly hotter than expected on the core, but that's pretty much it. Nothing else is crazy. Super core, a.k.a. rent and service inflation, that all went up dramatically this month, which wasn't a good sign. But if you look at all your reads, everything was the same. Wages came down. But sadly, I don't know, dude, I feel bad. I feel bad doing this. Like, this data sucked. What I mean by that is this data, I was ready to throw up the playbook so far. I mean, we'll find out. Let's see when the market opens and we get the ding-ding because a lot of the banks are up today. But as of now, this data came in kind of soft. The reaction seems a little small. It doesn't really tell you much. If anything, it kind of just solidifies the position we were at yesterday in between 25 basis points is the consensus right now on the futures, but nothing else is moving beyond that. So we're kind of just holding up here, and we're going to see. But this data, I mean, it doesn't give you anything leading coming into Powell next week. It's not as if this was a crazy report. Yeah, definitely play the x-axis. So I don't know. We got another week, and now bank turmoil. CPI could have been better, could have been worse, but I think it just kind of keeps the tide from moving more than where it was yesterday. So here is everything. Women's dresses. Oh, ladies, it was the men first. It was men's suits. There it is. Yeah, but women's dresses, that was the number one increase at 6% inflation. Airline fare went up 6%. Frozen vegetables, 4.7%, which is weird. I thought food was coming down. Boys apparel, 4.2%. Tax return preparation, 3.8%. Public transportation was 3.1%. I don't see camera equipment in the top 50. So you're good. Camera equipment chilled out. It's at least not in the first, the top 25. Total hardware, women's dresses. Potatoes went up 2.6. Pet services went up 1.8. Music instruments went up 1.6. Processed seafood and fish, 1.9. Sugar and sweeteners, 2%. Lodging away from home, 2.9. Really, dresses were coming down. But women's dresses had a huge run up. And then inflation on airline fare. This was your first month of airline fare going up since May. And then I believe last February it came down. No, it was kind of hot at 5%, but it's hotter than last year. So airline fare, transportation, again, public transport went up. And then women's outerwear or women's footwear, that went up 3%. That was on the decline. Ladies and gentlemen, your wives and girlfriends and daughters, it's now more expensive. It's now more expensive. All the women's products went up this month. Men's products, you guys got to chill out. Very odd. Very, very odd. It was chill not too long ago. Here are the biggest decreases. Utility and piped gasoline went down 7.9. Fuel and oil went down 7.8. Eggs went down 6%. So you got a discount on eggs. Sewing machines. So it's more expensive to buy clothes than to sew them this month. There you go. Men's suits dropped. You see, look at this. I'm telling you, men's suits are on the decline. Women's dresses went up. Men's pants down 3.9. Window coverings down 3.2. Used car prices dropped 2.7. So that means the Manheim used car index is lagging. So just remind me of this for next month because I don't want to forget. But look at used car index has been dropping 3-4 months in a row. This thing is going to skyrocket next month. So I think next month might be hot CPI because this has to be lagging. Used car prices are down 2.7, and that makes up 2.6% of the gauge. Butter dropped 1.9. Men's apparel went down 1.5. Video and audio products went down 1.4, so I don't know if that applies, Charlie. Other video equipment down 1. But not camera. I think camera prices stayed stable. And then oranges, including tangerines, dropped 1.9. Infotech commodities dropped 0.8, and then transportation, less motor fuel, dropped 0.9, which was 8% of the index. Very weird. Other motor fuels or cars did not go up at all. Bro, cars have been declining 4 months on that index. That's wild. So here's a look at core CPI in 1 month. It came in hotter than expected. That is the third straight month of acceleration. So the main story is underlining CPI prices rose in February by the most in 5 months in acceleration. That leaves the Federal Reserve in a tough position as they try to thwart still rapid inflation without adding to the turmoil in the banking sector. This is what Bloomberg Augustus Saraiva writes. The figures reaffirm the Fed's quest to tame inflation will be a bumpy one, and the economy has largely proven resilient to a year's worth of interest rates so far. The challenge for the Fed now is how to prioritize inflation that is still far too hot for the growing financial stability risk and unraveling of Silicon Valley Bank. Bloomberg chief strategist Ira Jersey says that the data is just strong enough that he thinks the Federal Reserve is clear to hike 25 next week. The challenge for the Fed will be communicating that it's prepared to help financial sector liquidity, but still needs to fight inflation. For the Treasury market, we think the long end will remain in the old November to February range of 3.3 to 3.9 until the Fed meeting, while the front end may unwind some of Fed Monday's rally after this data. Anna Wong from Bloomberg, she expects the robust core CPI print is bad news in the Fed's preferred PCE gauge. The 12-month change in core PCE inflation may accelerate to 4.5 from 4.7. Are you kidding me? Oh, CPI may have accelerated, but you know it's ahead of it. Yes, ladies and gentlemen, Bradley Frizzle in the Peach. Peach Nation, get your ass up. Horn! Let's go. Uh-oh, where's my horn? Oh, there it is. Oh, good morning. Peach Nation, are you kidding me? Bradley Frizzle in the Peach, ladies and gentlemen. Oh, man. Oh, good morning. Let's go. Bright and early. Oh, maybe the CPI does run off of that. Oh, I don't know what's going to happen with Ray. Oh, man, watch the bank stocks. Bradley Frizzle in the Peach. God bless you. You know what? Listen, man, there's financial instability. But guess what? You could count on Peach stability. Peach stability is at an all-time high, bro. Oh, let's go. Oh, another one. Way to keep up the hype, Lombardo. I've been visiting the chat for 2 months. Because of you, I wake up early for CPI. Made 35 points on the ES. Here's my show of appreciation. Thank you, Habibi. Thank you, my friend. I'm glad to welcome you into the waking up early for economic data gang. That's what I'm talking about, baby. Let's go. Oh, let's go. The market's loving it. The market's loving the Peach. The market's loving the appreciation. They're going off of that. Wow. Oh, man. You got an ad for mattresses? Oh, man. That means you need a good sleep. What happened, bro? What happened? Have you been looking up how to fall asleep early? Have you not been able to fall asleep? Have you been looking at WikiHows on how to fall asleep? That's why you got mattress ads? That's crazy, bro. I'm going to pray for you. You got to stretch a little bit. Anna Wong, the robust core, we already read that one. More from Bloomberg's Anna Wong. On the 1 month, 3 month, and 6 month annualized basis, metrics of the Fed officials used to gauge inflation momentum. February's headline data was running at 4.5, 4.1, and 4.3, respectively, all down from the previous month. On the other hand, core was up across the board, 5.6, 5.2, and 5.1. That's not good. The February numbers were suggesting the turnaround we saw in January wasn't a head fake. We saw a nice moderation in inflation for November and December, but that didn't continue in January and February. The disinflationary process Powell proclaimed on February 1st has sadly come to a halt for now. So that's the negative part about this data, is that your 3 month averages now kind of look like shit, or now they're going up instead of going down. While core goods inflations continue to cool, core service inflation kept marching higher at 7.3, and annual increases in service component jumped to the highest since 1982. Hot dog. So this one's not good. That's actually wild. Yo, take a look at this. So this one's not good, yeah. So here is like your CPI with like commodities, right? This is the year-over-year commodities, but you see this? Bro, this is U.S. CPI services excluding energy. That thing is peaking right now. So if we are going to have Mr. 1970 inflation rear his ugly head, I think this guy's going to come back up here. That's not good. So services is actually still running up and is at the highest here since 1979. Stock futures just hit session high. Investors are shrugging the data report. Catherine Judge, an economist at CIBC, offers her takeaway. Price pressures were hot in January and February. Here's the breakdown of shelter CPI, up from 0.76 last month. So people wanted it to come down, but it's still back up. That is not good for Powell. Good news for groceries. The index for meats, poultry, fish, and eggs fell 0.1 in the prior month, the first decline since December 2021. Eggs fell nearly 7%, the biggest drop since 2020. So that's good at least, kind of. Where is it? So here's the grocery index. This is kind of cool. Oh, wait. I need to save that other one. Did I save it? I need my services. Ba-da-pop-pop-pop. So here's like fish, meat, poultry, and any other, what's it called? Groceries. That's your first drop since December 2021. Here's our take from Dennis Debauchery, founder of 22V Research. Net, this is on the hot side, but not game-changing. The Fed is very focused on labor data, and that was slightly dovish, which is why futures are not changing rate hike odds much post-data. He adds he expects yields to keep moving up as financial stability concerns go away. That is the key to moving rate hike odds over time. The CPI was not a game-changer. Bank of America, Ethan Harris, tells Bloomberg that if we could get past the hectic moment in the market, we are back to an economy that is in solid shape. Wow. So people feeling a little calm today. I kind of agree with Dennis debauchery. I think net this is on the hot side, but not game changing. Here is the nice breakdown of the February CPI. Size of the box represents contribution to the headline number, and the color represents month-over-month change. So energy saw the biggest declines. Again, rent had the biggest run-ups, and then so did transport, and then airline services came out of nowhere. Medical services all cooled down, and then recreational services were all up there, but not as hot as last month. S&P futures are up 1% as of 8:50 in New York. Same for NASDAQ 100 contracts. Futures are up. Everything is kind of stable. So even the futures are there. SR3. Even rate hike odds, they've calmed down a little bit, but again, nothing game-changing. Just still at the levels of yesterday. So nothing has really moved too much. Honestly, this is probably one of the most underwhelming reactions to CPI you've ever gotten. And what I mean by that is just look, your bond market barely moved, your futures barely moved, even your rate hike odds, nothing really moved. So I think the opening bell and euro close will be important. And then you have a lot of the banks that are up right now. But as of now, I agree with everything else. Damn, Coinbase is up 10%. Don't tell me that. I'm shorting them. Oh, my gosh. Damn, son. How they going to do me like that? But anyways, it is coming down to, I think it's just not really game-changing. I think we're going to wait here for the next couple of days. But I don't think it's, I don't think this is like totally throwing people off in any way, shape, or form. Rate traders are now seeing the Fed more likely to raise 25 basis points. Expectations shifted wildly in the few days from 50 points to no hiking at all. Policymakers move to backstop banks means they have tools to ensure financial stability, so monetary policy can focus on inflation, the calming of equity markets, and today's CPI probably gives Powell a green light to do 25 basis points. Damn, son, where'd you find this one? All right. Oh, Ira Jersey speaking. I'm going to let y'all talk to Ira for a little bit. So I need to go to the bathroom. Follow me on Instagram at The Trading Fraternity. I love you. Okay, you know I love you. I hope you know I love you. All right, follow me on Instagram at The Trading Fraternity. All right, I'll be right back. All right, thank you.
And there are other things. There's alphabet
Get ready.
soup.
We're almost 6 o'clock.
FRAOISEIEIO. Old McDonald joins us now. Ira Jersey, our chief U.S. interest rate strategist for Bloomberg Intelligence. Ira, thank you for taking time out from writing your note this morning. What does the shortest of short-term paper, what does it say of our trust and confidence now?
But trust and confidence, I think people still, think that the U.S. is going to be money good. That being said, you look at some of those T-bills from August and they're pricing in for a small chance of a default by the government due to the debt ceiling. But even regardless of that, just taking, the market moves the last couple of days, you can actually see how poor liquidity is, right? You don't get 50, 60 basis point moves, even with the significant, repricing of the Fed's terminal rate without liquidity being really drained.
Ira,
that's for sure.
Before you keep going, I want to just pick up on that. That's exactly where I wanted to go with you. You say liquidity is so poor, and yet we saw a 300% increase in trading volumes yesterday in treasuries, a massive spike in volatility, as you say. What do you mean when you say that there is a lack of liquidity?
Well, it's basically when you have the regulatory environment like it is, it's just hard for traditional intermediaries to increase the size of their balance sheet, whether they want to go long or short, and they're able to basically step in the middle of some of these large moves. And keep in mind that a lot of these moves, certainly the large rally we saw yesterday, a lot of that happened during European hours, right? Unsurprisingly, I guess, just given the news that came out over the weekend. So when you look at things like bid offer spreads, naturally they're going to widen because of the amount of volatility. But more important is that you kind of have these air pockets where people just aren't willing to trade at every price necessarily, at least not in reasonably big size. And because the treasury market now is over $20 trillion and the size of some of the funding markets have basically remained the same over the last dozen years, you just have this mismatch of people able to lever up and take risk on a moment's notice than you did before. And that, that's kind of the downside of prudential regulation. So the good thing is that you can have
the good thing. So that's Ira Jersey. Very good with bonds. but nothing has happened. Nothing has happened. You're melting up here. Again, hot report, but nothing game-changing. You're moving up here. Chattadonia, are you ready? Are you ready? Let me get you a couple more updates here. Again, inflation came in at 6% year over year, 5.5 on the core, and 0.4 month over month. You saw it's still it's killing the 3-month trend because inflation is coming back up. This is the hottest report since December in some areas. Core services, housing went up, but then surprisingly, energy and cars actually found a way to come down here, which may be a little bit more hyped on the next meeting. But as of now, nothing too crazy. Surprisingly, one of the more calmer CPIs that we got. Again, BMO's Ian Langen says this on a note. Overall, this is an inflation update taken as a sole input. It would suggest the 25 basis point hike next week is foregone conclusion. At last, the regional bank stress level next week's decision as a wild card until there is greater clarity on the success of limiting contagion for the rest of the banking sector from SVB and Signature. Again, egg prices are now contributing to disinflation. It'll be interesting to see how the Fed cobbles together the jobs report, a mixed bag but still hot, and the U.S. CPI going in the wrong direction, and the financial risks from the SVB debacle. The first two calls for a rate hike, but the latter for a potential hold or even cut. According to Nomura, officials meet next week from now. Andrew Hunter, economist at Capital Economics, says at face value, the ongoing strength of inflation presents a dilemma for the Fed as it focuses on maintaining financial stability, but even in the current crisis, ends up being resolved relatively quickly. We suspect the resulting tightening in credit conditions will still do lasting damage to the economy. Hot dog. And you're running. All right, but Chad, let's do it. Let's get to the news. Who's with me? Who's with me? Pop. So good morning, Chattadonia. Good morning again. How you living, baby? Not too bad. This kind of reminds me of the jobs reports. Like this one could have killed you today. This could have made the whole situation that much more confusing. This could have added a lot of volatility today. If anything, I think it might be a turnaround Tuesday with a little bit of calm. But good morning, baby. How you living, Arturo? What's up, Graham? You still feeling good? Yeah, rate hike odds, they're chilling. It seems like this kind of solidified a quarter basis point. What's up, Maria? What's up, Granville? We might melt today. We're going to find out. Let's see by Euro close and everything else. We're going to go from there. We are going to go from there. Good morning. What's up, Awadis? What's up, Lost One? What's up, Vincent? What's up, Maria? Dan Kingsley, John Dog. Good morning. How you living, Matthew Bailey? How you living, Kurt McGirt? Marceline, good morning. Oh, Andres, baby. What's up, Jay? What's up, Andres? How you living, man? You feeling good? Oh, Bradley Fresh. Oh, let's go, baby. What's up, 333? Oh, what's up, Sizzler? JG, y'all ready for it? Down, now, down. You know what I'm saying? Y'all ready? Everybody, rate hike, bow. Okay, don't let me get into it like that. But let's get to the news, Chattadonia. The 2-year Treasury had a topsy-turvy session as problems at Credit Suisse added to the woes faced by the global banking sector. The yield traded as high as 4.3 and as low as 3.82 as investors digest headlines. This came on top of Monday's epic slump amid repositioning for a more dovish Fed. Still, some big money managers are sitting on a windfall. Schroders, Fidelity, and M&G are among funds that made bullish bets on Treasuries before the turmoil. Fed dilemma: underlying consumer prices rose in February by more than forecast, leaving the Fed in a tough position as they try to thwart still rapid inflation without adding the turmoil in the banking sector. Shelter was the single biggest contributor to the gain, accounting for 70% of the increase. The year-on-year pace edged down to 5.5. Headline inflation slowed to 6 with a monthly reading of 0.4, both meeting consensus. Futures held gains after the CPI print, while the 10-year yield edged higher to 3.62. The dollar rose against most of G10 peers. Oil and gold declined. Not now, Credit Suisse. The bank found material weakness in their reporting for 2022 and 2021. Its delayed annual report shows internal control over financial reporting was not effective. Oh, Sam Caron. Isaiah Habibi. Isaiah. Look at this is the Bloomberg one. Next stop 30K. Last chance. That's what they say about crypto. They pump it. Even the Bloomberg chat if crypto is a pump. It's crazy. Neither were disclosure controls and procedures. Chairman Axel Lehman will forego payments of $1.6 million. Ray of Light CEO Ulrich Korner says that the former firm saw client inflow yesterday's shares still fell. SVB reverberations. Moody's placed First Republic and 5 other lenders on review for downgrade. Regional U.S. bank stocks rallied pre-market as concerns eased about wider contagion. Apollo and Blackstone expressed interest in snapping up SVB's loan book. TBTF lenders, JP Morgan, Bank of America, Citi, Wells Fargo, are said to be seeing a rush of depositors, so they are benefiting off of the outflows. Signature survived blowups with cabbies, bad landlords, and Trump, only to fall after trying a side gig. It was the U.S. third bank to topple in a week as depositors fled. Lenders tethered to closely to watching the digital world slump, but Signature was something different, treating crypto as a side gig to its longtime role in New York, overlooking neighborhoods and businesses. More on the big take. American capitalism is breaking down before our eyes, Ken Griffin told Financial Times, criticizing regulators' SVB intervention and adding to a growing cohort of financiers warning about the risk of moral hazard. Depositor losses would have been immaterial and driven home the point that risk management is essential, he said. Michael Burry tweeted, then deleted, that he doesn't see true danger after earlier slamming hubris and greed. Apollo will buy chemical company Univar for $8.1 billion, including debt. Blackstone will purchase Cvent for $8.50 a share. Crypto news: Binance suspended deposit and withdrawals via bank transfers and card payments for UK customers, and local partner PaySafe stopped providing support for pound transactions. The Department of Justice is probing Terra stable collapse. Wall Street Journal reported, and U.S. prosecutors are looking whether market manipulation occurred via Telegram chats among staff at Jump, James Street, and Alameda about a potential bailout for Terra. A person familiar said. Asset managers, including Franklin and Invesco, added SVB shares in the months before the collapse. The firms, together with Two Sigma, D.E. Shaw, Renaissance, and BlackRock, were among the top 10 buyers since September, according to data compiled by Bloomberg. It's not clear if they hold the stock, but as of the last filing, Invesco owned a 2.9% stake in SVB. Two Sigma owned 1.7%. And Franklin owned 2.6%, and BlackRock owned 8% of SVB. 3 p.m., you're going to get Argentina Fed CPI. 5:20, Fed Bowman is speaking. U.S. politics: Joe Biden expressed assurance in the viability of his student debt cancellation plan. A reversal from previous suggestions by the Supreme Court may strike it down. The Treasury will allow House Republicans to inspect reports on foreign banking and other business transactions by his relatives and associates. Mitch McConnell was discharged from the hospital. Argentina's inflation probably surpassed 100% in February. Its 2023 reserves target should be slashed by $2 billion to meet IMF demands for agreeing to review their $44 billion program. Brainerd must help contain SVB crisis she warned was coming. Canada regulator to monitor bank liquidity. U.S. legislators ask Mexico AMLO to meet USMCA obligations. The UK labor market showed signs of cooling as wage growth slowed for the first time in more than a year. Spain's final EU harmonized inflation was revised down to 6% from 6.1%. Russia saved abroad about a third of their $227 billion windfall earned last year was from commodity exports. Ukraine, Rheinmetall said Europe's defense industry can't meet Ukraine's artillery ammunition needs unless governments increase spending to double production capacity. Florida Governor Ron DeSantis expressed strong misgivings over support of Ukraine in their defense against Russia. Germany makes last-minute demands over reform on EU fiscal rules. 10-year JGB yield dropped through the BFG ceiling. The benchmark fell as much as 5.5 to 0.2, the lowest since before the bank doubled the ceiling in December. 10-year OIS, used to hedge against bet on yield changes, fell below 0.5 for the first time since November. BlackRock said bets on Aussie bond traders the RBA will call an end to hikes looks like the wrong call given strong inflationary pressures. Accelerating Indian inflation has reignited the debate on data collection practices. Economists are worried on an RBI rate decision will be based on a number that doesn't reflect the digitalization of the economy. China accounted for 40% of South Korea's tech shipments in February, the lowest level in more than 13 years and down from 45% a year earlier. That's as China's bolstered high-tech manufacturing under a national goal of self-reliance. Gold oil markets appear on track for a modest surplus next quarter amid a seasonal lull in demand, OPEC said in the monthly report. The group is pumping 28.9 million barrels a day, or about 300,000 a day more than it expects to in the second quarter. Crude retreated for a second day as SVB collapse continued to roil markets. Traders on oil options are paying increasingly large premium for bearish put contracts amid market volatility. Brent's nearby put skew climbed to the highest level since mid-August. Gold fell as did oil, wheat, soybeans, and corn. State Street's Spider Gold shares saw the biggest inflows. They have about 729 million in the last session. That's a total of 29.4 million ounces, holding a market value of 56 billion. Iraq's wheat harvest may double to almost 4 million tons in the current year from the prior period, country's agriculture minister said. The $12 billion buyout of Qualitrix includes a $1 billion deal of debt that will be syndicated in the leveraged loan market. SurveyMonkey owner Momentum Global will be bought by a group led by Symphony Technology. All-cash transaction valued at $1.5 billion. JP Morgan urged investors to trim their exposure to emerging market fixed income. A tactical window that is opened up for EM fixed income has closed for now, the firm said. U.S. cannabis seller Terra Ascend seeks Toronto exchange listing. Novartis is said to start sale of some ophthalmology assets. An SVB crisis puts Chinese tech IPOs in the U.S. More on SVB. Sweden's biggest pension fund, Alecta, called its $2 billion bet on the niche U.S. bank tied to the fallout. HSBC plans to inject €2 billion of liquidity into the SVB UK division. CEO Noel Quinn said the buyout makes strategic sense. United slumped pre-market after forecasting a surprise loss on labor costs. The guidance sullying another optimistic first quarter update, with the airline expecting operating revenue up 51% year on year. Delta reaffirmed their outlook. Ride-hailers can classify drivers as independent contractors under Prop 22, a California appeals court ruled. The decision struck down a lower court ruling and sets up the possibility of a California Supreme Court petition. Honeywell taps company veteran Kapoor to take over as CEO. Goldman Equities veteran Del Mas exits after 21 years. Honeywell names Kapoor as CEO to succeed Darius Adamczyk. Amgen sued for failing to timely disclose $10 billion tax bill. Microsoft laid off responsible AI teams. Dow detector, Verizon is having trouble. And then UK order recall for cough medicine containing pholosodine. And then China will resume issuing visas to tourists and other foreigners tomorrow, a significant step in their move to rejoin the world and leave stringent COVID behind. There will be a visa-free entry into Guangdong province for foreigners in groups from Hong Kong and Macau, and for those on cruise ships stopping in Shanghai. A former Goldman VP who was once on trial for insider trading in June, scrambling to pay his legal defense after he was cut off by the bank's insurers. Brajesh Goel, who has pleaded not guilty to providing inside info about Goldman deals to a squash buddy, sued AIG New York over their decision to stop covering legal bills, which have already totaled at least $5 million. New York's $2 billion air train, which would have connected Midtown to LaGuardia, has been ditched after a panel recommended improving bus services instead. New York and New Jersey should create a nonstop shuttle between the airport and Queens with better bus links, the panel said. Estimated costs for the bus operation are under $500 million, compared with $6 billion for the light rail system. FIFA is looking to approve a change that will set the format for the largest and longest championship in soccer history. The next World Cup is to take place in 2026. Across North America, it'll have 48 teams playing 104 games, as many as 40 days in 3 countries, and we'll see the champion and runner-up each play 8 games instead of the current 7. And then on this day in history, Karl Marx died from cancer in 1883. The father of communism, whose ideas disrupted the political world order, had a relatively tranquil end. As his friend Frederick Engels put it at the funeral, the greatest living thinker ceased to exist. We found him in an armchair, peacefully gone asleep, but forever. Marx was buried in Highgate Cemetery, London, with his wife. Wow, there you go, communist, huh? Where are my Marxists at? No? Come on. No? That's your day in history. Look at that. Look at that. Little Karl Marx to start your day, huh? No. I thought more communists would show. I thought we were gonna get more feedback from the communists. I thought that was gonna. No, not one. I ain't get one. Come on, no horn for a communist. Come on, man. I thought we had at least one in here. No, y'all just no, y'all. That's crazy. By the looks of it, that's crazy. Anyways, I got some pre-market movers for you. Amylyx, the maker of the drug amyotrophic lateral sclerosis, ALS, rose 17% after posting fourth quarter revenue that easily topped estimates. Bunge, BG, is up 9.4% after the S&P Dow Jones announced that BG will replace Signature Bank on the S&P 500. BuzzFeed shares are down 11% as the online media company forecast for first quarter missed expectations. Crypto-exposed stocks rise after Bitcoin extends their gains as U.S. authorities stepped in to stem the spreading concerns over SVB. ABB. GitLab fell 29% after the software company gave full-year revenue forecast that was weaker than expected. Match shares are down, up 3% after Barclays upgraded the online dating company to overweight from equal. Momentum MNTV rises 20% after the SurveyMonkey owners said that they had been agreed to be acquired by Consortium for $9.46 in a cash deal. Regional bank stocks rallied on Tuesday, set to claw back some losses after the 6-day sell-off seen in the wake of the Silicon Valley Bank collapse. First Republic is up 44%, PacWest 32%, Western Alliance 27%, Bank of America 3%, and Citigroup up 2.8%. Uber and Lyft advanced as California Appeals Court upheld the current law classifying gig workers as independent contractors instead of employees. Analysts noted that this would allow companies to avoid any negative impact to their business. Uber shares gained 5%, Lyft shares gained 5.4%. United Airlines drops 5.3% after the carrier slashed their first quarter outlook. And then ZoomInfo ZI shares are up 4.6% after the company announced a $100 million stock buyback. Wow. Would you look at that? So, Chad, we're really early right now. So you've got hot CPI, but the market likes it as it didn't upset things. Sadly, I hate to break it to you, today's day looks exactly like when we got the non-farm payrolls. Does anybody remember that? What was that? Was that Thursday or Friday? I think you were up pre-market, and then we just started making our move. So nothing has really happened. Very, very small reaction, even though futures are up 1. We're going to have to deal with the lot. Banks are already recovering, and I think that's it. I'm gonna go get me another water here. Water and bathroom break, part 2. We're very, very early. We're very, very early. Good morning, Chad. Follow me on Instagram at the Trading Fraternity. Like the video. Get hyped a little bit. We got a wild day ahead. Wild day ahead. I'll be right back. Amen.
Up the team size by around 10,000 people, largely in line with expectations. There is an important line here, though. Meta to close around 5,000 additional open roles. That stock is positive by about 1.85%. They expect to announce layoffs in the business groups in late May, in tech groups in late April. Further cuts to the size of the recruiting team as well, as you might expect. So that stock's up by about 1.9%. That's not the focus of our attention this morning. Mike McKee, the focus of our attention is on you and the data so far going into the Fed next week.
Well, gee, I'm flattered. The data probably flatter the Fed a little bit here in the sense that they keep us on the same narrative that we were on before the banks started to go bad. And so it looks like maybe 25 is the way to go at this point, where you've got headline coming in as expected. The only real out of expectations number was the core monthly up 0.5% compared to 0.4%. And a lot of that comes from the service side, particularly housing up 0.7%, rent up 0.7%. That hasn't started to come down yet, and a lot of people are waiting for that. When it does, we should see a much more significant drop in inflation. The Powell indicator here does show some good news in one area, and that's goods and services inflation, but services core services X housing comes down another 0.2 from 6.2 to just over 6, and that does suggest some pressure easing in that area, but services prices overall still going up, something the Fed's keeping an eye on. And if you take apart the numbers, you could see that there were increases in food away from home, especially at restaurants, does suggest that maybe there's some wage pressure in that area still. Where does it all leave us? Well, the latest Fed funds vote is that we're probably back on for a rate increase, the terminal index going up a little bit after the release of the Fed numbers. And John, of course, when you look at the bank stocks this morning in the pre-market trading, they're all up. The other good news is egg prices fell 7%. So it looks like that crisis is over too.
That's the news you need to know. Mike, thanks for that. As always, Mike McKee there, breaking things down for you. Let's break this down. 2-year yield in America last Wednesday, north of 5%. Yesterday at the close, south of 4. This morning, up 31 basis points to 4.29. Now, Kathy, I'm sure you've had the conversation about what an inverted yield curve.
What did I tell you about the inflation coming down, huh? Yeah, you see those eggs? What's up, bitch? I brought down gas and egg. Come on, it made me a sunny side up now. Come on, what? Look at original bank. The banking system's fine right now. The original bank is off of that. Good morning. How you? I feel good about inflation. Good. Good morning, Chattadonia. Good morning. So, Chattadonia, there it is. I hope you're getting all the data here today. Surprisingly, not much, man. Again, I hope you guys understand the totality, that's what it is, totality of the data. There's a lot with it. Everybody's looking at factors, but broadly speaking, in the weirdest way possible, it's already looking like a non-event in the sense that this move is very small for CPI. We're holding it up, but we are getting way more moves here with the regional banks to start off. So it looks like 25 basis points. That's what we can get out of this. I mean, it's not like the data said we have to go lower. It's not like the data brought back 50 basis point, but yeah, the data definitely kept 25 basis points firmly on the table now coming into next week and Powell. So Chattadonia, I hope you're ready. We've gone through the news. We've gone through a lot already, but now it's your moment. I want to hear from you. You heard from the people on TV. I want to hear from Chattadonia. What's your first play of the day, baby? What do you got? Let's go, Chattadonia. Let me go. First play. Let's go. Keep it serious. FAS. FRC, KRE, 10%, puts out of the open, WAL, DPST, puts, SPY calls, QQQ, bank calls, Google calls, TLT calls, Google short, shorting phase, Tesla calls, ads, selling FRC, Tesla, Meta, puts all in, Tina long, SPY calls, SPY puts, Tesla calls, FAS, Riot calls, SPY puts, FRC, RTY on the long side, SPY calls, CRISPR calls, call, TQQ, phase, Apple puts, selling Mara, buying Meta, Riot calls, Tesla calls, WA long, Tesla put, long FRC, CPLI calls, exercise and SPNY puts, selling FRC, massive puts, short everything, no calls, Josh calls, ads still free, Tesla calls, FEC, SPY puts, long TLT, Google short, full port and coin calls, OPK, Beetle puts, SPY call, puts on high beta stocks, Roku long, KRE, call, Raul Rodriguez, Russell up 3%. Is crazy. Ad puts, SPY calls, long Tesla, silver calls, QQQ, VIX puts, SPY calls, puts on ads, Sherwin-Williams or Schwab calls, Qualcomm, OPK, Chad all the way bullish, I advise against Apple puts, broke, GameStop, get out, SPX calls, full port JPM, Hunt calls, Microsoft, MSTR, NEM puts, bar against cash value of life insurance to long, UNG calls, puts on TLT, Ginobili, love, SPY 395.34, why the hell so many puts? Breathe, I'm breathing. NVIDIA calls, Colt Real Estate on Wednesday, baby. KRE, AMD calls, SPY calls, Appledonian calls, full port pie, SPY, full port pie, holding calls, markets, and Bank of America calls. Let's go. Love it. We should see some real estate names in there, huh? No real estate names? Oh, wait. No, all my plays. Damn it, I had plays. Oh, man. Well, I'm going to be watching FRC, WAL, any of those banks there that we had. Where are my pre-market movers? Damn it, I was going to watch Amolex. Oh, I had a couple that I needed to watch. My whole list. I had a list written out this morning, and then they just disappeared it on me, bro. They just disappeared it on me. How they going to do me like that? Well, I'm going to be watching regional banks, even JP Morgan and Citi as well. There was Amolex. There was one more. Who was it? Bungie, BG, they got the number one, or they're on the what's it called? They're gonna be on the S&P to replace them, and I think that was it. And then GitLab's on the low, and the other ones, yeah. And then UAL for the downside, and then Uber and Lyft for any of that positive news, and then watch any of the bond plays as well. But even now after the CPI, I think the bonds might be chill. We're gonna find out. But TYD, TBT, TLT, IEF, all of those. KRE, FITB third. But Chattadonia, we have a lot of time left. We got about like 5-6 minutes here until we got to get into anything. So what do you got for me, Chad? Do you have any pressing questions? Is there anything we could talk about? Hopefully you watched the watch list. Again, we were saying how today was going to play out. And I think sure enough, the old CPI playbook is kind of out the window. And what I mean by that is that this doesn't really this is a very, very small CPI move. And then Meta, I think they're firing more people. I think that's why they're going up here. My morning poop, I'm not going to lie to you. I have not taken my morning poop. So this is a pre-CPI without a poop. I was not able to poop. I woke up like 10 minutes late. I woke up at 4:40 instead of 4:30. So I didn't have time to poop. I didn't really feel the need to poop, which is good. But I did have a lot of protein yesterday. So that is kind of odd. when you think about it. But yeah, it's good though. It's good for now. Are we waiting every 15 minutes? We could, but I don't even think you're even getting a 15-minute move. So you did start to go up from there. But as of now, I think we're going to have to wait till the open. And then Euro close will say a lot. Yes, firing people is good. I know it is strange for Main Street, but in the stock market, when it means saved money for the companies like it. I mean, at the end of the day, just don't forget, Powell wants you to lose your job so that he could stop raising rates. Yeah, Meta says restructuring cost of $3 to $5 billion. Hold on, Meta's coming out with something. They see Meta's saying 2023 expenses in the range of 86 to 92 billion. They said they're going to lay off 10,000 employees in the coming months. Oh wow. Whoa. I think that's another 10,000. But either way, they're saying restructuring costs $3 to $5 billion, and then they gave a number of their expected expenses here. So very bullish update for them. We got 5 more minutes. Any other questions about today? Again, Fed futures have not moved too much, and that's what we're waiting on. It seems like the data, if it did anything today, it kind of just solidified 25 basis points, got us away from 50, but then cooled down any fears that the Fed would actually have to pause. So kind of good. Holden Bank of America. I think this is the 3rd time they've cut jobs, yes. But this is the last time it had the reaction and it sold off. This one looks a little big. I don't know because I read 2 headlines. I read that they're firing 11,000 people, which was the initial one, but then I saw an additional 10,000. So I don't know. If they're firing another 10,000, I mean, that's going to be a very, very big effect on them. But if it's just a couple more people, I don't think it'll be too crazy. But I do think that that guidance number on spending is probably what's helping them out there. I think the NASDAQ can go up today. I mean, it is post-CPI, and usually CPI days are big. I just think the data could have been worse, and I think that's why we're up. But overall, inflation data did come in hot. What I'm worried about is this is kind of the same reaction that we had on non-farm payrolls, where you kind of had a small move, and then you kind of melted up. But then as the day started, just kind of whatever you worked your way up in pre-market, it turned into just selling off. The banks are running. Again, Meta is going crazy right now. CS had bad data today. They gave their delayed annual report, and they pretty much came out with a bunch of bad news. I think if you buy Zim now, you will get the dividend. I think you have a week or 2. All right. Anything else, Chattadonia? We got 7 minutes. We got 3 more minutes until we salute. But anything else? Final questions? Bring them in. I don't know if I have any pretty pictures to show you. I've actually already showed you them all. Again, this was your first time food actually came down. I think the best thing I want to show you guys is the dot plot. Here it is. Here's another one, even Credit Suisse. To give you an idea, Credit Suisse is down 97% from 2007. So that's another one. Make sure you like the video. But the number one thing here, and I don't think it's going to move much today, but we're going to find out here, but it's the dot plot. So this is what we brought up even on the watch list. We talked about this yesterday. It did move up a little bit, actually. So this did calm down. I think yesterday it was like right here. But this is where the data was going to move things, and now the data didn't come in too hot or too cold. Fed futures are still holding up. So I think that is going to be the real factor we got to be watching here today. And it does seem like things are getting off to a good start here so far, as long as this holds up. But we'll watch here at the open and the bell. We'll see what happens. Microsoft ripped. All the tech stocks ripped in a weird way. All of the rates going down. They did good. I mean, yesterday, a lot of defensives went up, and so did tech. It was really just the defensive names or the non-defensive names and then the bank stocks that really, really got sold off. Buy my first property this year. Thanks for getting me into real estate. Let's go, baby. Amen. Amen and good morning. That's what I'm talking about. So anything else? Anything else? Again, Credit Suisse, banks bouncing, Meta news right now. That's another one. What else is there? I think that's about it. Coinbase is up. Crypto is rallying. Again, a lot of regional banks like yesterday are up anywhere 20 to 40%. No bad news. No other bank has failed between last night and today. everyone still kind of likes the Fed, and then that's where we are right now. That's where we are right now. But, Chattadonia, let's just get into it. You know what time it is. I hope you're ready. I hope you're feeling blessed. But here at the Cult, before we do anything, before we try to chase a dollar, before we try to enrich ourselves, we must pay homage to a special group of people who have sacrificed more than most of us ever have and ever will, and that is the veterans of the United States of America, ladies and gentlemen. So on behalf of the Cult, the people here, the people not here, we want to give a huge special shout out all the active servicemen, past servicemen, anybody who has served this country. God bless you and thank you for doing what you have done. Even shout out to all the families out there who've made their sacrifice as well. I hope you all know you're appreciated, and I encourage you to show some love and appreciation to all of your veterans and servicemen out there, baby. God bless you and thank you. And shout out to all the public service out there, all the police officers, all the firefighters, all the doctors, all the nurses, all the teachers, all the janitors, all the trash men, everybody volunteering for the nonprofits, helping out at the Boys and Girls Club, helping out with grandma with the groceries, man, just being a light for their community. God bless you and thank you as well. And I hope you know you are appreciated as well too, baby. Keep it up. Let's go. That's what I'm talking about. But, ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Senators! Oh, it's game time, baby. Or nah. Let's go, Chad. Oh, good morning. Look at the Jets. They sent the Jets. Hey, man. Oh, wow. I just knocked off my pillow. I have a pillow on my chair. Oh, the Jets went too crazy there. Oh, man. Chattadonia, let's get it. Indeed, my friend. Let's get it. Let's get in. Thank you for your service, veterans. We love y'all. And God bless you if you liked the video. If you supported the channel, you came in here with a good vibe. I hope you know we love you too. And that's what I'm talking about. That's what I'm talking about, baby. So let's go. Let's have a fun day. Again, CPI already came in. The data is hot in many, many metrics, even though it came in line. However, the data was not enough to worry people to change rate hike odds too much. But watching the bond market and rate hikes today will be the key, ladies and gentlemen. So we'll see. And any news on a bank failure. You know, we haven't had that in a while. But we have about 2 minutes until the bell. 2 minutes until the bell. I hope you're feeling good. Hope you're feeling good. I'd watch the bell, too. I want to see the open. I think open will be key. Again, every single bank is ripping right now. I think the big banks, there was a report that they got a lot of deposits like JP Morgan, Chase, Bank of America, Wells Fargo. They apparently benefited off of all the money leaving. But we're going to see. Buying it open, I'm not too sure. I want to see where the market's at. And then you already have I think you're going to get a lot of back and forth there on the bank stocks. Maybe we should have bought Schwab yesterday. Bro, some of them are up 40%. Again, I think FRC is up 40% right now, which is crazy. But let's see if it lifts up the banks. That's going to lift up the Russell. And then everything else, if it could go up with it, that'll be nice. But let's find out. Good call on Apple, Adobe. I'm following Apple. It's my lean. Wall is up 400%. Less than 1 minute till the bell, Chattadonia. So get ready. Like the video. Poster plays. Call out anything. You need anything, let me know. Source that info. You have any questions, we'll try to answer them. And let's have a good day. Are you ready to have a good day, Chad? Let's have a good day. Yeah, Meta to cut 10. Is it another 10,000 jobs? If it is, that means Meta is firing over 20,000 people in the last 12 months. Yeah, they unveil new round of 10,000 job cuts. So Meta will probably keep running off of that. Because again, and then 190 is going to be a big level for them. And then post CPI. One of your smallest post CPI reactions for now. So 10 seconds. Get ready. I want to see the reaction. Yeah, I guess you're up 0.5. Round one. Fight. Alrighty. So real estate's number one on the day. Materials. You're up 1.3 on the SPY, almost 1% on the Dow. Let's see where the NASDAQ. NASDAQ is up 1.5. That one is good. News on Apple. No, I just think they've been leading. They're up 0.73. I think if anything's running the most right now, it's Meta. And I just see if Meta can make it towards 190. And then, yeah, maybe AMD and NVIDIA. AMD's up 3. NVIDIA's up 2.5. Jeez. First Republic Bank surges 61% at open as opens as a record route eases. Jeez. FRC's up 61% at the open. EU Energy Chief, they're making comments. Again, I'd watch for 190 there on Meta. We'll see Wells Fargo. Wells Fargo is up 6. Bank of America is up 4. JP 2. Goldman's even up 2 here also. Ford, Thessalonian. Tesla's up 2.5. I think Apple and Microsoft are the ones moving the least amount because they were the ones that were really, really running. And then NVIDIA and AMD are up 2%. The dollar is going up. I think that one's interesting, but it's barely moving. And then I don't know if the bonds have had any other movement. Bonds are down 0.5. SR3 not really working. Where's the market right now? Oh, shit, you're above 3,900? No, we still need to go. Wait. Am I tripping? Yeah, we still need to go to 3,940, though. So yesterday, you barely got above 3,900. So this is where we were looking for the upside. Again, 3,907 to 3,911. That should be a little bit more stubborn. But you have a lot of things working. You're already up 1.6 on the NASDAQ, 1.4 on the SPY, 0.9 on the Dow. Everything's green right now. So the worst on the day is consumer staples, and they're up 0.13, and energy is up 0.25, and then financials are leading at 2.7. Wall is halted. Western Alliance, they're up 52%. FRC, they're still trading. They're up 55%. Tesla's running into the high right now. RBA is on the high. SU. Suncor Energy. Coinbase, I hate you. The final melt up. We'll see. It's gonna this is the best day for the bank index since January 2021. You're gonna find out. Bonds keep dropping. What was the other? Wasn't there other earnings the other day? And then watch. Meta hit 189. So just see 190 is where it goes crazy. Bank of America. Bank of America looks weaker compared to all of them. I guess all of them are going down, but like Wells Fargo is up 6. Again, JP Morgan. JP Morgan's actually not doing that good. Amazon getting clapped. They did. They just got clapped right there. They're still up, but then Apple's coming up. They're making up a little bit of the difference. Coinbase is on the high. I'm getting squeezed on that shit. Yeah, bro. What the hell? That's almost $10 a share on Coinbase in one day. Scammers. Options not moving. Bonds keep dumping, which I guess is kind of good considering they've ran up here. So this should be normal for the most part. And that could be your pullback there on bonds for now. PacWest Bancorp halted for volatility after 64%. And then watch 190 here is approaching on Meta. They have the layoff news. Dead cat. I think it's just the banks. I mean, let's see by Euro close and where things are. And then again, I mean, the data was hot, but it wasn't the hottest. But this is what I'm worried about is if it plays out like non-farms, where we hold up here for a little bit. And then by the first hour, though, if we sell it off, I mean, 39.11 is one level. Even 3,900, I mean, we couldn't get above this yesterday. We dealt with this a lot over the last couple of weeks here. So let's see what happens. Yes, I'm still holding ACAM. I don't know what the news is, but I don't think it would change my view on the stock. Puts already up 10%. It's weird. All the big techs are moving. Apple, Tesla at the high. Again, even Meta now too, but we are coming down. This could be some of the banks losing that steam, but We'll see. And then bonds have been going straight down since the open. And the dollar's starting to climb up here finally. Yeah, Tesla's moving. Even Meta. So Meta's 30 cents off of 190. Yeah, I don't know what was up with Amazon. Citadel Griffin discloses 5% stake in Western Alliance. Citadel, Ken Griffin bought 5% of Western Alliance. Damn, he bought that dip. Oh, yeah, I forgot. Uber is up. Uber, Lyft, and even DoorDash. It's all on the Prop 22 stuff. Yeah, Uber is still up 6%, 7% right now. So I think that's a big part of even today, too. Banks dropping. They're probably giving up some of the steam. Meta above 190 now. Let's see. Yeah, those shares came back a ton. If Buffett bought banks, I probably wouldn't be surprised either. Dollar, watch it. Yeah, dollar is coming back up high. I think that one's interesting. Because the last couple, I think it's because of the bonds. Uber's on the high. Again, they're coming off a news. SPY had two red candles trying to work its way back up. But anything above 39.10, I mean, if we just get past today's high, just watch 39.17. And then if you could get above there, then really next test will be the 200-day moving average. Dump this. Yeah, Wall's halted. Again, I think that Ken Griffin taking a stake, I think, is going to get people hyped up on that. Wall is moving again. Uber, Roblo, Meta. I'm going to keep Meta up. Wall dumping. Oh, 44%. Again, FRC was up a lot. It sucks, though, because if these banks, there's a lot of individual names that are up, but the banks have been leading it. But if they kind of give up this dominance, I want to see what happens. But financials are still number one on the day, 2.6. But then Meta and Google Communications, 2.2. Materials, again, worst on the day right now is consumer staples. They're still up a quarter. And then the second to that is the worst. Second worst on the day today is healthcare at 0.71 in the green. Apple, there's Zim. Google's even up 2.5. I think even Snap went up. Jeez, no. And Airbnb's down. Again, Uber's at 7% right now, which is wild. Watch even DoorDash, Prop 22 news. Wall is on the low. So there's just news of a 5% stake taken by Ken Griffin. But all the banks are selling off right now. So it looks like we had this like pre-market bounce here, but it looks right at cash open. The banks have been just all coming down. Bank of America, Wells Fargo, they're still up considerably. Again, like Wells Fargo's still up 5%. I mean, JP Morgan is only up 0.6. Literally, JP Morgan has done better on the days that the banks are failing. Coinbase says some login issues for Coinbase.com. They're still holding up 11, getting squeezed on that. GitLab, they're on the high. They were down 30% off of sales numbers this morning, but they're moving up. Wall halted. Meta. Microsoft and bonds dumping. Microsoft did just have a wick there. Schwab is on the low. Lapla, JPM, Schwab again. Low ticker is all. There's like tech and random plays on the high, like Square's hitting a high, Uber's hitting a high, PayPal, MSTR, crypto's on the high. But then the low ticker is just all banks right now. Schwab is selling off again. Schwab is down 7, or it's up 7, but they were up 15, 20. So again, banks are giving up a lot of their pre-market gains here. Honestly, the banks don't look that good. I know this bounce seems like it's really big and you're like looking at all these names, but like some of these are still pretty shitty. Like you're at the Friday lows right now. Yeah, this isn't even, I don't know. So again, the story right now is a little bit of bank run and not the other bank run, but like banks are running, but they are still kind of at a danger zone. Again, JP Morgan's about to go red. Motherfucker won't go red when the whole index is down. But when it's all up, he's like, I'm going to go red today. Yeah, traders dump fintech and buy Microsoft amid SVB bailout or fallout. FRC halted, yeah. So all the banks are giving up early gains right now. Let's just see. Hopefully, if you don't want them to go red, and then you don't want them to take down the market, but even then, they're not even. I don't even think the banks have even rebound like that. I think the percentages feel good and they look good, but when you look at the 3-day chart, most banks are still at the lows of Friday, so they just went even lower the day before. That's the only difference I see. This is not what the Fed wants to see. Not really. It seems like 25, if anything, from today's data, unless anything happens in the meantime. So pretty much now, the only thing that could change in the next week is another bank goes bust. But besides that, it looks like today's CPI is kind of laying the cement for 25 basis points by next Wednesday. The next level for the SPY is going to be like 39.17. Actually, that's right here. So now 39.40. Well, technically, you got a small gap at 39.19. That would be filling this gap, but you already filled it. That's the close of Thursday. So this was the close of day one of SVB. So where we ended by the end of that bank sell-off was right here. But 39.40, I would say that's your 200-day and your 100-day moving average. Let me double check. It might have been altered in the last couple of days. This is big. These levels very big today, Habibi. I have a lot of levels for you. Look how many levels exist. It's a very big level day. You know, so many levels. So pretty much we're 318. Yeah, so 334 is the March 10th high, and then 39.40 is the 200-day. I would ignore this one, but I think you get around here, 3918, 3917. That could open up the door to 3940. If we break that, I think you'll be bullish the rest of the day. But if not, we're fucked. Again, because if it does that again, we might, I don't even know, we may not sell it off, but if we might either dancing queen or massive sell-off at the 200-day. But if it gets above it, I would feel extremely bullish. Yen is dumping, bonds down. Bonds been getting smacked all day, and the dollar is up, but I think today's part of the unwind. So, like, bonds, we're not reacting because bonds, I mean, again, don't forget, the bonds are still up a shit ton in the last couple of days. So we'll see. Let's just see the balance. I mean, they may catch up with the market eventually, but we'll go from there. The 200-day on the SPY is 39.40. Meta is hitting another high. So right now you're about 25 points away from the 200-day. And now you hit above the level. 39.17 is really, really big. That's where we started to die the other day. So let's see if this holds again. 39.10 to 39.07 to 3900. This is a very stubborn level. So it's like if you break or bounce from here, you could either gain or lose a lot of momentum. Yeah, Credit Suisse, they had a lot of problems they announced today. They delayed their annual report, then they came back and said that they had a lot of material like problems with their reporting. Yeah, Credit Suisse isn't doing too bad, but a lot of the banks have been giving up here in the morning. So if that could chill out, that'll be good. Ulta's on the high. FRC still halted. Wall is still halted. Schwab still coming down a little bit. You're closing your trading account. Good knowing you. I love you, man. I hope you never close your long-term. Can we still be long-term friends? You know what I'm saying? We can still be long-term friends. More red for banks. I know FRC's on the low again. PAC W. They're lucky. They just have gains. So now today, if they sell off 10%, they're just going to go back to break even. But just look at the multi-day chart. I'm surprised. Like Schwab is still below Thursday and Friday. So it's like it feels huge on the banks today, but it's really not that big. And then Zim is rocketing up again. Yeah, Meta. I think I'm back to break even on the Meta, which is crazy. But last time that happened, it sold off the next day, $10. So it's a hard one. You could be my long-term friend. Hell yeah, man. I got a lot of long-term friends. You never got to give up the long-term. Netflix dumped off the pre-market. Yeah, Netflix not too hot. I forgot NVIDIA. Bonds keep selling off big. But like we're saying, I mean, they're kind of having their recovery day with people cooling off. I see that's honestly, bonds seem like a reaction to the CPI. Gold, I still feel like I did yesterday. I mean, I think it just depends. I mean, now with the CPI data kind of not yelling and screaming that we're going to have a pause, I think the odds of gold drop a little bit, but I still just, with everything going on, the fact that the Fed futures, and the dot plot has already moved so much, I mean, I think it's a compelling play to keep your eye out. So you just need to, when to strike on gold. I think if you get your pause, you get your pivot, it's an easy play. But if Powell finds a way to, really kill time with this and stretch it out, I think gold will be kind of, it'll take some time there. Yeah, NVIDIA is going up. Another mattress ad. You guys got ads? That's good, man. That's good. It's humbling. We love you. Thank you for supporting the channel. That's good, man. They didn't want you to have our talk about bonds, I guess. Coming live from Vietnam trip. Oh, enjoy it. Enjoy you living life in Vietnam. WBD, we'll do everything we can to retain NBA rights. Google's on the high. Disney kind of working. So we're about to break out here again. So let's see where we go. Dude, Uber's up 8%. Solar Field. Everything is up. Again, every index is still green. Consumer staples are doing better. Real estate has given up early gains from the morning. So is healthcare. But again, not one thing is in the red right now. So even though the banks gave up a little bit in the morning, nothing stopped. So back to 39.17. New high on the day. That's it. You got a couple more points up here to go. You're going to have little mini baby resistances. 34 should be the only other one there. But realistically, between here and here, huge level. Huge level. You're going to find out if you retake the 200-day on CPI following a bank collapse. So get ready, Chattadonia. We will run all day. If we could break the 200-day, I feel bullish on it. However, if we I think there's a good chance we hug the 200-day and do nothing today. But at the same time, it's like if we break it, very bullish. If we don't, very bearish. But I would not be surprised to watch the market kind of do a dancing queen around the 200-day, meaning we go a little bit above it, maybe a little bit below it, maybe far below it, then bounce back up. You see what I'm saying? But we might hug the level unless it's just like a clear beat or miss. Big bun dump, yeah. Reshort. It's a back above the level, yeah. You had 2 days to make money on that short. Boeing's on the high. This guy Boeing, man, unstoppable. So banks, they're not fully dead yet. Some of them are kind of bouncing after giving up those earlier gains. Meta's given up after leading communicate. Meta's up 6%. You have one Fed speaker today at like 3 or 4, which I thought they had a blackout, but I think it's Waller. I'm not too sure. Bond volatility, you could go to Move Index, MOVE. And if you just look at the yields and how they move, that'll just tell you a lot. So it's right here, Move Index on TD Ameritrade. Oof. Is that real? Yeah, after yesterday's move? Or is that today? No, that's after yesterday's move. Bro, what the hell? This is the highest we've been, yeah. That's terrifying. So unless bond volatility chills out, the bonds are saying we're about to hit a new low. That's actually crazy. Bro, look at the move index after yesterday. Yeah. But still, that's saying we should probably be at a new low. Again, 10 years down a decent amount. Let me see. WAL halt again. Bro, even the spreads on bonds are crazy. 2's almost up 40 basis point. Yeah, they're giving it up after yesterday's move. So a lot of things dropping. You see Uber, bro, Uber just sold off 2% in a minute there. SPY's even coming down 39.19 to 39.11 or 39.21. That's 10 points in 4 minutes now. So first little mini sell-off you've seen in a minute. It's only been like 20 or 30 minutes, though, throughout the day. Fed futures for May and June. I think that's just getting ahead of ourselves. We got to deal with March. I think they're all, some of them are slight. Right now, it's still saying we go up. So right now, even May's pricing in a quarter. And then 5.25. Yeah, it's saying quarter points all the way up until June. So surprisingly, it's still holding, but I think those odds could change in the meantime. But there's still at least 2 more hikes that are priced in. $3M is on the low. What else is there? $3M. I wish MO dropped on any of this. They hate us. Uber's on the low now. Bro, Uber just flipped 2% in like 3 or 4 minutes. They're still up 6 off of the news, but that looked like kind of the bank stocks in the morning. Goldman's trying to fight. July, I think it's up. I think up until September is, I think, the peak on Feds, on the hikes. Let me check. I'll just get up the whole curve. No, it looks like June is the peak. So, again, the dot plot, that thing has been moving all over the place. Let me save this. But as of now, I mean, here's the whole entire curve. And this is what you got to look for. But pretty much, where is it? June. So you see that 4.96? Then it starts to go down from there. So pretty much the market's still pricing rate hikes till June. And then the June rate hike will be the final rate hike. And then we start going down. Which is, and again, I hope I can make it clear, all of this is changing every day. Because it used to be when we would look at this stuff, it wouldn't really, like, you know, you kind of had, it kind of had a more solid floor. But nowadays, in the last couple of days, with everything going on with SVB, you know, the Fed futures and what's being priced in, it has been extremely volatile. So, you know, one thing to mention here is that this could all change by tomorrow, or God knows where we go from here. But as of today, though, it looks like 4.9 by June is the peak rate that's being priced in by the futures. Meta dumping. Nvidia's holding them up, doing good. XOM on the high. Oxy 2. I feel like Amazon's probably one of the weaker ones. Microsoft and Apple still holding up. Apple's holding up very good, 1.2. I mean, Nasdaq's up 1.6, SPY's up 1.3, Dow's still 0.9, B&O on the high, DHI, and that was your literally all the little 10-point run. You pretty much ran up, 10, 20 points from the high. You're right in the middle between going back to the 3,900 and 10 points away from that or 10 points away from the high of the day. So rocking the stream. Thank you for rocking with me, baby. God bless you. Or not dumping, but the low ticker firing. It's a weird day. It's where it's like everything gapped up and then you're just selling off the open in some instances, but you're still up. Honestly, I think it's fucking with premiums too, even with the bonds and everything. It's like the bonds. Like you're still way up over the last couple of days, but then this little move, I mean, you're just unwinding a lot of quick pre-market moves. CPI print came in a little hotter. I mean, it seemed to be hot on multiple fronts. However, the CPI move wasn't anything drastic enough to really change Fed futures. If anything, all the CPI did, it didn't come in too hot, not too cold, or pretty much it was hot, but it came in line with expectations, but it is cementing 25 basis points. It wasn't a report where we got worried about anything else. It kind of was an easy conclusion to get from it. The only bad conclusion is that it just elevated. CPI is still high, but as of today, the data wasn't enough to confuse people on 50 or 25, and it seems like 25 is the base case now following this report. All right, another red candle. It's trying to fight. UAL even trying to recover. Apple's going down. Again, Uber, they're selling off. DoorDash. Meta's still holding. Google's still holding, and they're near the highs. Myrna's on the high, too. Actually, Myrna's kind of running. HLX, Pop. What is this? Helix Energy. It's up 4.7, popping there at the high. Bank of America, new low. Yes, they hit Bank of America. Again, Myrna one more time. Okay, little pop now. No in position for SPY 4,300. Yeah, that's a big level. I mean, that's where before everything went bad, that's where the bulls were really going to take control of. But 4,300 is pretty far from here. So we'll see. But at this point, I mean, it's either going to be updates on the banks or not. But, like, that's the only thing I think is going to move us now. You know, this is all going to be about the banking situation and momentum all the way up until next Wednesday when we have Powell, and then that's it. Treasury yields extend climb as stocks rebound led by banks. Academy Sports rises at new buy at Jefferies amid EBITDA growth. And then Boeing, Saudi 787 orders clear path for higher production. AMD and NVIDIA, they're running up here. They're actually hitting highs. Chip makers have been on fire. And Apple, too. Even Meta's trying to work its way back up here. XOM is on the high. A couple of oil plays as well. MPC, Chevron, they're all moving up right here. So now we're moving back near the high. You were right at the midpoint of the day. Back to 39.15. Google on the high. And then AM Diesel. Again, watch what the bonds do. Where's the dollar? Dollar's up 0.3. Kind of calm here, though. Oil inventories. I don't see them. CME says highest daily volume on record on Monday. That's crazy. Monday was a record for CME transactions. EU financials bounced. AMD I like. I think it's a little expensive because it was really cheap back in the day, but it's a good company, and you know them. SVB exposes lazy ESG funds as hundreds bought into the doomed bank. Let's go on China. China is reopening. They should be doing good, but ever since we kind of started stutter stepping here with the economy, and then now this bank stuff, people kind of chilled out. But we'll see. Remember, this theme of the beginning of the year was emerging markets in other places. Southwest Airlines sees post-meltdown changes done by October. Coming down there, so you had that little candle work you up, but you're getting a pretty decent-sized red candle here. Mazanian. Oh, but Apple's working his way up. Eli Lilly's on the high. Oh, where's Illumina? That was the Carl Icahn move from yesterday. Merck is on the high as well, too. Still haven't touched VWAP. VWAP looks low. VWAP looks like really choppy and ugly. Again, all day looks pretty ugly, man. We've just done nothing. Like, if you think about it, this was the CPI, very small reaction, and then you've just been doing this weird melt up as the banks have gapped up and are, like, giving up their gains, trying not to give up their gains. It's very, very odd. Market tanks, people would run the TLT in bonds. Yes, and that's kind of exactly what you saw happen over the last couple days. Even as people got feared over the banks, they instantly went straight to the bonds. How many hours of sleep? I go to bed at like 10. I think I went to bed at 10 yesterday. And that's good. What did I want? Oh, Bill. How's Bill doing today? Is Bill doing good? Bill's doing great. Bill is doing great. We're the same person. Amen. Amen. God bless you. I'm down with that. Chipotle recession proof. Pull Z rug. I was just slow today. This is a CPI day. I don't know if you guys realize how crazy this is. On any other CPI day, we would be running up like 20 points every minute. You'd be doing 10 points up, 20 points down, 20 points up, 40 points down, then 30 points up, and then a squeeze. Like, this is so chill for a CPI day. I know, it does not seem. It just, again, that's word to all the headwinds. The Silicon Valley issue is kind of solved, but not really. I mean, this is the nature of bad news and a lot of other things, but we're now day number 3 or 4, and we're kind of, pretty much nothing got worse. In a weird way, no news is good news, but technically we still don't know who bought the bank's assets. We don't know how the government system is going to work, if who's going to need it, how much they're going to borrow against it, and then we don't even know what Powell or anybody else is going to do. So we're kind of in a weird middle, but as of now, you just didn't hear anything, and today was kind of the first big bounce day for the banks, even though they are kind of a little bit weaker here as we open. Yeah, it's just kind of waiting for the contagion and everybody waiting to see if it spreads. Jason, right, baby. Good morning and welcome, my friend. And Apple's near the high. Spy's trying to hang on here. Google's going up. Meta's kind of chilling out here. Again, NVIDIA 3.8. AMD is up 5. Yeah. FIS on the high. Oh, Disney at 39. Fidelity National. You got it at 108. $5 cheaper. Kaboom. RTX. Raytheon. Check defensives. Actually, Raytheon kind of looks like it's doing its own thing. Yeah, popping up in the high right now. Will they be bankrupt and disappear or stay in business? They're probably going to go bankrupt. They'll probably disappear. If they do keep the name, it's because somebody wants it. I mean, people are going to definitely... It's more likely the business will keep operating under a different name and a new owner. So someone is just going to absorb the loan book, all the assets, and then we'll see what they want to call it. Or, again, some people might want to keep the name. Yeah, RTX is popping. I don't have any news on that one. Nike options imply 8.9% move for earnings. Does Nike have earnings? I don't see RTX news. But wait, Nike has earnings, Habibi. Shadadoni, Nikes. Shadadoni, nobody tell me about Nikes. How come nobody says nothing about Nikes? Huh? Shad, you have a Nikes. Oh, I think you have a Nikes. March 21st for Nikes? No. Yes, March 21st. Nikes earnings next week. Wow, you have a Nikes. Nobody told me about the Nikes. Everybody tell me a Silicon Valley. Everybody telling me a Signature Bank. They telling me the Jerome Powell. Nobody telling me about the Nikes. Everybody need a good pair of Nikes. A good pair, a good earnings of a Nikes. Very, 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 very special, important. Nobody said the Nikes. I had no idea of Nikes. Now I know. Now I know the Nikes on the 21. Very good Nikes. Like, 21, can you do a Nikes for me? I do it. It's very good. Talk to the Nikes for me. It's good. You hate Nikes? Oh, my gosh. Habibi, what's wrong with you? Why? You hate America? You don't like Nikes? How do you take out the trash, Habibi? You use a Nikes. You go to the door, you slip on the Nikes, comfortable, performance. How about the Michael Jordan? No Nike, what do you think of Michael Jordan? He wear Nikes. He is a Nikes. Oh my gosh. Oh my gosh. You could wear a Kyrie? No, Nikes. I don't know يا باشا. ازيك حبيبي اشكرك. انا بحبك قوي. You sound like you wear Adidas. I don't wear Adidas. Ever since a specific event involving New Balance or bust. Crocs, I've never wore Crocs. But my girlfriend keep getting the idea that we should get matching ones. And I feel really bad. Because I'm like, you got the wrong one, lady. Sorry. Biden transportation chief pushes new crackdown on mergers. Oh, man, you just hit a new high, then gave it up. So new high on that candle. It sucks because anytime we hit a new high, if you do sell off, those sell-offs are pretty decently sized. So for the bulls' sake, I hope they just hold this one up. I hate hitting high and selling off. Is just not pretty. I hate it. I hate it. You and your girlfriend got matching blue Crocs. They're actually comfortable. It's okay. That's what we tell ourselves. I think that's what everybody tells themselves after they buy Crocs. They're like, but they're really comfortable. They better be comfortable. They better be. Yeah, Baba and JD are on the high, but bank stocks are getting crushed right now. They're still up a lot. That's why I hate to use the term crushed, but they are just selling off. They have been selling off since that opening candle. It's like, again, if you just go look at the dailies of the banks, I just do not think they are. I don't think they look that good. I don't think they look that good. Bearish. Nike sell 125 March 21st. Maybe wait a little till the earnings, till next week, but I think our earnings play. We played Nike last time. It was good. All right. Another new high, then sell off. WAL is on the low now. Uber and Lyft, those are giving up. Again, they were up a lot more earlier. Lyft is still 6%. 3M now, they're flushing through the low. Goldman coming back to the low. Again, the banks are still lower than Friday, which is amazing. Watch NVIDIA and AMD, if those give up. Costco's on the high. Shout out to Costco sweater. Meta is about to give up the last hour of gains practically. Have we put in an hour yet? Almost. We're about 20 minutes shy of an hour, and then another hour 20 for Euro close, or maybe 2 hours. So back to 39.10. This is the level you sold off to from the last high. You actually went a little lower. So let's see if that could stair step up from here. That'll be good. But if that breaks, that could be our first VWAP test. Cat calling your put? What does that mean? What? Is that like... I can't whistle that good. What you just... What? I feel my portfolio is self-conscious now. The spade is agonizing indeed. Baba's going up all of a sudden. Baba's actually really ripping. So as we started to drop there, China names are coming up. Zim is just tweaking post earnings and then high dividend yield. And it actually looks like it hasn't had volume in a minute. Zim already just trades wild. A couple things. Apple's still relatively stable, but market is coming down. Maybe energy gave up. That was helping lead the last like 20 minutes. Help understand the rally. I mean, I would say just today is the fact that the data wasn't hot or cold enough to really move the Fed futures. So what happened is that, yes, the inflation data is still hot, but it came in line. Nothing was too crazy, but it didn't muddy the waters with the current situation. And essentially, today's data just kind of solidified that we're going to do 25 basis points, assuming nothing breaks between now and next Wednesday. So that's all I would get out of it, but that's why you could see people up, and there's a couple things going on. It's like those days where, I was just telling people, leading into it, you just got to pay attention with how things have moved, because just even on the short term, we've sold off a ton. We have been selling off for weeks at a time. So, I mean, any little relief with some data could make some sense, but for now, it just like the only update as of today is that the odds of a rate pause have lowered. But also, like, we know the Fed is probably going to do something more stable with 25 than not, or at least that's what the data is pointing to for today. $30 million SPY volume. Yeah, you're reading it right. 30 million every day. I'm telling you, every day since the banks. I mean, my theory is the banks are unloading a lot of shares, and I think there's a lot of people unloading bank stocks. There's a lot of bank stocks that own other stocks and doing all of that. So I just think the volume and the amount of movement here is very, 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 very large, as everybody is, again, financial instability. Everybody is kind of on edge with everything, and it's causing a lot of movements, a lot of money out in one area, a lot of money into the next, a lot of defensives, rotations, all of that. Everyone is getting out, but there's also people getting in. I mean, that's what even this morning shows. I mean, bro, you have Ken Griffin buying 5% of the banks. You have what's his name? Who are they? Apollo and the other one, the guys who buy everything. Like, dude, people are swarming right now. Again, if you could get a 50 to 70% discount in a day, even if there's risk, I mean, there is a lot of people willing to buy it. So I think a lot of money's moving. And then I also think a lot of banks are probably repositioning their portfolios to prevent any other future risk. That's why I think we're seeing such high stock volume and some names being sold, some being bought, but I think people are moving some shit around. Spy calls negative. No, that's just the market. It's been a slow move too. If you even compare the pace of this move compared to the last couple of days, like this is so slow. And then look at intraday. Intraday, you're barely moving. This is your first hour of the day compared to the first hour yesterday. You move 381 to 386. Today you move 390 to 391 and a half. So yesterday you were moving 5 points in an hour. Today you've moved 1.5 points while still holding up here, and then the banks all tweaking out between gains and selling off. Volume's around 30 million right now. So volume is super high. It's definitely slower than the last couple of days, but on a normal day, I mean 30 million in your first hour. Actually, we haven't even hit an hour. You're at 45 minutes, but that's a lot. Check rate hike odds. Loading. Yeah, they're chilling. It's pretty much like 80% chance. Everyone seems pretty solid on 25. I feel much more comfortable with 25. Like I told you yesterday, it was possible that we could have had it a little lower. So remind me, since you guys are getting an ad, I'm going to go to pee. Let me go to the bathroom. So I'll be right back. Follow me on Instagram at The Trading Fraternity. And we'll talk about 25 basis points.
Veneer, which one do you think is going to win out in the long run?
I think they're going to have to pivot towards maintaining financial stability. I think it's a long time coming, and I think what you just saw the last few days is things breaking like they always do in the cycle of yield curve inversion and excessively quick tightening.
But haven't they, though, fixed the problem? We now have the tools necessary needed to deal with the financial instability that we're seeing right now. I appreciate that the Fed might want to be a little bit more cautious, but nevertheless, if the Fed reacts to what just happened, isn't it fighting the last battle?
Yes and no. Yeah, the yield curve inversion does very perverse thing. This was the note that I just put out a couple of days ago. When the yield curve is this inverted, got it 90 basis points a few days ago, the financial system doesn't work. And whatever the Fed can do, I mean, they're very little in the context of trillions of dollars of outstanding securities that cannot be financed, both in the U.S. and overseas. So I think, yes, they can try to do things. They can maybe try to fix things here and there like they just did with one bank. But the unrealized losses are very, very large, some of the other banks. I don't think you've seen the end of it yet.
So, Veneer, how does that then play out? So, like, next week, does the Fed go 25, but, like, they're watching stuff carefully? Or when do things break again?
Yes, I think the yield curve is, or the volatility of the yield curve, right? I mean, 2 years moved 60 basis points yesterday. They are like 40 basis points the other way. Today, the market doesn't know. Market's basically responding to the Fed saying they're data dependent. So I don't know what they do. I think there's a good likelihood they might not actually do 25. If coming into Friday, we see this cycle restart again, maybe there's a couple of other skeletons in the closet. So I don't really know. I think for them to not do 25 right now would be construed as them pivoting. So they're going to want to do 25, but if they do 25...
Yeah, everyone's still confused. So I still think 25. Now I think 25. Again, yesterday I was saying a pause was definitely possible. I think today kind of solidifies 25, but like we said, anything could change in the meantime, and everybody is still worried. And, yeah, Friday is the 17th, and then that's where everything go crazy. Everything go crazy after the Ides of March. But like I was talking about yesterday, again, I thought 25 was possible, more possible than not. But now I think as long as nothing gets bad, I think we're going to be doing this 25. And that is enough to keep the Fed on track, not be so reactive. And then as long as the market doesn't get any worse till then, I don't think Powell will have to change that. But now I think 50 is totally off of the table. So all of the Powell comments and everyone freaking out 2 weeks ago, I mean, it's truly been fascinating to see what the dot plot has done. I don't know if y'all realize it, but, you know, for the Fed futures to go and do what they've already done, I mean, this has been amazing. Like I've been telling, I used to show you this, and this wouldn't change for weeks at a time. It would move little by little, but in the last 2 to 3 weeks, we went from pricing in no rate cuts at all this year to now we're pricing in a rate cut this year already, and this is all within a week. Very volatile situation, and that's what we were talking about yesterday. I hope you guys can recognize it here too. Even anytime we put on the TV, I read you some of the comments in the morning, but I mean, just quite simply, it's just nobody knows. There's no consensus right now on Wall Street. Everybody is kind of there in the middle. We got a Meta reaction. So Meta's $3 billion OPEX reduction is likely to target R&D. Meta's $3 billion reduction in operating expenses for 2023 at the midpoint of the range is likely aimed at aligning expenses to top-line growth. We believe a major focus of the second layoffs, about 10,000 jobs, will be in R&D, where expense grew 43% last year due to hiring and tech development for Reality Labs. One of the main drivers of margin compression, subsidies to its VR headsets and Apple privacy changes in iOS are other headwinds for the near-term operating margin. That's for Facebookian. My first IG real target, SVB and rates way outside my comfort zone. Let's go, baby. Email me. I want to take a look. I'm excited, man. I'm excited. That sounds dope. It sounds dope. If Powell sticks to that, we continue until jobs are finished. He won't do 50 basis points. If the market's not pricing it in, I don't think he's, after all of this, for us to go 50, then 25, and then this and that, I don't think Powell's going to come in and shock with 50 if the Fed futures aren't pricing it in. And the NVIDIA short squeeze. The NVIDIA is insane. Again, even AMD is up 6%. SPY's coming up here. I think as of now, the bank run killed 50 basis point narrative. It's still kept alive 25 basis points, but, we're very close to abandoning that. So like I'm saying, as of today, I think 25 basis points. Yesterday, a pause was on the table. I don't think so anymore. However, between now and the Fed meeting, that could easily change. So just be fluid is what I could say with all of that. So there it is. That's a decent size pop. 39.23. All right, Chad. So like 39.33 to 39.40. Those are your next levels. And then 39.40, that is the 200-day moving average. Hate to be tinfoily, but did they do this on purpose to kill the 50 basis point narrative? No way. This was just too big. I don't think anybody would threaten a real bank run and, the devastation of financial stability in banks just to, all you have to do is have Powell say no 50. You know what I'm saying? Like they could have picked the easier way, but I just think it was kind of a risk that came out of nowhere. It was truly a black swan. I mean, it's still existing, and it goes hand in hand with what has been happening in the sense that the Fed has been raising rates and we haven't seen anything break, and finally we did, and that is kind of just, that's why I think it goes hand in hand. The VIX is back to 22, which is crazy, considering it was at 34 yesterday or 30. Still pretty high, though, and then the bonds are doing their thing. Dollar calmed down here a little bit as well. Do I think today's move is justified? Yeah. I don't think today's move is big. I mean, that's it. I think even the bank stocks, they're having such a fat rally, and they're all still below Friday's level. So right now, I think all of the stocks that benefited from low rates yesterday and kind of benefited off of the rates dropping and then the defensives, those names are up from Thursday, Friday, but then the bank stocks are still low. But right now, we're at Thursday's close. So I do think this is after a couple of days and then a couple of weeks of selling off. I think we're just kind of chilling here until we get the big expiration and then everything else. But although I could justify today's move, I don't know if it's going to last. I mean, that's what I'm even saying with the Fed rate hike odds, is that every single thing can change. We don't know what announcement is going to come out tomorrow. We don't know if a bank is going to do good or if another one's going to fail. MU, SPXL. FRC. Yeah, FRC is just weird because it's up 50% today, but then you look at it, like I'm saying, you're below Friday. You're below Thursday by a lot, but it's just crazy the ranges and how much it's moved. So I think we're still in a weird digestion phase, and just today didn't exasperate any moves. That's all. But welcome to shitty CPI. This is the first time CPI has even created like such a small reaction. Let me see. I guess it's not that bad. How come it feels so small? It is pretty small, but you're definitely on one of the smaller ends of CPI. So this is you today after the first hour. Average result is like 0.02, so you're doing a little bit better. That's from the release. But like even like on like the 6-hour time frame, we're like right here right now. So this is like this is an average response in the last like 12 or whatever. So you're just like, you're working up, but it just seems very, very calm comparative to what we've seen here in the last couple of days. Advanced decline line is flat. I don't even know how many names are up. Let's see. You have 460 names green on the S&P right now. And then only 32 names are down. And then I think everything else is still in the green right now. Yeah. Well, worst on the day is consumer staples, and they're up 0.42. Funny they exclude food and gas from CPI. Yes, but one thing that was bad about today, so even though they exclude all of that shit, there's something called super core. It's really fun to say. But super core is excluding everything, even like rent and shit, but it went up. So the last 3 months, super core has been going up. So even the things they try to exclude, if you look at the 3-month trend after today, all of them have been going up, even real estate again, and that was 70% of today's CPI. So it's getting to the point with inflation, it doesn't even matter what the hell you exclude. We're watching it all across the board still. Yeah, NVIDIA and AMD, they're all insane. NVIDIA 5, AMD 6.5. Coinbase chilled out a little bit. They may move up. Tesla's at the high. Tesla's up 4. Amazon's moving up. Apple, all the big tech's still working. Again, everything is green. I didn't get any calls today. No, just waiting. I'll take something if I can find it, but I'm not really I thought today would have gave us a little bit more, but it was very calm. And then the bonds are chilling out. The only good news we've had is 20. Yes, that's it. That's all today. That's all you got out of today, is that today calmed down the pivot rumors. Secured 25. We no longer deal with 50. That was freaking us out last week. But then now we don't know what's going to happen with the banks. The banks are still up in the air. I thought you traded options. I stopped. Well, I know how to speak stocks. Usually when someone says you got a call, I'm assuming, did I make a play? But I did buy 2 options. I bought a UUP on Friday, and then I grabbed EUFN yesterday. Supercore matter enough to smash banks? It doesn't really matter. I think they're unrelated because the banking issue is all about financial stability, whereas inflation and CPI is related to price stability. And this is the little debate we had yesterday, because this is important, because the Fed's mandate is price stability. This is what everybody's arguing about between yesterday and today. Is the Fed going to prioritize financial stability above price stability? AKA, are they going to react and be more reactive to what's going on with the banks, or are they going to be more reactive towards what is going on with inflation? So now that the inflation, it wasn't the worst, it wasn't the best, it could have been worse. Now people are starting to feel a little bit better about how the Fed will respond to financial stability, because inflation didn't move enough to cause, to really tilt the pendulum on that one and kind of make the Fed go back and forth to, oh, we need to do inflation, we need to do this, we need to do that. But the problem is, between now and Friday, and I said this on yesterday's video too, is just watch out by Friday, because even though yesterday was kind of calm with the banks, today's even more calm. I wouldn't be surprised to hear an update by the end of the week, and then we kind of just see where we're at with everything. 70 handle bounce. So we'll see. I mean, you're about 7 points away now from a baby level, and then just under about 8 points away from the 200-day moving average. So this is what I said last time we were here. Remember that one day when we made a move and I was like, all right, it's either going to flip or rip from here? Same exact logic here. If we get above it, very bullish. If we can't, then I think we're going to have a problem here, and we're just slowly climbing all day. It's been like that since the morning. Again, comparing yesterday morning to this morning, your range in your first hour is tiny comparatively. So we're moving very, very slow. NASDAQ 100 gains 2%. Session highs, S&P rises 1.8. We have to pass 39.40. So if you sell off before then and don't get back up to it, you're dead. But then at 39.40, we're going to watch really what it does. This confirms the Fed is truly ran by Tom Brady. Nah, this one, we'll find out, because we still need to hear Powell talk. That's what I'm saying. That's where it gets crazy. Powell is going to be next Wednesday. That's the next meeting, FOMC. And then we'll see what Powell is actually going to do. Today's CPI would have solidified 50. If it wasn't for the banks, no, I don't think it would have. That's why I think today was a good one. It just came in line. I think it's hot. I think the last 3-4 months of inflation have all gone back up, even after looking at used car prices today. I think next inflation is going to skyrocket because the used car prices are lagging so heavily. But I think that report, let's say the banks never happen, it wouldn't have been hot enough to guarantee 50. I would have said it would have actually thrown us into more of limbo. But we were pricing in 50 as a guarantee, though, so it's kind of hard to say. But at the end of the day, that's just all speculation. And now we're never going to know. We just have to deal with this and then see what happens and then see what the banks do, too. It's kind of bittersweet. Powell does not speak today. There's only one other Fed speaker. Baba just got a bunch of volume. I don't know if that was real. SPY working its way up here now. 3928. So, Chad, you're making the climb. These are levels from close of Thursday, high of Friday before the Friday sell-off. That was day 2 of the bank run. Ay, ay, ay. Turkey's on the low. Why is Turkey selling off? Yeah, Credit Suisse, they had a very bad annual report. They pretty much said that a lot of their financial accounting things were fucked up. Mm. Where were we before SVB happened? That's Monday. That's fire. You were right here. You were at 399. So you're at 4,000. You were up a lot. You were up a solid 100 points on the SPX, I would argue. Almost about 80 points. And then the day before, you were much higher. But then that was, you got to realize, before SVB, we were pricing in 50 basis points. I'm telling you, it's wacky. Everybody just got like, it's like kind of like, you know, when like at one point how Republicans and Democrats used to be the opposite. Like, you know how people say that and they're like, well, actually Democrats were really Republicans and Republicans are really Democrats. And then they like the names got shifted at some point in history. Now, have you ever heard that? That's kind of what happened here in the market over the last couple of days. Everybody just got shifted. Everybody, the same thing that was making you bearish. You were like, okay, 50 basis points is bearish. And now you got people saying, well, no, now nothing is bearish. And then it's like, it's just like, it's a weird flip-flop. And now everybody just got tossed up. And that's why I'm saying it's just like you don't even have consensus. But, you know, we were a lot higher before SVB, but the whole way to view the market was completely different. So before SVB, we were looking at 50 basis points, and we were saying inflation is running back hot, and then the economy is really strong. We have no issues. Inflation is going to rocket up. We need to do 50 basis points. Powell is going to do this, and then this isn't going to be good. We're not going to have any rate cuts for the rest of the year. And then within 24 hours, 48 hours, all of that went out the window, and now it went from, oh, man, the economy is actually bad. We're seeing a risk. If Powell raises more, what is it going to do to the banks and financial conditions? Now financial conditions are actually tightening on their own, and now we're saying that, well, maybe we should cut rates, and then we're probably going to see a pause here by this year. So that's a huge flip-flop, not to mention how the Fed speakers leading into it, Jerome Powell, Bostic, all that fuckery, factored into it, because now everything they said doesn't even matter because everybody has now switched sides, and then everybody's kind of in this weird confusing state of, well, it's 50 good, bad, 25 good, bad, no hikes, and then what about the data? But does the data even matter if financial stability is not even stable? So welcome. What will the next rate hike be given the new data? What do you mean? Oh, today it's probably going to be a quarter. That's what we got out of today's CPI. But unless anything changes, I say that to you today. Again, yesterday I was feeling a pivot was possible after today. I believe 25 now, but if anything changes with the banks or any updates or God knows what happens, I'm very liable to change that answer. So as of now, it looks like today kind of reassured us with a quarter basis point, but I don't know how sticky that's going to be. Is price stability related to financial stability? Great question, because that's what I was thinking about and talking about this. Like we said, the Fed has a mandate to protect price stability, not financial stability, but a lot of times they'll argue and they'll say, well, financial stability factors into price stability, so we got to take care of financial stability. So they are related. They are two different things. Again, price stability is more or less prices. You know, when you go to the gas station, when you go to buy food, when you want to go buy certain things, when businesses and consumers want to make purchases, price stability means that you know what something is going to be worth. You know what you can get, and you're not dealing with a bunch of variables and prices moving back and forth. It's able to spur economic activity in business. Financial stability is functioning smooth markets, right? It's the price of assets, not necessarily the goods. So, but then again, financial stability could lead into getting money, funding, and just overall business and investment versus actual consumer transactions and whatnot. So, those are the differences. Yeah, 25 seems very reasonable now, because 25 still means a rate hike, still means Powell doesn't have to pivot or change anything, while at the same time it's still kind of lightening the load while dealing with a banking crisis. But then that just depends by Friday or next Wednesday, as long as no other bank goes bust. That's it. Like, realistically, I think we do 25 as long as another, between now and Tuesday, Wednesday, as long as another bank doesn't go bust, we should be 25, and Powell should stick to that. Fintechs and mortgage insurers rise on the rally in bank stocks. Fintech companies and mortgage insurers rise on Tuesday alongside the rally in regional banks. Stocks have fallen in recent days led by the slump, but have since rallied as analysts have said that the sector's exposure to recent bank failures is limited. Would the risk of other banks going down across the world affect our markets? It would, and that's pretty much what you've been dealing with in the last 3 days. You know, you had banks go down, but it wasn't like we were just all shitting our bricks because of SVB. It was because we were worried about, what if this hits another bank in the U.S.? What if this spreads? Again, that fear of contagion, and then the Fed and governments trying very hard to stop the contagion in its tracks. Meta, I mean, even the SPY, everything's slow. 39.28, you're 1 point off of hitting a new high. So let's see if it does that, set a new high, sell off 10 points, or if it actually keeps squeezing. Protect the rich. I mean, do you want me to make you mad? I could make you, like, way more pissed. Like, I know I'm speaking to some of my people out there who I know y'all care about certain things. So don't get too mad at me. Like the video. But just to give you a little bit insight into the ass backwardness of society, just think, within 24 hours, we did more for a bank of rich people than anything with the Ohio train derailment. What? Oh, man. Okay, don't hurt me. I'm sorry. I know. I didn't mean to make you mad. I'm sorry. I'm just saying. I thought that was kind of funny, but it's not funny. It's kind of sad. I'm like, why did we rushed in so fast. I know that hurts. I know. I said I didn't, and I'm saying, I know someone, don't get too riled up, but yeah. I didn't even think about that. When you saw how fast they had, man, it wasn't even Friday morning. They had everybody at the Fed already at the bank. They had the FDIC. They were shutting shit down. They were ready to go. The government got a statement. Joe Biden going to visit Silicon Valley next. Yeah, what's up? What the fuck is up? Where's Nancy at? Come on, we had to do something. I'll tell you, the banks are fine. We have financial stability. It's fine out there. Don't worry about it. And that's what we're gonna do. We're gonna clean it up, the mess here in the banks, and then maybe we'll get to Ohio. Maybe. Okay, I'm sorry. I gotta go. What I'm trying to tell you is that even though environment is the most important thing, we cared more about financial contagion spreading than a plume of smoke over half of the U.S. So I don't know. Greta, where you at, Greta? And the irony is that SVB was actually labeled one of the higher ESG companies. So that was another article today that came out, is that a lot of ESG funds got rolled just because they had big amounts in SVB because they bought it due to its ESG score, believe it or not. So the irony. Stop spewing zero hedge. I was close to it. I think if I had an ad about gold and then something on January 6th, I'd be there. But I think I towed the line pretty well for now. On that note, I'm going to like the video. Amen. U.S. rates pricing is wrong unless we're in a crisis. Ooh, this one looks good. I'd love to share this with you. This one's actually crazy. Ooh, this is a big one. I need likes for this, Chad. Y'all are doing great on the likes. If you could take this moment to like the video, you could support your local YouTuber by doing that right now. You can make sure an Egyptian who wasn't born in Egypt but has Egyptian heritage could smile today. For just one like a day, you could bring a smile to a little Egyptian boy in southern San Diego, California. And by doing so, you will be provided a massive amount of information that will help you navigate financial markets. Do it today. Act now. If you like it more than 10 times, you may be eligible for a license plate holder. Thank you for doing your service, and thank you for supporting your little Egyptian boys all over the world. Thank you. U.S. rates pricing is wrong unless we're in a crisis. So it's ridiculous to forecast 2023 rate cuts in the U.S. unless you simultaneously have high conviction in a looming major financial crisis. It's not outrageous to argue that such a condition could be satisfied, but it's an extremely bold call because the evidence is tenuous at best. Yes, I'm aware we've just had the second largest bank failure in U.S. history, and that it wasn't the only large lender to fail in recent days, but I've also seen an impressive weakened policy response, making all directly affected depositors whole and then effectively guaranteeing the deposits of all other U.S. banks. A systemic banking crisis is now far less likely than it was just 1 week ago before SVB was even on our collective radar. Sure, not everything is hunky-dunky dory okay, with unsecured creditors suffering the cost of capital will rise. The entrepreneurial sector has had a scare that will linger and hurt growth, and the emergency lending facility won't make small bank runs completely immune from sustained bank runs, but this wasn't the opening scene of a systemic financial crisis. Trust me, I know, as I'm one of the looks firsthand. I was trading for Lehman Brothers in September 2008. Importantly, the major banks, those that are actually classified as systemically important, are not at risk, as they have tougher stress tests and regulatory requirements around deposits. And for those trying to bring the banking crisis to Atlantic, note European and UK banks are less vulnerable for similar reasons. So there's no obvious significant crisis on the horizon. Some will suggest that my condition for it to be a major crisis is too strict, but they had it in their heads that the Fed would only hike until something breaks, and now something has broken. That is a nice turn of phrase, but it doesn't mean it was a policy rule with solid foundation in reality. It may have been closer to the truth in most of the hiking cycles, but that's because none of those did we face the scale of inflation that we do today. Others will point to the bank failures as the best example of the lagging impact of rate hikes is finally being felt. I should say I hope it is. We saw 450 basis points in less than a year. But there's some weird idea that the Fed wouldn't dare tighten sufficiently to cause a recession. There's no logic to that belief. It both contradicts the Fed's explicit mandate and constant rhetoric of its members. Of course, they hope they can minimize economic damage in their battle against inflation, but it's a latter issue which is stated in a mandated focus, not avoiding a recession, far from being a mistake to initiate recession through its hikes. Economic history and theory agree that a severe curbing of aggregate demand, i.e. recession, is indeed necessary to bring down severe inflation. New high on the market right now. And this is the economy where inflation is still way too high relative to policy settings. Since the end of 1982, when the Fed switched to using Fed's fund rate as its main policy tool through the aggregate money supply, it has conducted 12 dovish turns, which I classify as rate cuts after the policy move had been a hike. On average, the Fed benchmark move was 414 basis points above headline CPI and 379 above core. In the month, it switched to rate cuts right now, or 125 below headline and 100 below core. It's debatable whether rate policies in isolation would even be deemed restrictive, yet the benchmark rate hasn't even been above core CPI since 2019. It's valid to rebut that QT complicates the situation, supporting the idea the Fed will turn on rates far earlier any time, but bear in mind we're several hundred basis points below historical average or precedent. It's also logical to point out that those long and variable lags and use of combination of these two factors to argue the Fed may pause now and wait to see if inflation collapses further. Logical, but tenuous at best, and inconsistent with the Fed's perception persistent messaging while assuming a diluted level of deflationary optimism for its members. The labor market doesn't support an intense, sustained bout of deflation. In the absence of positive real spot rates or a financial crisis, unemployment rate is near a 50-year low, and there are almost 2 job openings for everybody that's employed. All this means is that the U.S. Treasury has significant upside. Why pick 10-year rather than, say, December Eurodollar futures? Because even though macro data doesn't warrant long pause in rates, I can't be sure the Fed won't be bullied into excess caution by the markets, thereby compelling even more tightening down the line. My base case is the Fed sticks to the mandate in words, hence continues to hikes in months ahead, but may as well have both options covered. Geez, this is long. Ultimately, the Fed won't be conducting their next dovish turn until we have had a financial crisis or real spot rates are certain to be consistently positive. Neither of those appears to be imminent today. So there you go. That was a good one. What do you think? That seemed like a very aggressive call to say nothing has changed. Pretty much saying the Fed is going to keep going. Yeah, who wrote that? Let me see. That was written by Mark Cudmore, one of the analysts there at Bloomberg. He's a Singapore reporter. 39.31, you're 2 points off from a baby level and 7 points away from the 200-day Chatadonia. Wow. Yeah, this is the whole financial stability versus price stability. And pretty much what he's saying is that your real rates are still negative. And what did he say? He said real rates were still below there. And he said one more point about everything going on. What was it? He said jobs market, real rates, and until we get a crisis. Oh, and then employment. He said everything's just too strong. So he said, again, as long as, unless there's like a real financial crisis, there's nothing will really stop the Fed at this point, which we're about to find out. Honestly, that'll even make the market a little bit more bearish, though. Just imagine Powell comes up and acts like nothing happened, and then he's just like, "Yeah, man, we just got to keep eating. We gonna keep raising no matter what." Yes, there is less of a chance now of a bank failure between now and what we saw a couple of days ago. I mean, literally, you just had the government intervene. I mean, that's the part I think that's like low-key slipping beneath the cracks is like, one, government intervention is huge, but two, it does give a lot of confidence for anybody that would have been worried over the last couple of days. You got to ask yourself, what if the Fed didn't put out an emergency lending facility? And what if they didn't do this whole thing that they did? Did you know 1 and 2 likes a day could help sponsor an Egyptian boy? Don't delay the like today. Instructions unclear. Pre-buying next article. Let's go, baby. Let's go. Just have the likes ready. Have them ready for the Fed at the very least. Yeah, they only put $25 billion in the lending facility, but we got to see who actually uses it. But at least they're showing that within 24 hours, if something happened, they'll make sure people have money, and that at the least it's kind of more symbolic, I would say, rather than useful. But then again, to get $25 billion on collateral valued at par value is insane, bro. That's like buying Bitcoin at $60,000 and then getting a loan on your Bitcoin, and then your lender lets you borrow as if the coin was worth $60,000. So he's giving you the full value that you paid for your collateral. So that's why it's crazy, because they could get $25 billion, but think about it. If all of their bonds are valued at par, that's just that's a bunch of free money that they didn't have before, and they still get to hold those bonds on their balance sheet. It's pretty wild. Well, it's not considered. It's like, this is just all legal and terminology to mess with you. It's like, is it a bailout? Technically, no, because they're taking collateral for it. They're taking a loan. So these banks are putting up their houses. They're putting up their thing. But what makes it like a bailout is that it's special terms. So it's saying, hey, you know, we're going to give you a loan, but you have to back it up with something. So it's kind of more like a normal business deal, but at the end of the day, it's like no rational person would make that deal. Nobody would give you full value on your bonds that are down 70% or whatever. Wouldn't that make them break even at maturity? No, because they pay back the loan on the par value. The par value is 1, and they're probably going to get 1% back. So they'll make a little bit more. They'll make 1% as they were designed, and then I don't know what the interest rate is on the loan that they're going to receive, but at the end of the day, it's still going to just free up a massive amount of capital. You mean to tell me I could borrow $25 billion on my 30-year bonds that are all down, and I could use that money to shore up any deposits and make sure everything's good? I mean, that's a no-brainer. It's definitely helpful in easing any liquidity concerns. Why are the banks not lending them? Because the collateral. So a bank will lend them money, but any normal, rational financial actor is going to say, hey, your bonds, you paid $10 billion for them. They're only worth $2 billion. Max I could give you is a $2 billion loan plus any risk, and then here's my interest rate. So they wouldn't even get enough money for all of that assets, where now they could walk in with $10 billion that they paid and walk away with $10 billion of loans. And I'm just using 10 as an easy number. Short FRC. I think they're going to go back. Oh, Bungie, they're the one who replaced SVB on the S&P. We're now flying a plane with duct tape wings. I think we're more in a Honda, like, because there's some resiliency to the market. I think we're just in a Honda and, like, duct taping things, or, like, you know, just driving with the check engine light. And then my dad's like, don't worry. No, it always happens. Not a problem. Keep going. Don't worry. They scam you. They just want you to repair it. Don't worry. It's still, look, it's still working. You know, it kind of has, like, a rough idle, too. It's like, blah, 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 blah. You know what I'm saying? But it's not bad. It's like, it's doing it. They just got check engine light. You know, you're surprisingly resilient. Come on, tell me, you can't tell me the market's not like a fucked up Honda right now, because all of you are surprised we're still here. You know what I'm saying? You're like, damn, this thing is still going. I've had this check engine light on for about a month and a half, and we still up here? I mean, honestly, this thing is, like, that's crazy. That's like, you get some pretty decent miles per gallon, too. Mm-hmm. Well, Honda about to hit 200K. That's not bad for 15 years. Yeah, solid 230. I think we have 392,000 miles. This one has a lot. But it's good. It's good. All you need, new battery. That's it. Just jump start it. It will be good. Simple, man. Simple. And then let it run for a little. Just drive a little. It will be good. You'll hear the noise will go away. 3,925. So again, new high, sell off 5-6 points right afterwards. What's the volume looking like? 40. It's slowed down from the first hour, but still elevated. Good morning. Sick all night. Just got here about the new theory, CPI running harder. So CPI was hot, but it wasn't above expectations. And really all the CPI did today was lock in 25 basis points, it seems like. So it wasn't hot enough to scare us on any way, but it also wasn't surprising or good enough to change anything. But it seems like today, really, the banks recovered too, but all CPI did, it's still hot on the 3-month trend. CPI is coming back up. It's still a hot number. It was the lowest report in like a couple of months still, which is good, but for the main point, it's still up, and it just made it where 25 basis points kind of seems like the base case now after today. But a big thing we've been saying today is that all of this can change. New theory is that the ship may not be sinking. The new theory is that 25 is that pretty much financial stability hasn't, unless it deteriorates further. Right now, inflation isn't going to make it where we need to go more aggressive, but then we definitely, financial stability isn't worse enough for us to do nothing. JP Morgan. All the banks have been slipping from the morning, but they're up like 8, or I think the KBW index, but I think overall right now financials are like 3%. Your yields are saved for now. This is good for Bill. I mean, I think we're going to have at least another month there, and then we'll see what happens with the 2-year. JPM scary. Then Bungie. Yeah, JPM sucks because it only goes down on the days the banks are good. Then when the banks are down 10%, it'll shoot up. Officials say windfall tax change unlikely in budget on Wednesday. Microsoft's still climbing. Apple's still up. EA's on the high. Pepsi. UWMC, they're doing good. Red Fund. The Triple M at the low. Boeing lags rival Airbus with 28 deliveries in February. Damn, Boeing's up 3. That Saudi news is good. At least LMT's even holding up. How long will the dead cat bounce last? I think this will last until we get any updates on the banks. That's it. You know, we're going to go back and forth. Everyone's going to debate the future with Powell. I think we do still have consumer sentiment on Friday. But until then now, all eyes are just on the next bank headline. What's the next action? So just kind of see where the plot is on the story. But we need that thing to actually move. Pepsi, I mean, defensives. Any defensive is going to be good. I mean, they all had good earnings. Pepsi, Coke. So I'm assuming they're going to be straight. Coinbase. Big rip. Yeah, why did the China reopening? Because remember, they started having issues. They were like closing, and then people were worried about the disappearance, and then all the Europe and overseas names started giving up. But that was the early value play of the year, and it did get faded. I think it'll come back, but we need to see. And the Chinese reopening has been pretty slow. Like I told you, it'll probably take about 6 months, but even then, with a couple months into it, it's already kind of getting off to a pretty weak start. Thank you. You're welcome, Mr. Bryant. PPI, yeah. PPI does have some important data related to real estate. Let me see. Today's Tuesday? Yeah, you do have PPI tomorrow. So, yeah, PPI will actually be pretty decent. But we'll see. I mean, at this point, I think even with headline CPI and even core, that should kind of put the nail in the coffin for the Fed. But we'll find out. And then you get import prices, jobless claims, housing, New York services, and then Philly Fed, and then consumer sentiment on Friday. It's too quiet. We're the last couple of days. I mean, yesterday was still active and was the first day after the Fed backstop and then Signature Bank. But it seems like the last couple of days with the bank stuff it's been getting quieter. So that's what we're going to find out. And I told yesterday, man, the banks, they gave me money, no problem. I was surprised. I thought they were going to be assholes about it, but I was actually like getting cash out the bank yesterday. I had an easier time doing that than any other time, which was very, very surprising to me. Datadog selling. Yeah, they're down 2.4. You said at first they wouldn't have let me take it. Well, no, they weren't. They were being weird. So like when I called them, I gave them an hour heads up, and I said, "Hey, can I get this amount?" And they said no, and I was like, "I need it." And then they're like, "Why?" And I was like, "I need it. I really, really need it." Then they were like, "No." They said the most we could give you is this, and I was like, "What about this?" And I was like, "Well," I said I'm gonna call around and see, but like I actually do need this. If you could do it, it'd be great. And then on the phone, they were like, 25K is all we could do. And I said, I need more than that. And then they said, what if, they said, let me see. And then they're like, can you do smaller bills? And then I said, yeah. And then I got there too. And then right when I got there, I had the same exact conversation with them. I had the same exact conversation where I got there and they're like, no, we could only do 25 maybe. And then I was like, come on, like, let's go. Like, you know what I'm saying? Like, you just said I could. I said I thought if I do $20 bills, you could give me more. And then just after like 5 minutes of talking, she just went in the back, checked how much money they have. She let me know they only order X amount like ahead of time. And then she just gave it to me. I recorded it. I have a clip too in the bank recording it. I forgot to post that in the video yesterday, but it was chill. It was chill. It took me about 10 minutes, counted the money in front of me, and then that's it. I was out, and they gave me a box to walk out in, and that was it. But I don't think it was sussed. I've had more issues at times trying to take out $10,000. In a weird way, I felt like they were a lot more accommodative. Yeah, it is normal procedure. I mean, they have limits. I asked her, I said, what if I wanted more cash? She said you'd have to give us a week notice. At the very minimum. I said no 2-day notice. She said no, a week. BHP takeover speculation in NTR. And SPY's running up. XLU, Boeing's running. Should have called JG Wentworth. March 27th, first time California Dream buying goes into effect. You in on that? I'm not in on it. I mean, Boomer told us about it. It's pretty cool. It's a mortgage loan where they'll give you a discount on the cash you put up front, but then you split your profits with the bank. So, like, they'll give you it lets you get a loan for less money down and less, like, you don't pay as much. Pretty much the bank goes in on the house with you, or I think it's the state of California. And then you, when you sell the house, you share, like, 15% of the equity. You give that away of the profits. You pay back the money, and then you give them 15% of the profit. That doesn't sound good. Yeah, it's called, it's what that guy just posted. It's called First Time California Dream, I think. There you go. Boomer's going to make a reel on it. Let's go. He sent me one. It's very good info. I think the interest is still high and it's lower, but the idea is you could get the property a lot cheaper, and then you just you share your profit. So if you make $1 million in equity, you have to pay back the initial amount that they funded you, and then you're gonna give like $150,000 to the bank or whoever. Technically, they would split the loss with you, yeah. Because, like, let's say you bought it and they gave you, 10% your down payment, right? So let's say they gave you part of the down payment. They gave you money to put up front, and then the house loses value. They just gave you, they just subsidized that house for you. So even if you went to sell it at a lower price, they wouldn't make anything, but they made the house cheaper for you to acquire, or at least gave you money up front for it. SVB failure, executive trading investigated by Department of Justice and SEC. Sounds like a shitty deal for non-investment buyers. Yes and no. I don't know. I feel like I think it's going to be cool. I think some people will benefit off of it. I think it's to benefit the group of people out there who are like on the cusp of being able to buy a home, and now you could get down payment assistance, you could get money up front, and then realistically you're just giving up money on the back end. So it's just like, it sucks in the long run, but if you wouldn't be able to buy the house to begin with, then this will definitely open up the door. SEC is investigating SVB executives. I've seen Kohl's, but I also think Kohl's can drop a little bit more. Did it go down to that? It kind of went down, but I forgot where were they. They were at like $12, bro. So they could still drop like 50%. Sadly, the dividend is attractive. It is a name brand, and they have the real estate, but I don't know who could buy them and whatnot. But it does look attractive. I'm not going. I think the divvy's at like 7. I just think you still have like 50% downside. 9% yield, geez. 8.9. I don't know. I do like Kohl's. I really do like it. I don't think it's... I'm just worried about the equity risk. Oh, shit. Today's ex-dividend? No. Damn it. So even if you buy it, you won't even get it, right? It's ex-divvy on Kohl's. Damn it. That's good, though, because I would have bought it, probably. But now, that would have kind of tilted me. I would have like, okay, maybe one deposit. Damn it. That's nice, though. 9%. I guess now we wait. Maybe ex-divvy, it falls to 50%. Oh, man. CP. We sold puts. MPW, we've brought it up here. I just don't think it has it doesn't have the history, but the yield is good. And I mean, even after this drop right now, I mean, you're going to buy it at what, 20-year lows? Jeez. Yeah, you're buying at 10-year lows? I don't know, maybe. I just don't think it has like the name brandness where you have the stability. Or ex-divvy is today too, so if you wanted it, 13% yield. It's already middle of March. That's crazy. It's already middle of March. Let me see. FRC takeover speculation circulating from RBC. So it's already up 57%. It's not really moving on that. And SPY's coming towards a high. Powell is on the 22nd, yes. Let me see. So medical properties, here's an update. They face a tough macro backdrop, given the company's sensitivity to interest paired with risks of over-leveraged operator stored, although Utah portfolio sale reduces exposure. Meanwhile, the prospect situation become more tenuous, now dilutive due to non-payment of rent of portfolio in 23, with a likely workaround to 2024. Besides these two troubled operators, although acquisition remains firm, rate clarity will remain necessary before the company can resume growth. In our view, hospital coverage ratios have meaningfully declined and hospital FCF remains weak, although the hope of moderating inflation, labor costs, and enhanced efficiencies were touted to management. We see key near-term risk persisting first half 2023 as elevated labor agency utilization. Management, this is all for MPW. Let me see their payout ratio. And then we're hitting a high. Holy crap. Are we at the 39.40 yet? Yeah, 39.33. This is baby level number 1. So, Chad, you're working your way into the 200 day. It's either this is where we end the day and nothing happens, or it really starts to squeeze from here. And then keep an eye on FRC. Yeah, MPW was looking good up until last quarter. That was the only quarter they had net negative income since 2020. That one's going to be interesting. Add here. I don't know. I kind of like MPW. I just don't remember last time. I mean, right now, out of everything that dropped, that one actually took more lows. They're coming off of bad earnings. But then it just doesn't have the name brand. And the net income is scary. Let me see one more. I thought it was double B. Euro close? No, actually. We have an extra hour for Euro close. Yeah, Prospect Medical. They pretty much have two bad people there again. I want it. I like the yield is at 13%. That's insane. E4 candle bounce. Let's see. Let's see how the long term looks. The move index. I made a video on it. You should check it. Josh, am I starting an OnlyFans soon? Damn, your mom told you? I told her to keep that between me and her. That's crazy. Hold on, I'm logging into my long term. Shout out the long term. The long term, love you. Covered calls have been a very good friend of ours. Where's 3M? 3M, we're down 4.5 now. And then where's Bill? Bro, Bill, 17 bucks in cash, bro. I'm so hyped at my 0.16%. It's amazing. How much would that be? All right. I'm kind of nervous, but I think I'm going to do it. Nothing else is there. How much cash we have? I could get, what's it called? I like the yield a lot. I'm worried about this low. That's the only thing I don't like about it. I think I might go ahead with it. I don't know though. Just off of the lows, you might be able to test it. You got like what, 20%? Yeah. We've talked about it so much, and now it's down. It's down literally 20%. This is what happens every single time. Let's see. I think that'd be 45. All right. I bought MPW for the long term. It is a REIT. I mean, I like where rates are going. I just don't have name brand. That's it. That's the only thing I don't like about it. It is not a name brand name. The yield is huge. That's the only thing I like about it. I've just gone through a couple of the things on him. I mean, I've been watching it for the last couple of weeks. You guys kept telling me to look at it. And pretty much the only thing I didn't like about it was name brand and they had a really bad last quarter. But other than that, I think it's good. But now I'm hoping, pretty much why I just did that is because I'm thinking that the yield, as long as they don't cut it, that should be able to take us home. I got in at like 890 something. I'll send out a long-term alert. 891 and 893, 450 shares. Why did they miss 2 properties? So they have 1 property not making them money, and they have problem. Then X dividends tomorrow. So this thing will drop. If you don't want to buy it today, it'll probably come down tomorrow. But now you can make sure you get the yield. But what I'm doing with that one, I'm just trying to take advantage of the yield, bro. That's it. Like, remember I was showing you my plan to raise my dividends? I think I could have done it here with less money. It's pretty much what I'm trying to do. But it's risky. I don't, again, it seems very, it's not a name brand, and the yield is extremely high. So the chances of this thing being a yield trap is very, very high. Yeah, but pretty much now, that one deposit, this is yielding us even more than HBI. So it's around the same value of HBI that we had in there. But this is all for the yield. That just shot up our dividends by like $40 a month or something. And then you're getting $574 a year on those shares, which isn't bad. It's our 3rd highest dividend payer now off of one of the smallest deposits. So you're getting paid you're getting double JP Morgan dividend by spending half as much. So we'll see how that could open up the door. Yeah, and then X dividend is on Friday. It's risky, though. It's 13%. It's a REIT. So you're dealing with interest rates. But that's why I'm also liking it, because I'm thinking if anything bad happens pivot-wise, I think short-term interest rates will help them. Any info, you could go to their headquarters. Talk to them. See if they want to talk. Say, why do you guys... I think it's like... It was like their Savannah property or something like that. Like, they have a lot of good coverage, but people are just worried. Most price targets are around like $12, and then that's it. Not every REIT pays you every month. Just a couple of them. It just all depends on which one. But MPW, long-term play. Got to put out some money. We still have cash, a lot of cash available. So I'm still low-key just waiting for my MO. But I'm excited. This one has high dividend, hopefully a lot of high growth, and then we go from there. But the goal of trying to build our dividends this year, we are making progress. We are making progress. When do they next pay? April. So that divvy hits with Ultra. 13.35% yield. That's actually insane. That's so scary. We haven't had a yield that high since IRM, and now IRM's down to 4.7. So that would be the best case scenario. But this is our highest. This yields 3% higher than HBI. Off of one of the lower amounts. Pays in March. Am I going to keep the drip on? Yeah, hopefully. I mean, again, 13% yield with no drip. I mean, don't you realize your investment in like 7 years? I think just under that. So then with drip, you'll probably realize your whole investment in like 4.5, 5 years. I still do like UWMC. That could have been another one we could have went for, but it's up. The only thing I like about MPW, even then, from the last time you guys were talking to me about it, was at $10, $10.60. So we're able to get it here really low. It's another 10-year, 20-year low at this price. So like you're buying it at pretty much 2008, 2009 prices. Still has a little bit more downside, a lot more downside, but that yield should be able to make up for some of it. HBI no longer has dividends. Yeah, I'm trying to increase the cash flow on the account 100%. That's something we've talked about. I am worried about them cutting the dividend. I mean, I hope we make money in the meantime. MPW is just not a name brand. A lot of their portfolio, it's some of these smaller hospitals, and they have decent ones, but it's just not it's risky because the yield is 13%, and it just doesn't have the name brand history of some of the other names. I like the cover. I like Jeppy more than anything. I heard a lot like QYLD and other things. I've heard some other stuff about him, like with how the fees work and how they play out. But I would go with Jeppy, and I would just make sure you get it at a good price. FRC hot dogs. Qs are on the low. SCHD, isn't that the Schwab as dividend? This one, as long as if it moves relative to stuff, you just still run the risk. That's why I don't like some of them, because like even Jeppy, I mean, it moves with the market. So like Jeppy just hit that low there if that's what you wanted to grab. And we talked about Jeppy. That one could be there, but they just haven't been around long enough. At least MPW has been. It's now hitting a very, very big multi-year low, but I think MPW is still extremely risky. Yeah, Jeppy's a college player. KO pays divvy on the 16th. So the soonest I could select is tomorrow of settlements T+2. Just sell the day of X dividend. So if it's day before X dividend, you could still buy in. So if you sell out, you won't get the divvy. But if you wait to the day of X dividend, you sell out on X dividend, you should be good. 39.34, I think. 39.33 is the minor level. 39.40 is the 200-day. And we're hanging right there. We're 5 points. You're above the baby level, and then you're right below the 200-day right now. So that's something to keep in mind. If this actually flips and we sell off, this one won't be pretty. I don't think, or at least SPX, the level is 39.40. But we're doing it again where you're not breaking out from it. Last time we made a move up to it quick and then sold off. This one we worked our way up to it. But like I said, I mean, I wouldn't be surprised if we did a little bit of a dancing queen with that level today. Solar names on the low. Start my Disney. I was looking into that today because Disney, you're going to get a dividend later in the year. So I think Disney could be like, it could be very interesting. I'd like it below $90, but even slightly above 90 isn't too bad. And Disney just named brand. Wait. MPW. Well, it's going up. It was up 2% before there. They have XDivvy tomorrow. We'll see, man. I hope this one hits. That'd be good. At least even from Thursday, should be able to get $1 out of that. Should bring the yield back up to 10 or something. What point do you stop adding new companies and work on building? Well, that's where we should be at. I mean, the point, I'm just trying to build up the divvy, and I'm waiting for like I want to build Altria, even 3M, and then some of the growth names, but kind of just taking your time with it. Ideally, though, like in the long run, as we start getting through years now, is like you want to start building positions, because the bigger some of these positions get, it just takes one good one, and that could do a lot of work for you. So ideally now, but it's also factoring in, you know, the priority of the rest of your balance, the growth and dividends, and making sure you find your good balance there. And also just don't lose your balance with trying to build too much, because when you do build, it does increase the risk on one end or the other. But pretty much it's like we have a couple of like $15,000, $20,000 positions, and then the rest are like all below 10. Everything coming to normal except bond yields, and the dollar's about to go negative. Meta was on fire earlier. A dollar in low index, none. So in our long term, we don't have any ETFs, believe it or not. FRB, where's FRC? They dropped after that headline to get bought out. Attic, welcome, my friend. MPW witness chat. I just hope they don't cut the dividend. If they cut the dividend, I'm out. They gonna play us again. Nvidia's hitting a high. Even Meta too. Meta's at 192. So actually, Meta's about to break out here as we are making the move towards the 200-day. I'm here. Eric is here, baby. Let's go. Good morning. Good morning, my friend. Microsoft wasn't up as much. Amazon's up 2.6. Is value in dividends? Yeah, and I mean, there's growth plays too. Like, we still have a lot of growth. We got our Airbnb. We got a lot of other names in there. So, and then, like, again, we even have Netflix and Meta. Hopefully, if we see any more declines, we buy more at cheaper levels of the bigger names. Like, we're even looking at Amazon and Google. But it is also keeping some of this cash. So, like, I still have a shit ton of cash. That's it. At the end of the day, we still have like another $10,000, $11,000. We get another deposit in 2 weeks, but we still have a lot of cash on everything. So even then, I've been like slowly working some things out there. MPW was the second purchase of the year. The first one was 3M, and I still want some more 3M as well, but we're going little by little for now, but making sure we still have cash, but mainly 60-40. Right now, I believe we're at 50-50 growth and dividends, and trying to get some good growth names at relatively decent prices, and just making sure you hold it over 10 years. But also for this year and moving forward, we have enough time in this, and if we keep putting in more time, I want those dividends to work for us. because they could take you a very, very long way. And especially if things go weird in the next 10 years. The dividends will be your friend. I'm hoping. If we could bring up, again, I think if like, what is it? Yeah, if I could get like, if I could bring up my Altria position, if I could accomplish some of that goal, we're going to be at $4,000 a year in the divvies, which is what something I want. I think if we could get that, have now our long terms depositing $400 a month, just under, like on its own, that's great support to have in the long term portfolio. And then not to mention the compounding effect and everything else. So like after today, that purchase of MPW, that brought our dividends up about $600 a year now. So like I was telling you, if we could pull off like MO, we get a little higher yield on that. Actually no, I think it'd be like 400 shares. Yeah, that would take us to 4,000. So now I don't even need to buy 3M if I didn't want to. But really, I have been waiting for Altria to come down in price. But if we could pull that off, we'll be doing about $335 a month, just straight from divvies. Yeah, MPW is pretty much HBI 2.0. Risky play. It's at a super low yield. It has been around for 10 years. It doesn't have the same name brandness, but here's the difference between HBI and MPW. At least the dividend on MPW is expected to go up, but if they do bad, that sustainability won't last. But so it's kind of like that, but the idea should be if we could get like if we could get 4 years, 3 years of dividends, we should be good off of it. And then it's just padding the stats here, but we did deposit around the same amount. Pretty much what we sold out of HBI, I put right back in there. Yeah, Facebook made a move, came down. SPY was trying to break out there, but looks like we are getting the dancing queen right around the 100-day. So 39.33 is the baby level. I think you could even come back down to 39.20 if it does sell off a little bit. I have drip on MPW. Yes, I should. I mean, I turned off drip for the other one, but let me double check. Oh, well, since I turned off the automatic enrollments for Bill, I have to turn it on, actually. Okay, we are dripped out. We are dripped out. I turned off drip for Bill, yeah. I don't know. I think I might hold Bill until it resets. So that's what I was thinking about yesterday with Bill, because as long as the rates don't get cut or paused here, then so Bill is going to go up. We have another 2 more weeks. We're going to get the random yield, and then it's going to reset. But my plan is get the dividend, and then once it gets back to our price on the reset, then we just sell out at break even, and then we get to keep the dividend as well, because the price will reset after ex-dividend. Okay, I already read. That's the regional banking ETF. NVIDIA's on the high. No regard for any life. Tyson played chicken and lost with the plant capacity plans. UFN, I'm still holding that. They came down a little bit. Same price on the ask, down on the bid. Zim. I wouldn't hold Zim in the long term, but we have a flip on Zim that I think we're going to get the dividend on, unless it runs up beforehand. I know it's a little tricky with how it works for them. Nvidia, I think it's expensive. I don't know about overpriced, but it is up there. No, you have to. I think Zim, you have to actually. I don't think you could sell on X dividend and still get the divvy. It's weird. If you dig through MPW, it doesn't look solid at all. It's risky. I mean, again, I think you don't even have to even look that deep. All you have to look is the dividend yield. It's paying out 13.3. So it is. I've hesitated a while on it. Everybody kept bringing it up because of the high yield. I've kind of ignored it just because it was up still. So I think the stock could go as low as $3, and God knows what the dividend will look like there. But it's still, I think it's a decent risk to reward. As long as it doesn't, I mean, unless they go bankrupt in 3-4 years, or if they cut the dividend before that. But then again, I think we'll be in another HBI situation. It's borderline a divvy trap. I think it's definitely there to, it seems like it's definitely trying to lure some people in. You could sell not on X. If you already own it and you sell it on X dividend, you'll get your money. But if you bought it today and sell it tomorrow, you will not get the dividend. Are dividends worth it when you lose more off the stocks? No, it just depends what it is. If the company is stable, you shouldn't worry about the equity too much. But if not, then you have a problem. Like a good example is Altria or like Walgreens. Like I've went positive and negative on that stock many, many times. But what happens is that it's stable. It's actually stayed around. So sometimes it looks like you're losing money on it. Sometimes it looks like you're making money on the equity. But overall, as long as it could hold around a similar price for a couple of years, you're actually making money off of it. So as long as it holds, but ideally that is the risk that I have. That's why I say be careful, because you don't want to go for dividend names paying for something too high, because then if you lose that money on equity, you could take all of that time. Yeah, I'm all out of I sold out right when HBI cut the dividend. I sold out every piece of it. If you got the divvy and sold today, because I think if you sell out, it changes your shareholder record, because you would have today and then that would have to settle, but I think it would cancel the settlement if you sold out. And then SPY's starting to give up here. We were just hanging out at the high, and then everything started to slow down. CPI was, it actually came in hot slightly, but it wasn't, it was in line, but it was still, the last 3 months have showed inflation has not calmed down. And everything's still green. Consumer staples are worst on the day. They're up 0.48. Healthcare's up 3/4. If you bought MPW today, how long to get the dividend? Next month. So if you buy it today and you hold it through the next couple of days, you will get the divvy, but the divvy doesn't come out a month later. So technically you wouldn't get paid your dividend until April 14th probably. Actually, yeah, all the banks, even that banking index was on the low. We're still up 2.3 on the NASDAQ, 1.89 on the SPY, and then 1.3 on the Dow. The TYD play came back. We're barely up on it now. We were up $1,000. Now we're only up 200. So bonds have chilled out a ton today. Why are we up? Just, I think the banks rebounding and having a big bounce off the bottom. No bad bank news. And then CPI wasn't too hot, wasn't too cold. Hot on the last 3 months, but pretty much CPI calmed down the idea that the Fed is going to have to panic pause, and that 25 basis points seems like a reasonable amount so that we don't cry about financial stability, but then financial stability has not really changed the path of inflation as long as we raise rates by another, what's it called? As long as we raise rates by another 9 or 1/4%. So let's see. And then we're hanging out right below the 200-day average. What time is it? 11:50. It's only 9. It's still mad early, man. Still mad early. Meta's still holding up. If you buy MPW, you get the dividend in April. Yes. Now just, again, all dividends pay out 1 month after X dividend date. And then the next dividend will be in July for MPW. So you get the dividend. X-divvy is today and tomorrow, or tomorrow. If you buy it, you get the dividend in April, and then the next dividend payout will be in July. We didn't reject hard. Well, even then, we're just like we're holding right now, next to the 200-day. So we'll find out. Yes, you must hold through X dividend. CPI negative. CPI was a trip. CPI just calmed down the panic pivoters. That's all, but that's good enough. It is good enough. I sent you a funny email. You ate shit last night on on a skateboard or something, or what? Taking life insurance courses now. Let me get back to the books. Oh, God bless you, man. I'm glad to be here. That's cool. You're going to get a Series 7. You know that? You could get a Series 7 by doing life insurance. Oh, Altria, put volume heavy and directionally bearish. Oh, that was yesterday. Beautiful reversal. That's how you got yours. Yeah. Nice, man. Let's go. Let's go, RJ. Let's go. I have not taken a Series 7. No. I am not a registered broker. I'm not able to deal with securities or buy them on your behalf. Schwab CEO coming up on CNBC. That'll be interesting. I mean, if banks get part 2 rally, that'd be good, but literally banks helped lift us up today. All they did was sell off in the morning, and now they're just staying pinned at this level. It's pretty wild. What multivitamin do I use? The one, it's like a daily multivitamin from Target. It's not really too fancy. Just some generic vitamin brand. You got hired at Schwab. There you go. Alrighty. 3928. Bro, you're hugging this level. So maybe, I mean, it's still very early. We've only been here for what? 2 hours, 2.5 hours? We got to get some push-ups in too, man. Anybody want to do some push-ups with me? But we're moving pretty slow, and it looks like theory of hugging the 200-day might be in play. But remember, if we bounce above it, you could get a bigger squeeze. If it fails, then we're done. But Chad, get beside your desk. Come on. We've been here for 2.5 hours, almost 3 hours, actually. Sitting is the new smoking. I need you to get beside your desk and do 10 push-ups. Can't do 10, you do 5. Can't do 5, you do 4. Can't do 4, you do 2. Can't do 2, you do 1. Can't do 1, get her knees, do a push-up, plank, the worm, anything. But get the body moving. Then optometrist's recommendation. Stare at the object 10, 20, 30 feet away. Blink a few times. Go blink, 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 blink. Blink, 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 blink. Oh, beautiful. Just like that. You've relaxed your eyeballs, okay? Now, legs in front of you, not wrapped behind your computer chair or kicking your nutsack with your left leg. That is not appropriate or allowed right now. Please stop mangling your spine. Chest to the sun, flex the core, tuck the hips in, and beautiful, baby. You look amazing. You look better than the bank stocks today. But maybe I shouldn't tell you that because bank stocks are still clapped even after today. But still, you looking good, baby. You looking good, okay? And then relax the jaw. Go. Breathe in really deep. Go. Breathe out with your tongue out. Do the dragon breath. Go. Beautiful. 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 I actually got my weights here next to me. I'm going to see. Can I do... I don't know if I could do triceps. Because I got triceps today. I'm doing tricep extensions with the 25 dumbbell. This is heavy. And then my shoulders. I don't do good at tricep extensions with like free weights because my shoulders get tight. Core is important. IBM is red and dropping. Oh. Yeah, what sucks, I mean, it's still early, but we brought this one up yesterday, too. Just, the last thing you want is, like, if momentum just turns down middle of the day, even with, like, Euro close, that's where it gets ugly. Meta's hitting a new high. Keep your elbow closer to my body. Oh, I didn't think about that. I'll try that. I just did 10. I just did 10 on each. It hurts, though. My arms suck with overhead extensions on triceps. Little cheek lays and bounces. Again, Schwab CEO is about to be on. Yeah, IBM is selling. I squeeze my lats. Ooh. Look at I need to work out more with the chat in front of me, bro. Y'all are like little personal trainers. I just got like 10 good tips, man. I like it. Thank you. Thank you, Chad. Thank you, my friends. Meta. I think we're green on Meta now. No fucking way. Nice. Collective wisdom called Chad. Poor public, they trust this move. Well, I'm telling you, there is a big gap between stock traders and the general public. So, you know, that's it. Like, people are just hearing about bank runs now, I mean, and now people are looking at it in one way. Even like I'm saying, the banks, everybody working at banks has a different attitude. You know, I think stock traders are more likely to fall for this or that, whereas, like, remember, Main Street moves very slow. So your general public is not really, I don't even, again, if any random person looked at the stock market chart right now, all you would notice is that it's been going down for the last year. Besides this little, like, drop here, though, it doesn't look that insane. In a weird, you'd be like, what, you're at the same price as May? And it actually looks kind of stable. The S&P looks like ultra dividend stocked. We could put up the Schwab CEO. I think that'd be interesting to hear from.
And we're going to talk to the join me at 1:15. Really looking forward. That's been kind of a litmus test.
15 minutes. 1:15, they said. 1:15. If you put your right arm up, look back at your left foot, and do squats. Bro, this is a tricep extension. What the hell? All of that, I've gotten really good advice. That just confused the shit out of me. So I'm supposed to put the weight above my head, look back at my left foot, and then do a squat? I'll try it, but I don't know if it don't sound like it's going to work. I'm really confused by that. I need to try the tighter elbow and then flex the what's it called? Flex the tris. He's saying then lick your ear. Let's see. Tight elbows. Lats activated. Oh, it still hurts my elbows. But that did help. Ooh. I work for Big MO, so thanks for investing. What's up, man? Tell them what we got. Like, when's MO going to come down? Can you buy shares as an employee? Because if they give you a discount, you should buy a shit ton. Because then you could get the 10, 20% off right off the bat. Too heavy. No, bro. Anytime I do over the head tricep things, even with like 5 pounds, it hurts. It's like my shoulder. It's like my shoulder and elbow. Yeah, I do. I think I need a lighter weight for the triceps, though. Oh, relax just the pinky. Dude, I love this. Chad, I need the chat in one day when I work out. Bonds are dumping. Again, take a look at the daily. It's a huge drop. This is what I was saying was the risk of bonds. Like I was saying yesterday, the bonds look good. It's like if you really wanted to go, the only risk of going for any pivot or anything else is that you lose this. But the bonds are moving insane. And yesterday, bond volatility hit a peak. TLT scaring you. TLT's scary when it goes up. Not when it goes down. It's more or less, I think that's just everybody calming down on the rate hike expectations. I have Uber shares. I don't have calls, and then I sold Uber covered calls. So, like, the Uber covered, and so now, like, that's the great part. Our Uber shares in the long term are back to break even, but you're seeing, again, we were able to make... Why does it do this? We were able to make some money on the covered calls. I think the same thing. Redfin covered calls, we're actually down on those still. And then Airbnb covered calls, you made 60%. Did we do any other covered calls, or is those the only ones? I wanted to do the Abbey covered calls earlier. So where are those? It was at 155 that day, though. Yeah. Kind of missed out. INFN. Yo, INFN Infinera Corp. INFN, big pop. Meta's going too. INFN calls surge up the most. They announced AGC is first trial in advanced coherent algorithms. That was this morning. It's announced Australian Japan Cable is the first to trial their coherent algorithms for next generational optical engines. What is this? I have no idea what this is, but they're moving there. Call options are surge, most in weeks. They hired Centerview Partners to explore options for sale. So INFN, potential sale. Yeah, honestly, you know what I haven't heard in a while? AI. Like, low-key, I feel like we haven't heard AI stuff in a while. Google just had AI news. SPY's starting to dump again. Infinera, 14%. I'm not seeing any news here on the market, but we are moving down now. It's their first drop in a while. And we are 30 minutes off a euro close. Remember, it's weird here because of daylight savings. But 39.20, that's what I was saying. Watch 39.20. I wouldn't be surprised there. You could even go as low as 39.10, but if you hold 39.20, I wouldn't say that's as bearish. But if this starts to flip through, it could look a little shaky. But so far, I mean, it's been a slower move, but you melted and worked your way up to the 200-day, got right below it, and then we started selling off. Yeah, the move index is like an all-time high right now. It's actually crazy. How come no one's talking about the uptick in core CPI? Because it kind of came and expected, but I'll tell you, it's the 3-month average. So remember, that's what when everybody was saying inflation's coming down and no landing, they were bringing up the 3-month average. So what's happened now after today, the last 3 months of CPI have all gone up. So even though they've dropped year on year, just remember the last month-over-month increases, I mean, they're all moving back up. So, like, let me get you the CPI month-over-month. So that thing, like, moved 4.4%, right? No, it's not loading me the rest. Yeah, that one moved 0.4, but then last month it moved 0.5, and then the month before that, it was revised to 0.1. So the last 3 months, have all been going up. So like that is like if you're worried about inflation, if you're looking for the bearish of the CPI today, it was that. It was that the 3-month average is going up. I mean, there were some bright spots with like food inflation coming down, but another part too, and even real estate went up on this CPI, and it was what's it called? Even auto prices went down. So like 3% of the CPI is in used car prices, and for the last 4 months on CPI, used car prices have been going down. And that makes no sense considering a lot of the used car indexes have started to rebound. So it's an interesting one, my friend. But definitely 3-month trend is the bad part about today. Credit Suisse bankers are hanging their hopes on a 70% jump in stock price for their special bonuses. And then Signature was seized after leaders caused crisis of confidence. MPW is just a high yield dividend trap. I think MPW is like HBI with less name brand power, And really at 13% yield, I'm just thinking that one of the largest hospital operators will be able to stick around for 3 years and pay me my money back. So that's it. It's just a cheap way to boost dividend portfolio. It also is kind of tied to a nice industry of healthcare and real estate and all of that, but it's just a high yield borderline dividend trap, and that's pretty much it. But I added it to the long term. No, I'm keeping MPW. It's in the long term. I don't plan on selling it as long as they don't cut dividend. That's it. PAC WP. I've seen PAC W, but is that the preferred shares? Yeah, these are preferred shares, I'm pretty sure. And people were going crazy on the preferred shares for even SVB or even the bonds. It's trading at a 5 PE, 13% divvy, 20% short interest. That's for MPW? I thought the PE was like 6.6. But I'll take it. They just had literally, I mean, the last 4 quarters or 8 quarters, their dividend has been solid. But last month, that's why they started dropping even more. They had a really bad month or quarter. Didn't know. Yeah, I had. Remember, I put in like 10, 11,000 into the cash, and then I still had I left a little bit on the side because I wanted to experiment with Bill a little bit. So we still have money left, and again, I still have all the cash. It's just all in Bill right now. Infin running again, Infinera. Yeah, that is continuing 11% now. Even Meta too at the high. AMC shareholders approve common share. So watch Ape. Oh, Ape might bounce off of that. Hold up. So AMC's dropping, but yeah, Ape should be able to. That's the arbitrage play. Nope, even Ape is dropping. Meta is still at the high. Yalla Meta. Do it for the people. Ape is going to go. There it is. Yeah, I think it should. Again, that's the arbitrage play because if they approve the thing, AMC goes down, but then Ape, you should make money on the shares. But that's the thing. If AMC drops too much, I think it hurts the arbitrage. I don't know much about it, but I have the general concept. There's Ape. So that now it's starting to move on that. They should equal out, but it's usually the arbitrage. I mean, pretty much as long as AMC stays above $4, you buy the Ape at $2, it's going to convert into $2. So that's what people were waiting for. So be careful with that, but that is news right now. And then we bounced off to 39.20. Updates with 3M. We could. And then even then, if 3M, I'm down to buy more of that if it goes down another $3. So it's already down 4% since where we got it. AMC paused due to volatility. Is Ape still trading? Yeah, Ape is still trading. Preferred units jump more than 20%. FRC, Wall, PAC W. All of these are up 60% and still below Thursday and Friday. Tesla 181. What time? It's only, dude, it's only 9:15. So 15 more minutes till the second hour or the third hour. Volume's at 60 mil. It's definitely slowing down from earlier, but still fairly elevated. And now at least market is back up from January, where we started January. SLG. Green Realty. Well, now, I mean, no more REITs for us. It kind of looks the same as MPW. There's a little less history. And then back to '08 levels. I'd have to look more into it. MPW, I've heard about it a lot. Remember, I was telling you I needed to do research, and I was slowly, but now it's another 20% lower. Find any time. Help me with the carrier. I forgot something on the LT alerts. Did you ask him about short codes? That's all you got to do is just make sure you activate short codes. And that's usually been the big fix. Again, he bounced 39.20, 39.29, selling off a little bit again. But again, 39.20, breaking below there, we kind of kill momentum. As long as we dance around here, you're good for now. The Brink SVB isn't a Lehman moment, but is it a Bear Stearns one? Ooh. Good take. Good take. ACM. You sign up for stream alerts? Shoot an email if you're not receiving them, and make sure you're domestic for now. TSM had an update today too. And then Meta keeps going. All right, that candle's still kind of holding. Schwab is at 115. Oh, so he should be on right now. That was already 15 minutes?
Just could be. We have inflation. So I think Jonathan has a point in that they're struggling with this.
I don't know if that's
and they may well come out on the side and not about saving face and not about preserving your dignity, but that inflation is what they started to fight against. It's still there. We know it's coming down, but
tell me if he comes on, but I think we might have missed it. But it's only been like 2 minutes. Oh, 12:15? Or is it 1:15? Oh, okay. It's 12:15. I'm my bad. Schwab. Amazon 95. Okta's still actually holding up. And Apple. Where's Uber? Uber's still 5.6. They were up 8 at one point. Tomorrow's ex-dividend. So actually we will get the dividend on MPW. The problem, I mean, I'm telling you now, if the market gets any worse tomorrow, I mean, the odds of MPW going down tomorrow or in 2 days is like 60%. Like, it's going to drop after ex-divvy usually. So, but if you do buy in today, you at least get 13%. So you're going to get what? That's like almost 4% right up front off of this next divvy. Meta announced another 10,000 jobs laid off, and then a $3 billion cut to spending that people are assuming is going to be in R&D. Yeah, SIVB is 0 now. AMC unhalted. Okay, there you go. It's moving up now, so watch. But the price, the real play should be on the preferred shares, doesn't exist anymore. So everybody who bought this stock, that stock is valued at $0 now. So all the people who had deposits, they're gonna get their money back, but this is not like they're clapped. Yeah, SVB shares are fully clapped. Signature will be the same. Yeah, that's what Biden was saying yesterday, where the shareholders will not get protected. He was saying so all the depositors get their money back. Anybody who bought the shares, it goes to 0, and you're not entitled to any money. That was the risk you took. Remember, that's how capitalism works. That's what I learned yesterday. I was trying to figure out how capitalism works in between all the stimulus, you know what I'm saying? And but then I've realized yesterday that's how it works. So kind of cool. I'm glad that I was able to learn that yesterday, you know? Should have shorted, yes. The mic's cutting out, shouldn't it? Bear, BAER, not bear like bear. BAER up 30% running. I don't see anything on bear. The shares of Bank of America. Puts for these banks. If you should be able to get paid on it. If you shorted it or you bought a put and then it went down, then yeah, you should be good. Audio is cutting off. Why? Why so many? I think it's lagging. I think you guys might be getting lag. Try to refresh. Yeah, my cutting ding out right no reload the stream. I'm just kidding, reload it. And NMD is buying out SSY. Wasn't that a couple days ago? Twitch is good, no lag. You get here fine good. Pack W's ripping. Honestly, that is great. Because not every other bank is running right now. Some of them are kind of in the gulag. But watch out here, because now banks are starting to work their way up, but it seems like everything else is giving up. You're barely above here, so we're going to find out. Pack W again, RDWR2. But Pack W is printing the high, even the preferred shares. He's taking a candle down. You went on a hot air balloon? That's dope. Those scare me. I've always wanted to go on one, though. Kind of weird. You're coming down. I mean, bonds are still clapped. Just watch if the other banks start going up there. No, I didn't sell the EUFN play. That one we have till what, April? I plan on writing that one out. All right, this is the break here. Finally, it's weird because again, some bank stocks there you're below 39.20. Last time you were here was about 2 hours ago on the dot, and then we are entering in 5 minutes from Euro close. So get ready for this now, and let's see how this plays out. Again, 39.10, 39, really 39.17. I think that'll be harder to get back above, and then 39.10 to 39.07 and 3900. Really, just early ranges or we're back up, but now you're about 10 points from the high. Maybe 20 points. Yeah, you hit 37. Bank news. No bank news today. All that is that people are thinking the risk of a run has slowed down a little bit. The banks all recovered here, or at least a temporary recovery, but most of them are still down over the last 2 days, and then no other updates from the government or anything else. All today was CPI, and CPI seems to have calmed down the rate markets. That's why bonds have relaxed, as well as Fed futures, and everyone's pricing in a quarter of a hike rather than 0.5. Amazon's PE as a 20 or 40? I think it's in the 20s. I don't know. Good question. Why did it say 0? Did they not report a gain? Meta's is 22. Nvidia's is 102. Yeah, Europe is closing pretty much right now. 4 minutes. 3 minutes now. 3 minutes, 30 seconds. 2 minutes, 30 seconds. Yeah, we're up a lot. We're up 2% on the NASDAQ, 1.6. I mean, I could see a sell-off to fill the gap. I mean, if things really get bad or AKA bank stocks sell off. But like I was saying from the morning, I wouldn't be surprised to cuck around the 200-day, but we'll find out. It's very, very slow day. Probably one of your slowest CPIs. I know it's a very average response, but let's check where we are at now. Yeah, it's just slightly below average. So this is where we are today. Hold on. Hold on, it's glitching out. So this is you right now. I think you're actually right around here. So this is average. This is a above average, but still borderline average. Still very small, especially compared to the last couple of CPIs. It has been taken. I mean, they said most of the gains came yesterday, Euro close, but felt like the opposite. But here was, Euro close yesterday was kind of the same. You worked your way up, and then you sold off leading into Euro close. Then you had one little pop, and then you ended up selling out. Then you kind of stayed the same level, but you did ultimately end lower than Euro close the last day, and I think Thursday too, or Friday was like that. Brown says hopes the Fed will pause rates next week. Who's Brown? Who is a Brown? Brown says he believes Powell will investigate SVB properly. Who is this? Who is Brown? Josh Brown? I don't think it's Josh Brown. I don't think it's UPS either. It's not LeBrown. No. Sherrod Brown? Josh Brown? It could be the congressman. Mark Zuckerberg warns in layoff announcement, prepare for new economic reality. Atlas Copco to buy U.S.-based vacuum service provider. No company listed. Oh, I think it was Judge Joe Brown. Yeah. Yeah, my VWAP is tripping out today. Zucker Cyborg. Just contact your service provider and make sure they allow short codes. That's usually that fixes like 90% of the problems. You in the Twitch chat today? Let's go, Anthony. Let's go. It's a good day to be in the Twitch chat. It's a good day to be in the YouTube chat. It's a good day to be in the markets. It's a good day to not let the markets upset you and be living through history, man. Y'all are getting some valuable experience. Valuable experience. I hope they feel me. Yeah, Ken Griffin took a 5% stake in what's it called, Western Alliance today. Tessie. Oh, Tessie. And then Pac W still going up. Someone just keep an eye on any of the banks. Tesla is ripping up here, and Euro Close is already in play now. So this is first minute of Euro Close. Yesterday looked very similar. So yesterday we sold off leading into it. Then you popped for 10 minutes after Euro Close, and then we came back down again. But right now, Pac W is still on the high. Tesla's leading up. NVIDIA has been up all day, and then all of the other ones are up there. Johnny, welcome, man. Game over. Flag taken. Flag dropped. Flag taken. Double kill. Game over. UAV online. We'll get him again next time. The banks are failing. Bank run out. Cover me, I'm reloading. Yeah, the Halo voice is a classic, man. Flag taken. Flag dropped. Flag taken. Flag dropped. Capture the flag. Chips have gone back and forth. I remember, August, we had a great short on the chips. They died from there. And then towards the end of the year, that was like the hype trade on the way up. So a lot of things are running up now. Let's see if we could get past. You could kind of neutralize this, but I'm still kind of paranoid considering how yesterday traded. So I'll just see if we could. If you do get a pop, just watch when this thing sells off. Because if this pop sells off and we hit a new low, that's not going to be good for the next hour or so. Two-year rising, but 1 and 3 month are holding steady because the 1 and 3 month only move with the Fed. So the range of the 1 to 3 month yields is going to be 0.25% no matter what. Why? Because it's determined by the Fed. The 1 to 3 month is pretty much short-term or overnight funding rates are practically the same. So the 2-year is going to move more, especially since the 2-year moved up and down tremendously in the last 2 days. You got to realize this. This was the 2-year bond, 1 to 3 years. They shot up, new high, and then instantly coming back down. So even if they move up today or down, you just got to apply them to the context of where they've been at. AMC resumes, falls to session low 18%. Moody's has cut their outlook for the U.S. banking system to negative from stable. I don't know how I feel about that. That's kind of big. I'm surprised the market's not reacting to that yet, but that's coming out right now. Moody's has downgraded the United States banking system to negative after lending. That's just the broader banking system as a whole. Oh, you saw that hours ago? I'm getting a push notification for it now. You guys are saying you already got it. Oh, I'm gonna say, I was like, I'd expect a bigger reaction, but even then, we went up on that. Overkill. They just wanted to put it out, freak people out a little bit. So just in case you didn't hear about it. Next comes S&P downgrading. That'd be insane. Either way, man, just remember, I hope you guys are ready. Remember what I was telling you 3 months ago at the beginning of the year? And I just said, watch out, because how we even start this year, it may not, your mentality is going to change, but like, we have so many events ahead of us. We have to deal with all of this stuff. We got to deal with Powell. We're dealing with a bank run now. We still don't know what's going to happen with the debt ceiling. And it's just like, and now with the bank run stuff, I mean, it's crazy. So I just hope you're ready, because these next couple of months, I mean, it's still going to be another 3 months till we actually even get close to anything related to the debt ceiling. So just get ready. Moody's is a credit rating agency. So there's like 3 or 5 of them. There's like S&P Global, Moody's. There's one more I'm blanking on, Fitch. And they pretty much, their job is to go over things that offer credit and give them a rating. And they kind of just establish the credit scores of companies and any issuers who raise money via debt. What's the name of the company that could cure the knee meniscus in grown adults? Is this a biotech? I don't know. I don't recall. I remember the TikTok ad. There was a guy on TikTok who was showing surgeries where he would cut people's legs open and put like retractable metal things in there so people could get taller. And then you'd watch the video of them trying to run a lap afterwards, and then they would fall. But then like 6 months later, they're like, look, I'm 3 inches taller. And then I watched all of the videos because I'm short, and I was like, this is kind of interesting. But then I realized the cost-benefit analysis, it wasn't worth it. But that's the only thing I could recall. I don't remember. It does sound like you're talking about a biotech, though. Only PPI could save the Bears now. PPI has some elements of real estate that people will try to tie into today's CPI report. But overall, though, I think you need something big. I think it's only going to be the banks that are going to be able to move us from here. I'm not going to be saying that after you get picked up by the Lakers. Ah, man. No, that's a real story, though. There was like this guy on TikTok who went viral. He was like a doctor, but like he was just advertising to all the short kings. And he was like, look, I can make you 3 inches taller. And like, dude, you saw the weirdest like range of people. There was people who were already like 5'9" and they wanted to be 6 foot. And then you had guys who were like 5 foot who wanted to just be 5'3". And I was just like, I don't know, man. I think it's not. And then they would like, they all walk funny. And it's just like, dude, it's an intense ass surgery. And I'm like, I'm cool at 5'6", man. I'm real cool. I'll just wear like a pair of Alexander McQueen's or something if I wanted to be 5'9". But it's like it was just weird. It was just weird. At 5 foot, oh man, nothing wrong with 5 foot. I think if you're 5 foot tall and you're a guy, you just got to go hit the gym. That's it. Just like every other, that's your home. Like you haven't realized it. That's where all the short kings live. That's it. The guys in the gym got the right idea. This guy's like, I'm never going to grow. I'm 5 foot tall. You know what he started doing? He started benching 375. So that's what you need to be doing right. It's easier for you to bench. Trust me. I'm speaking from experience. So that's what you should be doing right now. Like, just get super swizzed, and then that way you balance it out. And then if they make fun of you, you beat them up. Okay? I got you. I got you. And you are popping, what is that, New Jersey Res Corp? Is 5'7" short? In today's society, I mean, you got to take that up with the ladies, man. But all I know, I did good at 5'6", bro. I did good at 5'6". You know, I was able. I held my own, and so can you. I'm 5'10", still called short. Nah, man, you just not around supportive people. You know, because like I'm short as hell. My girlfriend, she'd be like, "You look so tall today." She's like, "Oh my gosh, you're so tall." I'm like, "Thank you, thank you." All my friends, they're like, "Wow, did you get taller?" That you just around the non-supportive group. They be like, "You 5'9" short." You like, "What? You're dropping now." No headlines. Okay, that's not good. Like I told you, Euro close. You got the bounce. You broke the low. Starting to feel a little bearish on it now. We'll give it a little bit of time, but I mean, I wouldn't get bearish till you break 39.06. But if I'm gonna speculate, it's kind of looking like the last couple of days, so it might not go that low. That's why you might be able to go to 39.07, 39.06 and bounce. But as of now, you might repeat this whole again sell off by 9:30 here. Euro close. It's not been pretty. So. We're still holding up, though. NASDAQ's still 2%, so I don't know how worried or bearish you could get off of that. I'm 6'2". Listen, man, if y'all are above 6 foot and you're in the chat right now telling me how tall you are, I'm disappointed in you. Because if you're above 6 foot, I need you in the NBA. That's all I'm saying. That's all. That's it. God relegated me to the stock market because I'm 5'6". Otherwise, y'all are 6'2" out here. I need y'all doing defensive slides. I need you to work on boxing out, okay? And then dribbling with your eyeballs up, okay? I need you to look up while you dribble. That's what you should be focusing on right now. I'm 4'9". You're in the right place, sir. You are in the right. You're exactly where you need to be right now. And there's a lot of upside for you. No pun intended. But let's, I'm glad you're here. I'm glad you're here. I'm 6'1". I wish I was in the NBA. And now whose fault is that? How much time did you spend this week boxing out? Exactly. You become what you think about. If you become a box out, you'll be good. That's it. I'm so mean. I'm not mean. It's okay, bro. I'm your brother in short arms. I got you, bro. I'm not trying to be mean. I'm just trying to, trying to guide people to their natural abilities here. So I don't know why they're hating on me. 5'4". Look at all I'm realizing is you guys are my brothers. Let's go. I'm 6'3". That's a shame. I played post and with guard. Now you're talking. Now you're talking. CDIO. Oh, didn't we see that like 3 days ago? Cortiva's on the low. Yeah, CDIO is up 38%. I love you more knowing your height now. Thank you, man. That's good. My girlfriend likes it when I talk about my height, because then none of these other hoes is going to come after me. So, amen. Amen, bro. It's good. Trust me. That's a good. I've lived through this life, man. I've lived through this life. I'm motivation. I hope all of you work hard, because you have to, because we're all short now. So it's good. You should have made the NBA. Muggsy Bogues can't. Hey, listen, 6'2". Okay, this isn't about me, 6'2". Okay, I'm old now too. Okay, I don't got good knees. I had my shot. I blew my shot. Okay, I could have been Muggsy Bogues. I should have been little Allen Iverson. But you know what? You know, this ain't about me right now. Okay, I'm the coach here. Okay, this is about you. Still got the height. Okay, that's it. You still got the height. I don't know why you making this about me. How you gonna turn this around on me? You say you could have been Muggsy Bogues, man. I could, of course, I could have. Habibi Iverson. When I was balling, it said Nikes. And then you're going to think about me when I am gone. Habibi son. Okay, I tried. The Weimar Republic rally. I don't think they had any rallies in the Weimar Republic during 1940s inflation. I don't think they did that. I think when they had a bank run, it was a legit bank run. It's okay. Just remember, the market is a 1997 Honda Civic. It's going to take a lot more than you think to get that thing to stop running. That's all. That's why once you realize this, your life is going to change forever. When you understand the similarities between the S&P 500 and the 1997 Honda Civic, your life is going to change. Then you're going to make way better trading decisions. Because you're going to be like, that makes sense why it's still running. It's very hard. It's very, very hard. Yeah, Meta is up 7%. Meta just cut another 10,000 people. I got an ad for therapy. Uh-oh. Okay, that means you've been taking out the stress to the computer. You've probably been looking up on Reddit. You like, how can I trade less emotionally? I don't feel good today. You got to be careful. Those ads will get you, man. That's it. Google is like, yo, we think he's going to click on it today. They ran the numbers, and they thought it was the best ad to give you today. Just Google churches near me and see how that changes your ads. See what happens. Thanks for reversing it. Oh, Jay, I didn't do that, but you're welcome, man. You're welcome. 2023 stock market type R. Yeah, it was looking like a type R in the beginning of the year. Now it just looks like a SI. Your account hitting all-time highs thanks to Meta. What should I YOLO into next? Google? I don't know, but if you're going to YOLO all of it, like I said, you know, if you make the wise decision to give me half prior to said YOLO, I will have a nice Vegas trip waiting for you. That's it. I hope, can we do that one day? Can like somebody who wants to just do like a fat YOLO, can you just like give me half of it and we go to Vegas? That could, honestly, we could just like, we could fund some parties here. Like if we get like one person a month who's just going to be like, yo, I'm a YOLO it all. And then we're like, no. And then they go and then like, boom. Like we could just party in Vegas, call it a day. I'll have a trip set up for you, man. You ever had carbone? I'll tell you, I got some nice Italian food we could try. I'd love to show you some new food, man. Or we go after. I'm sorry, you need to put the deposit down today. Limited time only. Limited spots. Doesn't matter how tall you are as long as you walk with your chest to the sun. I just saw that, BD. Tell him. Amen. Amen. So if I YOLO all of my $10, I give you half and we could go to Vegas. No, asshole. Okay, at that point, you should have just been taking the $10 and building it up slow and steady in the long term until you found a good opportunity you could take. Okay? That's it. There's no way your account is at $5 right now and you've spent this much time here. It's impossible. It's impossible. This bounce is whack. Well, there's your red candle. Cat CEO says chip availability not back to pre-pandemic. Cat CEO says real challenges in supply chain. So Caterpillar CEO, it's not even moving the stock, but that's the only other headline I see coming out right now. Cat CEO is talking about challenges on supply chain. I don't know. That could be it. I would expect if that was the reaction, I'd want bigger moves. But like I said, just watch for 39.07 here. I wouldn't be surprised if we come down a little bit. But you're doing the post-Euro sell-off. News on wire over American drone over Black Sea. I don't see that. But we'll see. I mean, check easy ways, check defensives, if anything of that nature. LMT did get a pop on that, interestingly enough. LMT and RTX. Maybe. Watch out for that. Is that it? I mean, I don't know. Some people in the Twitch are bringing that up too. But LMT is moving off of that. You said Black Sea? I don't see anything. A Russia SU hit the propeller of a U.S. drone over the Black Sea, causing the drone to crash in international waters, U.S. military says. It could be it. Good call on that, Chad. But that's circulating in like some other places, though. It's not necessarily, it hasn't hit yet as like breaking news, but LMT is catching volume off of that. Yeah, Russian. Black Sea's Russia. Isn't that Russia, Ukraine? So a Russian jet hit the wing of a drone, and then they both went down in waters, I think. So see, that could be it. Just watch LMT and the spy. That could be a little update on the day, but other than that, that would be the only thing correlating here besides the normal kind of downtrend we've been getting at from Euro close. Just the drone went down. CPI came in hot on the last 3 months. The number was in with expectations, and pretty much CPI today just solidifies and cements 25 basis points. So it was the same as expected. Overall, though, it came in hot. And over the last couple of days or couple of weeks here, inflation has been coming back up after that temporary blip of it going down. Russian aircraft collides in the unmanned system. Yeah, there it is. US-EU comm. So now that is officially, that's circulating across all wires now. Bro, good hit on that, bro. Some Chad just posted that in there. I love it. Way to source that. Good work. And then it correlated with the LMT, even RTX. So let's see what happens. I mean, I don't know if that's immediate puts, but it's at least some sort of update today. Yeah, Russian aircraft collides in a U.S. unmanned system. DDD doing the opposite. All right, well, you're starting to break a little harder here now. Still up 2% on the NASDAQ. That's the crazy part. SPY is down 0.5% from the highs, but NASDAQ is still holding up pretty good. 39.14. You got like 7 more points. It might correlate with VWAP. NVIDIA's up 20 from the lows. NVIDIA's been unstoppable from that little AI earnings. It's actually insane. I'm surprised it affects the markets. Don't be. Do you not remember? It was about 3.5 weeks ago. The number one story of the day was us shooting down shit from the skies. So it's very, very big. Very, very big, Habibi. Several times before the collision, the SUs dumped fuel and flew in front of the MQ-9 in a reckless, environmentally unsound, and unprofessional manner. The incident demonstrates a lack of competence in addition to being unsafe and unprofessional. They're like, yeah, we just lost the $20 million drone, but the pilot was very not friendly towards the environment and just honestly it was super unprofessional. That's all. Like, we're not going to declare anything and we have nothing to escalate and it doesn't have any other implications, but I do want you to know that that was very unprofessional and it just was not good for the environment at all. What? So that's the little reaction. LMT still going up. Nothing else. Other than that, though, we were kind of just losing steam from Euro close. What happened in the Air Force? There was just a Russian aircraft collided with a drone over Russian or Ukrainian territory. See the dollar. I have SHI up there instead of IEF. Dollar is climbing up a little bit. Meta still hold. Bonds even came up somewhat there. Bro, the bond moves in the last couple days. Are you all freaking out with me? Because y'all know every time the bonds freak out, I start to freak out. I don't know if you've realized that, but do you guys know that the market is pricing in rate cuts all of a sudden for this year? After 2 weeks ago, it priced in no rate, after it was pricing in no rate cuts. And then 4 weeks before that, it was pricing in rate cuts. Yeah, that doesn't really happen that often. Bonds, Fed futures. I haven't even checked there so far today. I don't think the odds moved too much. Roughly the same since CPI came out. Bostic saw the future. I know, right? We were all mad at Bostic, but he said 25 basis points, but he didn't explain that it would take a bank collapse to get there. That's what people were talking about the other day. They were just saying, be careful what you wish for. Everybody wanted the Fed pivot or a Fed pause, but under these circumstances, or if it's as a result of a financial instability, people would have got what they wanted, but not how they wanted it. Nothing happened. I mean, we were just dumping there. We've been selling off for a solid hour now after slowly melting up for 2 hours prior. You just had that Russian news there, a little bit of a move, but that's it. The Fed said something is going to break. Well, they said they're worried about it. I don't think the Fed watchers said something's going to break. The Fed was just kind of like, the economy's very strong, okay, so we don't need to see the raise the rates, okay. So I think we're doing good. OpenAI introduces GPT-4 text generation AI system. Okay, so now you could have an AI for your AI. Okay. Wells Fargo, Bank of America lows, good call. LMT is running up now. Yeah, XLF is only up 1.8. It's coming down. PAC-W, they gave up the gains from earlier when we first started dumping. Western Alliance is dropping. The banks are starting to drop right now. So great call on that, because let's see if that actually ends up dropping here. I wonder, because now when the banks were going up here a little bit, some of them like PAC-W, we were going down. Now you had this little bounce, but during this whole little bounce on the SPY, a lot of those banks that ran up the most today are coming down now. And then LMT is running up. Riot is on the high. So is Mara, 16%. Even GLD. GLD's red, but it's on the high. NOC, yeah, it looks just like LMT. LMT's been just trying to get above the 487 for a while. That's where we're at. 487 has been very stubborn for your boy. Bond fear. Bonds are climbing back up. That is, if anything, with like the banks or whatever, like if you take the bonds and flip it upside down, it looks like most of the banks today. Yeah, we have talked about the drone colliding. That was like right here. We just got that news a couple of minutes ago, but it is confirmed. And all you saw was a couple of the, what's it called names? The defensive names like LMT, RTX started moving up, and that was it. The dollar Cliffording. Yeah, I think it's bonds right now probably, because even though they're kind of bonds really aren't even down that much anymore. Bonds have recovered 0.5%. They were down 1% on IEF, but I think that's kind of probably the biggest change here since middle of the day is that bonds are back up again. Tesla again, though. Tesla? No. Tesla and Meta, they've kind of been in their own world. Meta's still going up. I mean, Meta had the job cut news. Tesla. 3M at 102. And then bonds are catching a bigger bid here. Watch if any of the other banks start coming down. What's DPST? Regional bank. Yeah, deposit. Duolingo launches Duolingo Max powered by OpenAI. Some more AI news. Duolingo. It's up 1%. SPY is coming down. Pinduoduo. China names could be doing their run here again. That's what happened on the first set of draws, but you are coming down. I think banks are leading it down as well as bonds there, and then a couple of your tech names like Tesla and Meta are going up. But you're about to break here another mini level, 39.14, but now you're below 39.17. Not a good sign, but 39.07, that's pretty much going to be your final point until 3900. So let's see. Not everything's moving. I think it's just the banks, though, right now. banks and a little bit of bond clapping. But high ticker is running, and now Caterpillar. Remember, the CEO was just talking. They're actually going a little lower. Risk off. I wouldn't say risk off, but I definitely think just momentum cooling down. And then all of that stuff there from the morning with the banks is just, chilled out there. Putin making comments about Nord Stream and U.S. involvement. OpenAI, Morgan Stanley Wealth Management deploys GPT-4. So Morgan Stanley, too, getting some. And then Wolf, WULF. They said they have no cash accounts at Silicon Valley, but they had 250,000 at deposits. And then Mary Barra, GM, says GM is trying to boost production of Hummer EVs. Oh, Raul, welcome back. Again, banks keep slipping here. Bonds are coming back up. You're approaching 3,900. You had another attempt at the 200-day right below, but you didn't get there. You're now 26 points from the high of the day, which was roughly about an hour and 20 minutes ago. So take that as you please, but you're approaching now 39.11. So these next couple of points here could be pivotal. Putin says Gazprom found object that looks like antenna near site. United States was interested in undermining Nord Stream. Raul Flooring Services. 39.10. Slowly giving it up. Again, it's been pretty constant since Euro close. I hate seeing that. It's just once it starts just downtrending from there, the last couple of days, it has continued. So hopefully it could hold up here. My fucked up VWAP is saying this is VWAP, but again, I think you got like 39.50 on the SPY. That should correlate with the 307 or whatever. Banks go poof. No bank news, but they're giving up. Something could be happening, and we just don't know yet. Like that, I wouldn't be surprised. But all of the banks right now are just giving something up. Like Schwab, again, they're all green, so it's like it sucks because as they go down now, they're all holding massive gains, which makes sense why we're up so much. But they're all hitting the lows right now, or making a move. Like Wells Fargo's dumping, Bank of America, something's happening. I don't know what it is, but bond yields climbing. All of the banks are giving up. It could be normal with today, but I mean, given the heightened paranoia, I think it could be anything right now. And then pause odds are still 20%. I mean, they're same odds as where they were at yesterday. So now I think you just broke below the level, 39.07. So watch out here. Yeah, if we go lower, we're dead. You may be able to flush to 39 and then bounce, but if you don't hold these, I mean, I'd say gap fill may be able to approach. Biden briefed on Russia jet incident this morning. Macy's is expanding partnership with Reebok. MPW, they're getting washed. Thessalonian Wall is printing on the low again. A lot of regional banks are going now. That's crazy, actually. Bro, Western Alliance, they're still 20%, but they were up 50%. But now they're still all below the levels. Okay, get ready here. This is it. This is big. 39.07 broke. So watch where we go from here. I'm going to put out a stream alert. I'm just adding. So 58% of your audience is wrong. Damn, bro, why you coming at them like that? You say 57% is wrong. What I say is that 57% haven't even voted yet, and they wait till the last second because they want that dopamine to know they were right. But technically, we're still up 1.8% on the NASDAQ. Yeah, Wall just got halted. Watch Pac W. They were the other. Pac W starting to go down now. Okay, this is kind of creepy. Welcome. This is how you just know there's fear in the market, because even if all these names are still up 48%, everybody's kind of going to get sketched out right now if all of these start dumping. Yeah, there's other names like AMD that held up and are slipping now, but I would be watching these banks here. FRC is halted now. Pac W, they haven't been halted yet. Them and Schwab still kind of in the game, but it's starting to go down. 2 bank halts right now. Yeah, NVIDIA now too. AMD. Tesla even came down. Meta's holding up a lot better, but I'd be more worried about the banks here. Do they halt Pac W now? Even Wells Fargo. Bank of America is about to go red. Yeah, Pac W's halted now. So they just, all the 3 that moved the biggest today, all 3 of them just got halted to the downside. I think it's just off of movement. It's not off of news, but people will be a little shaky, you know? Pac W, no, it's halted. I just got it across the wire. Pause due to volatility. All of them. I mean, they all had big news. So everyone's like, Schwab is good to go. You don't have to worry about Schwab. CEO comes on. WAL, Ken Griffin bought 5%. And then Pac W, I don't know what's going on there. Yeah, bro, you're going back down again. 39.02. So, again, if we break 39.02, there's potential downside to 38.57. So, watch out for there. But, yeah, ever since the euro closed, though, this is not the formation we wanted. But you still have a lot of cushion to still be green. So, SPY could fill the gap. I don't know if the NASDAQ will. Dollar's not moving. The only thing that moved was bonds and then all those individual banks. I think people are just getting nervous off of it. Because that's it. Even if I don't have news, everyone's looking at those and you're just going to be like, what? What just happened? $90. Yeah, we had the Russian news. We were already dropping before there, but this was the Russian news. And I would keep in mind like LMT and any of those. But right now, too, I also think the banks, they're kind of doing something a little weird now. Last thing you want is just like later in the day, you don't want to watch those banks sell off. I hope you guys get it. Because did you hear my first assumption? The minute the banks start going down, especially later in the day, what is your first thought? You should have one. You got to think about it. And new low of the day here, at least intraday. You are going down there, so 3,900 now. That is now broken. You only have been there under that one time today in the morning, so this is not holding up. Uh-oh. Yeah, you're thinking bank run, or you're probably thinking there's more news that's going to come out. The fear of after hours news or some update, that could be a problem. Microsoft is opening up OpenAI's GPT-4. No bank news for now. We're just seeing all of these other things halted. All these bank stocks are halted now. Some of the banks might go negative now. You just had the Russian news, but even defensives like XLF's only up 1%. The first industry, healthcare, is about to go red. Healthcare is up 0.08. It's about to go negative, and then staples are at 0.27. Financials are no longer the leader on the day. Communication and Facebook is doing better than banks. Bank of America on the low. XLF keeps selling. Damn. Yeah, a lot of banks are halted right now, but you're now below 3,900. You're about to go below the lowest opening candle now. Where does that put us pre-market? So you're about to get to CPI level. So you're about like 1/10 of a point away. This is where CPI came out, and now we are selling off. Wow. Early CPI, so watch out. 38.57 is in the books now. You might be able to get there. The Chicles are coming in big. Whoa, whoa, whoa. FRC unhalted. Apple is starting to gap now a little harder. Yo, something just snapped, bro. The Bank of America is red now. I think it's something with the banks. We don't have the news yet. And then FRC, I think people are just tweaking out now. WAL halted again. Yeah, that was almost 10 points in the candle. 38.90 to 38.99 to 38.90 in 2 minutes after breaking 3,900. Again, that was a big level. We were looking great. You got volume coming in, so let's see if this holds, but you really haven't had a bounce here in like an hour and a half. FRC is still unhalted. Apple starting to dump. And then Wall got halted again after getting unhalted. Putin says several explosive devices were used on Nord Stream. PAC-W. I think it's just bank fear. That's it. PAC-W's unhalted, but the banks just started slipping. You had the Russian news, and now the bonds are rocketing back up here again. But I think it's more along the lines of, I think if the banks start selling off big, people are just going to be worried about news. That's the only thing I could think of right now. But you just broke all those levels. So this was big, and just watch out for 38.57. Otherwise, you might get a decent bounce here, and then we'll hug the 3,900. That kind of picked up there. I'm going to put my finger on the banks, though. Putin comments on Nord Stream. Bro, did you hear that? I don't know. I'm surprised Altria is not reacting. Apparently, California wants to ban certain, if you were born before 2006 or after 2006, they're not going to sell you cigarettes ever. They want to ban it for everybody. I'm surprised MO's not down on that more. Assembly Bill 935. Anyone younger than 16 today would not be able to buy tobacco ever. You're like, that's cool, but guess what they can do? You will be allowed to buy weed. No. They say as long as weed doesn't matter, but cigarettes, if you're born after 2006, you will never be able to buy cigarettes ever in California. Charles Schwab, CEO. Oh, yeah, he should be there, huh? Well, banks have already moved like 15% since he was there. Is this it?
On many times with you before, and so I just want to apologize for that. If I would have known, I likely
Honestly,
would have been on. But
the setting he's in right now and the audio quality makes me bearish.
Today, and we have to address what's happened with your stock first and foremost. It's not necessarily the first place you'd think about for contagion after a collapse of a bank in Silicon Valley that did a lot of lending to venture capital firms, but that's what's happened. Your stock is down almost 30% over the past week, including today's bounce. Why?
Well, I think there's been a degree of confusion on two sides of our firm. The first one is the difference between a brokerage operation and a banking operation. I see people speaking about FDIC, and they have a fairly good understanding of that when you deposit at a bank. The bank takes those deposits and invests them. They are part of the bank balance sheet. And then the FDIC provides insurance up to $250,000. At least that's the way it's been since, I believe, 2008. Brokerage assets are completely different. So we have about $7.4 trillion that clients have entrusted us with at Schwab. And over $7 trillion of that sits on the brokerage side. Brokerage assets are held separate. They are segregated from Schwab assets. This is done under what's called the SEC Consumer Protection Rule. And so those assets are not commingled with us. I even have heard some pundits talk about SIPC and tried to compare it relative to FDIC. And of course, there's no comparison. These are segregated assets, and SIPC kicks in largely only in a situation of fraud. Of course, the SEC requires us to report on the segregation, and we do so regularly, and they audit it. So I think that's the first bit of confusion that went on. People began to conflate SIPC and FDIC and didn't really understand the segregation of client securities from the rest of Schwab.
But you do have deposits, right? I mean, you do have a pretty robust bank business inside of the company.
We do.
And that, I think, is where the concerns are.
We do, and that's the second one that I want to try to address. Our bank is very conservatively managed. If you look at the holdings of the bank, we have about 10% of client deposits outstanding in loans that are over-collateralized almost exclusively to our clients, very, very low risk. And then we have about 80% in U.S. government-backed paper. Within that, effectively, you're operating with virtually no credit risk. From a liquidity standpoint, we have access to very substantial liquidity. Arguably, we have a level of liquidity.
Our liquidity is so substantial, we have access to substantial liquidity.
Our entire bank sweep deposits, around $280 billion. So I understand that there were banks that got into trouble. We have a reasonable understanding as to how they did so. But those applications, we don't believe, apply at Schwab at all. We do understand, though, that when our stock price went down at a rate that was in some manners consistent with some of the regionals, that people easily put us up on slides and talked about us in a manner consistent with some of the regional banks. Completely different model, completely different. You mentioned earlier that 80% plus of our deposits in FDIC insured balances.
Are insured.
Banks that have run into trouble are at fractions of that number.
But as you say, you've been swept in. Have you seen any deposit outflows? What are you seeing from customers?
No, actually, what we're seeing is asset inflows to the firm in significant numbers. So in February, our clients brought in almost $42 billion in net new assets to us. March to date, they've averaged about $2 billion a day. Interestingly enough, last Friday, when we were maybe at the heart of the peak maybe of some of these challenges before the actions taken by the Federal Reserve around liquidity, our clients actually brought about $4 billion into the firm that day alone. Another interesting factoid, the number one stock that our clients bought on Friday was Schwab stock.
Schwab. Yeah, saw a bargain out there, I guess. So, as I understand it, Walt, there are concerns about this so-called cash sorting.
Like,
I don't want to get too esoteric here, but this idea that clients have been moving money from deposits into
liquidity.
money markets, for instance, and that really pressures margins. We've been seeing that. Has that accelerated? Is that something to be concerned about?
Nah, we don't fucking worry about shit.
Well, we haven't seen an acceleration.
Let
me just quickly walk through what that is. That simply clients moving assets from transactional-oriented accounts, like a checking account or a brokerage sweep account, into a higher-yielding investment. It might be a CD, a money market fund, a treasury security. That's a good thing. That's what we want clients to do with their investment cash. In fact, we reach out to clients by the thousands, by the tens of thousands every day, encouraging them to do so with their investment cash. It's the right thing to do for clients. It's the way we operate our firm. And we think it's a very prudent action on their part.
And then you address the concerns about unrealized losses. Can you just put some perspective on this for us, what they look like on the asset side for you? Because I hear that you do have a deeply underwater mortgage portfolio.
Well, it's not a mortgage portfolio, it's a security portfolio. So let me talk a little bit about this concept of paper losses in a rapidly rising rate environment. So again, I'm going to contrast our bank to a typical bank. We only have 10% of loans outstanding of our total deposits. We're holding 80% U.S. government-backed paper. So we go and buy securities with these deposits, and we look to match the duration of those to client holdings. If you look at our overall portfolio, somewhere around three years, somewhere in that range is the duration of this almost exclusively U.S. government-backed portfolio of securities. Now, we have to be realistic. Whether you are making loans out of a bank or you're buying U.S. treasuries or any government paper, anyone who has done any of that in the last handful of years is sitting on paper losses. It's not unique to Schwab. In fact, if I were to go back to my early career as working in the actuarial area in the pension world, I think a 30-year mortgage at, say, 3.5%, as was talked about in an earlier segment, on paper is probably worth about half of what it was originally. So yes, we have some marks, because paper marks, because interest rates have gone up so rapidly. But those marks are not relevant unless we were to have to sell. And we don't see any reasonable scenario whatsoever that we would have to sell. I guess
especially if the Fed will loan you $25 billion.
If you were investing your money at a bank, would you rather be at a bank that takes your money and has it in U.S. government-backed paper, or would you rather deposit as a bank to a bank that is lending it out on, say, a 10-year commercial office building or a 30-year residential mortgage? These are all the reasons why, again, Schwab has been a safe port in the storm for 5 decades, and we are the same safe port in a storm today.
I'm so inspired.
The difference between you and the big banks, between some of the regional banks and you and others in Silicon Valley Bank, unfortunately, and the big banks, is that because of regulations, it gets excluded from mark to market from capital ratios. Is that what got us into trouble here? Is that what got Silicon Valley Bank into trouble here?
Well, it's difficult for me to speculate on Silicon Valley Bank and all the issues that may have played in to what unfolded there. I will say that we didn't have any direct exposure to them, given the conservative nature of the way we operate our firm, or any of the other banks that are in the news today. But we do have an unusual scenario around the way we treat these temporary paper losses, and that is if you hold a security, you publish it, you're transparent about it, and you make sure the whole world knows about those on-paper losses. Whereas if you hold those loans I talked about, a commercial mortgage on an office building or a residential loan, you don't mark those. And so the whole world doesn't see the paper losses that would have been there. Again, I would prefer the transparency. I think most investors would prefer the transparency. And I think most depositors would also.
Now.
So enter the liquidity solution here that we got from the government Sunday night, ensuring the uninsured depositors. I know that's not the primary concern for you, but the liquidity facility, the bank term funding program, and I know you said you don't have to tap that. Would you ever access that at a time of a crunch? How important was that step? Or do you think there's a negative stigma there?
Well, again, it's difficult to say. I know that they're going to disclose those who utilized it in a couple of years. I guess I would say this. We don't see any need for us to access that facility. If the need were to arise, well, certainly, then we would consider it along with other liquidity raising opportunities. But we don't see any need to do so. We haven't at this point. And our liquidity needs are being met by just our normal operations of business. And those are the things that we, again, have been transparent about for a long time, where we would go in the event of spike in rates. We would issue CDs, and we would look at our relationship with the FHLB, as well as we have tremendous flows from new clients. Again, back to the metrics I talked about earlier. $2
Did we
billion
go back
a
below
day coming in,
3,900?
$4
Yeah.
billion, and on Friday
So
alone,
we're still in
there's
the
a lot
danger
of cash
zone,
that
but
comes in along
we're
with
hoping
that.
his speech calms down the bank stocks.
We'll look at it if we need to, but we just don't see it on the horizon right now.
You also have a pretty big investment advisory business, Walt. I wonder if any of that has been affected in the last few days, just around the perceptions of risk around the firm.
Sure. Well, back to my opening apology, Sarah. That's in part why I maybe didn't find out about your request until late last evening. I spent most of yesterday engaging with our clients, serving them, talking with them, listening to them, because that's what's really important. When you have a diversified client base like we do, 35 million clients across all types of individuals, investors, traders, investment advisors, as you referenced, that's great diversity, and it provides tremendous stability for our firm. What I've heard from the advisors that I spoke with yesterday is great confidence in our firm. Most of them have utilized us for decades in serving their clients. They know how conservative we are. They know we don't take risks. They know that our viewpoint is it's OPM, it's other people's money. That's why we buy conservative securities. That's why we don't go out a long way in terms of duration. And that's why we maintain access to liquidity in the way that we do. So the RIAs are comfortable with what we're doing. It is important, though, that we continue to educate those who may not understand this segregation of client securities from all other assets at Schwab. That is an important message, and I don't know that message has been delivered as well across the press or, in fairness, by us at Schwab as it could have been.
Okay, fair enough. So what regulation, Walt, ultimately do you think will come out of this? Because what we've heard from the Biden administration, from Secretary Yellen, is that that's where this is heading, to prevent something like this from happening again. And we still have this mismatch between the assets and the liabilities, and I'm not sure that was fixed by what they presented. So where does all this go?
Well, the one thing I can feel confident in is we're going to see an impact in FDIC premiums, right? Because if we're going to have depositors made whole for uninsured balances, and that's going to come from banks, then we're going to have higher premium rates.
It looked like it wanted to go there, but then just got smacked down.
It just depends on how all this shakes out. Time will tell. We might have some adjustments in terms of the way available for sale or held to maturity investments are treated, things along those lines. But whatever direction it goes, we feel really confident about our ability to continue to serve our clients, continue to be that conservative, safe port in a storm.
The headline is Charles Schwab CEO says firm is seeing significant inflows.
I mean, one of the reasons that a lot of these banks, including yours, have sold off in the last few days, according to investors and analysts, is just the business model is going to change. The higher regulations, higher cost of capital. As you mentioned, higher fees now as a result of funding all of this for uninsured depositors. What are you telling investors about what that looks like? How that impacts your revenues and profitability going forward, if it's going to be a re-rating?
Well, I think this you opened it with a question about our stock price, and I might suggest that this could be one of the factors that has weighed on it, and that is just simply an uncertainty about what the future will bring in terms of earnings, really for any organization in the financial services world. And I think in time, as we better understand what changes might occur, we'll be transparent as always, and we'll be able to share scenarios as to what our earnings might be. It is possible that you could see some contraction within margins, but again, looking at us at Schwab, the last several quarters, we've delivered a 50% pre-tax adjusted margin, and adjusted is only adjusting for the one-time costs related to the integration of TD Ameritrade. So we're a very profitable firm, and if there is some modest impact to margins in a couple of points, I don't see that having any meaningful long-term implication for the performance of our stock, but time will tell. I'll say this morning, as soon as our trading window opened, I was waiting at the door and bought 50,000 shares for my personal account on right as the market opened. Much confidence I certainly have in this company.
You bought this morning. I was going to ask you if the company, if you bought back stock over the last few
So
days.
he bought CEO buys 50,000 shares.
I don't know the exact company decisions at
on
this point, given the last few days. I've been very focused on the client side. We've been buying back stock in fairly large quantities in recent months, but I can't comment here on just the last couple days. But again, I personally went ahead and bought stock. I'm not suggesting that for anyone else. That's just a personal decision for me, so I'm not promoting the stock. But it made sense for me when I saw the stock price, given my insights of the company, to go ahead and make a substantial buy.
Yeah, his report hasn't been filed yet either.
How big of a buy did you make?
50,000.
I bought about 50,000 shares personally at market open today.
All right. You and Ron Barron telling Squawk Box earlier that he was buying your stock as a result of this sell-off.
I could do far worse than being I'm sorry. I would say I could do far worse than being an investor as capable as Ron Barron.
All right, there you go. Thank you so much for taking the time and all the questions. Obviously, a lot of swirl and a lot of noise. It's good to hear from you directly.
Thanks for the invitation. And again, my apologies about missing your note yesterday.
Oh, no, you came on. That's good. And I know our viewers who have a lot of money at Schwab.
He bought Schwab.
Were potentially worried.
So he said he bought 50,000. It's not even reported yet. So I even looked up there. You don't even see it on the filings. But he announced that he said he bought it at market open this morning. He said he bought 50,000 shares. So it's like, what, 2.5 million? I think it's legal. I'm sure he probably already put in the filing. It just hasn't hit. But I don't know how I felt about it. It was really weird because I think he made a lot of clear, differentiations from some of the other banks. But it's like I feel like he would have been better off not saying any of that. It's I don't know. I don't know how I feel about that whole discussion. It seemed like it was more to inspire confidence more so than anything else. So very interesting. Yeah, he bought in at like 59 or 60 bucks, most likely. And then he ended it there. I think, it felt like he was just trying to damage control. And it's like, it's good to hear from it. And I do think like Schwab is in its own unique area, but it did seem a little bit more advertisement than not. And then he just fucking ends it with, I bought 50,000 shares. That's some CNBC shit right there. He's like, and I bought 50,000 shares. I thought I would let you know. That's just what I'm doing. I wouldn't tell you to do it, but that's exactly what I did in the middle of all of this. Yeah, it's a very low divvy on there. Yeah, I don't know. I feel like that it's interesting. I feel like the damage control speeches, I think everyone's just trying to get out there. We'll see how this ages. We'll see how that ages. I bought, so you buy. Big short before bank, kind of. But it's still early. I mean, even if you wanted to compare this to the Big Short, we're going to watch how this ages in a couple of months here. And that's kind of where we're at, unless, we see faster and quicker deterioration of the situation. But I still think that one was a very interesting speech. I don't know how I feel about it. Because, there's some stuff I agree with and I like it, but he seemed kind of defensive and weird in some areas. And even talking about the unrealized losses, the SIPC, the FIDC, or FDIC. So I thought it was interesting. I don't know how I feel on that one. I'm kind of in the middle. Uber. I have shares in Uber in the long term. But if you want to trade the news that he bought in, I mean, this is where it was at. Hasn't really moved more than 30 to 40 cents from here. But at least the banks, I think they all stopped going down there with that. I guess PAC-W is still at the low. Yeah, I don't know. First, they're all kind of near the lows here. Schwab is the first one to start going back up. And then JP Morgan and the more bigger legacy banks are moving. But that second little rally on the way down was all with the banks going down. Tomorrow's coffee on me. Thank you, my friend. I will have a coffee in the morning. I will have a coffee. Actually, I need a carbo right now. What time is it? It's 10:40. How come I didn't go and get a carbo? I should have got a carbo. Cabo? You guys want to go to Cabo? I'm down. Okay. So I'm going to go to the bathroom and get a carbo. Follow me on Instagram at The Trading Fraternity. We're above 3,900 now. That was our little freak out. Let's see where we end the day. You got 2 hours and 20 minutes. We love you. Follow me on Instagram at The Trading Fraternity. God bless you.
A 25 basis point hike going into next week. But I got to say, in the next 5 trading days until we get there, is there a game changer?
It could have been today with the CPI. I mean, yesterday we were swinging a little bit towards no change next week. Today we're swinging a little bit back towards the 25 basis points. And as Mike mentioned, it very much depends on whether these efforts that the regulators have made and the Federal Reserve help to calm markets between now and next week's meeting. So our published forecast is 25 basis points. We're watching very closely like the Federal Reserve. We'll see. But, you know, maybe we'll end up at the 25 basis points next week.
Nick, a quick follow, just as much as we have been focusing on the Fed, I know you're also watching the ECB. What dynamics will you be watching unfold there as well?
Yeah, I mean, that's an interesting one. And the other focus is between 25 basis points this week and 50 basis points. And to be fair, we're still focused on that 50 basis point increase. So that's quite a stark contrast to the Federal Reserve. Couple of reasons there. Number one is if anything, core inflation is actually even more persistent over there in Europe right now, and so that's going to keep the ECB on the front foot. They very clearly signaled this move quite a long time ago, and to be fair, I think for now at least, the exposures or the significance of these U.S. financial issues not quite so much for the European central bankers at this point. So still comfortable with the 50 basis points this week from the ECB. It'll more be a question of what do they say about the meetings after that.
Nick, some of your colleagues on Wall Street are talking about how the move from the Fed and the FDIC.
Move for the Fed. He did not even sound confident in 50. He said 50 and 25, long way off. My goodness, you can't hit the like button. We're back here again. It's been a pretty wild day here. Today is CPI day, which is crazy because it doesn't feel like a normal CPI day because we'd have a lot more swings. CPI came in hotter, but in line with expectations. We kind of slowly started melting up. Banks had a huge rally from the morning, and then we started selling off after Euro close. You got news of Russia knocking down a U.S. drone, and that was around here, but then also bank stocks started dumping. You had a halt there on PACW, FRC, and Wall, and then everything kind of bounced a little bit there with the Schwab CEO kind of doing damage control, reassuring you that everything is okay. Everything is okay, sir. Everything is going to be okay. You know that? It's okay. Apple to delay bonuses and expand hiring freeze to more roles. So Apple, why are they dropping on that? Apple is shifting more workers to once-a-year bonus. Apple curbs travel, tightens approval process for budget items. Apple is more closely monitoring how often staff comes to the office. And Apple delaying business and expanding hiring freeze. What the hell? Why are we going down on that? Hold on. So if you think about it, this one's kind of weird for now because usually any sort of job cuts, anything like that has made the market go up as of late. But I think people could be reacting to more Apple. If Apple is getting fearful, then what does that mean for non-Apple? Yeah, but that might be bad news is bad news there. Interesting. I would expect it to go up off of that, especially after seeing Meta. But in that case, you are going down off of that. Apple saying we're freezing bonuses and everything else. So, yeah, maybe it could mean Apple is a little more riskier. That'll take a safe haven out the market. Let's see. I don't know. Keep watch, though. That one's interesting because that's weird. Bad news is bad news. I don't know if you're as surprised as I am, but that sort of news has been ripping stocks for the last 3 months. So in this case, though, they just said slowing bonuses, expanding hiring freeze, and the stock is down almost $2, actually. You're 40 cents away from $2 on Apple stock in 2 minutes here on CPI Day. Middle of the ship crash. Yeah, that's why I feel weird with the whole Schwab thing. It just seems like I think fear is like actually real. That'd be the only thing I could say. Yeah, Apple news is hitting again. But it just feels like once one little bad thing is happening, even if the banks go down and there's no news, everybody's kind of like, what? And then starting to react. Investors could be pricing in less money for Apple. And I just think I think people are reacting to fear that just if Apple is being conservative, what does that mean? But it's just kind of a flip-flop from how we've reacted in the past. Just, again, Meta said they're cutting 10,000 jobs. The stock is up 6.8% right now. So even on the short term today, you've seen a positive example. I needed that ad. That's good, man. I'm glad you got it. It's a humbling moment. But we're glad that you got it. Hopefully you got the news there too. You coming on early? Why would I come on early tomorrow? Tomorrow's what, Wednesday? Is it for PPI? We have PPI, but I'm probably not going to be on early. I woke up at 4:30 today. I haven't even pooped, man. Apple's hitting another low right now. You have ad block on, so I don't see ads. Damn, you don't even got a membership badge either, so you just hate me. Okay, that's cool, man. That's cool. Well, I'm glad to hear. Glad to hear, man. Glad to hear. Apple still $150, $2 in about 3 minutes. No need. I don't think we need to be that early there tomorrow. I think we'll be good. Schwab, I don't know. That Schwab thing was weird. Watch, as FITB, that's another bank, right? They're down 5% and just dying, actually. Hold on. They're not even like, bro, what's up with Fifth Third Bank Corp? Why does that bank look the worst? Options rise. First Republic, Key Corp, Fifth Third. When was everything? 3.8? They just had earnings on 3.8 and they mentioned customer deposits. Yeah, bro. FITB looks pretty ugly. That one, because that one's not even holding up your bounce. So, like, this one bounced with everybody, but you gave that up way, way earlier, and now you're negative 5%. So I figured most of the banks that sold off would still be positive, but that's your first bank that's actually turned negative. About half of Utah's tech firms had accounts with Silicon Valley Bank, per a founder of Salt Lake-based venture capital firm. They have a lot of non-agency CMBS exposure. PNC is too. MTB also. Yeah, that's the danger. So low-key, the bank worries this little bank run is still existing. So it's not, even though today felt a little cooler with a majority of them going up, you do have names that are negative now, which is weird considering this should have been your relief dead cat bounce day. But now some of them, they couldn't even make it to the bell without going negative. Didn't that guy pretty much confirm our fears? They're holding substantial losses. If everyone decided to take their money out, they would fall. Yes, and I think what he was trying to say is, like, we have so much money that even if people left that we could hold. But I agree with you in that sense where just, like, it seemed like that one reminded me of the SIVB speech from the CEO, but instead of he just worded it different. Pretty much that felt like the speech SVB should have gave until the CEO said, listen, we don't have a problem till everybody takes their money out. So that's pretty much what the Schwab guy said, but he didn't say that line. All he said was, we have this, we have all this money, we have 40 billion of access ready to go, we're getting inflows. So, like, he pretty much was trying to give comfort, but if the Schwab guy said the same thing and said, we're good unless everybody pulls their money out, it would have felt the same exact way. But I think it was more of a damage control than not. Everyone else is like the bank. He is, but, like, you should know that. I mean, if you've been watching the Watchlist, I mean, we've talked about this. I'm not worried about unrealized bond losses. Maybe you could call it Wall Street arrogance, but nobody is worried about an unrealized bond loss on a United States Treasury. Anything backed by the government, it doesn't matter if you're down 50% on it, you're going to get your money back, assuming you did not over leverage and can't hold that far, unless you were swing trading a fucking bond. So it's like the leverage or the unrealized bond losses are not the issue. The issue is everything else that would make them an issue, right? It's like if you lost all your deposits, if your liquidity in other areas gets hampered for other reasons where you can't hold, then you have a problem. So that's where I'm like, okay, I could understand that. So it's like everybody is in the problem, and we knew this from day one. If you go back to my first video on Thursday or Friday, I had the chart there for you. You know, every single bank in the world right now, there's almost $1 trillion of unrealized bond losses held amongst every single financial institution. But the problem would be if their deposits and liquidity and operating capital, if that got depleted. What happens when the government shuts down? That's where it gets weird. That's why it shouldn't happen, but at this point, that would be 10 times more disastrous than even 2011, I would suppose. They have 10% now. The bond losses just don't matter. Believe me, as somebody who loves the bonds and I freak out, and y'all know I could get bearish. I love to get bearish. But I hope you don't get I hope you don't get lost in the forest through the trees. Is that what they say? The trees through the forest? So it's all this has to do with is if you have the ability to not operate, liquidity, like upfront cash. So losses on a illiquid asset doesn't really matter if it's backed by the government. And the fact is, it still has some value, and you now have a fake Fed facility willing to give you full value for them, right? They do matter if there's other things, but it's just like you need something else for it to matter. Like let me think of an analogy for you. It's like I'm trying to think. I have a very good analogy, but it's very, very gross, so I can't give it to you. I'm trying to think. It's like it's problem number 2. It's not problem number 1. That's all. That's what I'm trying to tell you. Is that it's not. You have to before you evolve to this second problem. You need to get through a first couple of steps, if that makes sense. So it's not like if you have bond losses, you are going to go down immediately. It's like that is the second problem, but you need something else to break before that becomes your worry. So as long as you have money, you don't need to worry about it. But if that money goes away, whether it's through your business slowing down or everybody taking their money out, then you could talk about problem number 2. Then we talk about the house of cards. Then we're on the right track of, okay, this is not going to work. But as of now, you can't get to problem 2 without problem number 1. They need to lose a bunch of money, and then now the risk of liquidity will become a real big issue, or how they handle liquid assets that they've been holding. So Meta's even dropping now. Again, Apple had a little bit of a bounce, but we've had a lot to deal here with the banks selling off, and we've been pinned. I really don't like this setup. Again, you went above 3,900 briefly. You're already selling off. You're almost 10 points below the latest high right here, and you've been here for about 50 minutes within this range, and it's almost 11. You got to fight the trainers before you take on the gym. Yeah, that's a good one. I like my example, but it's a X-rated analogy. Can I earmuffs if you don't want the analogy. Earmuffs. This is for viewer discretion advised. What I'm trying to tell you is like having a small pee-pee. Okay? That's problem number 2. But guess what? You could talk to somebody and they don't know you have a small pee-pee. You see what I'm saying? So before you worry about having a small pee-pee, it doesn't mean it should stop you from engaging in business and talking to people. That's what I'm saying. Because then you guys are like, oh my gosh, all these banks have small pee-pees. And we're like, duh, everybody knows that. But it's not an issue until you take your pants off. So until the money goes down, then there you go. So that's my viewer discretion advised analogy. That's it. So right now, yeah, you could still talk like you got a big pee-pee. You could do a lot of things, but as of now, until you get past the first layer of clothing, then nobody's going to know. So as of now, the bonds aren't I'm not worried about small pee-pee bonds, okay? I'm more worried about what happens with the money and then what would make it where we find out, oh man, they do have a small pee-pee. That's awful. Does that make sense now? That's why, because everyone's like, oh my gosh, that's it. So it's like small pee-pee is not going to be good for them in the long run, but they don't have to deal with that problem just yet. And that's what we're waiting for. That's what we're waiting for. My mom heard the analogy. Well, I gave you viewer discretion advice. I'm just trying to help you understand these concepts in a more relatable way, and to understand, the deep complexity of these finances, man, because I just don't want you worried about the wrong thing. Yes, PPI is tomorrow, speaking of PPs, and yes, it can have a effect because PPI factors in some of the real estate costs factor into PPI, and that could affect some things. You appreciate the analogy, but hits too close to home. It's okay. You don't have anything to worry about until the first layer. That's it. I think it was a great analogy. I just said it wasn't, I think it makes a lot of sense. I hope people put on earmuffs. You'll be good. I just took an edible, and that's hilarious. That's weird because that edible shouldn't be reacting that soon. You might have been sold a fake. That's insane. Or you have a crazy absorption rate, which is quite phenomenal. Can I get that mom's number? You'll teach her about banks? Oh, you're down bad, bro. Like, you got to realize what you just said is worse than going on Craigslist and putting up an ad on Craigslist. So you just saw some guy without a profile picture. You don't even know what she looked like. You don't even care about any similarities. You don't even care about geography and where they are located. And then you are asking anonymously. You said, fuck it. Hey, what's up? You got a number, a phone number I could reach you at, bro? What's wrong with you, man? It's 2023, bro. Like, that's it. Just go download a dating app. Say you're 6'12". You'll at least get some. I don't know. Are you looking to talk to someone? You'll at least get somebody to talk with you and discuss. But that's crazy. That's down bad. That's really down bad, bro. You say I don't even care where you located. I have no idea. Love you. I love you too, man. I'm just looking out for you, bro. That's it. If you need me, I could introduce you to some people. You know, my girlfriend has friends. Some of them have moms too, so I think all of them do. But yeah, Apple's coming down. Thank you. Well, I love you too, Downer. God bless you. All right, 38.91. The low is 38.88. But you're starting to slip, and even Apple's coming down now, too. Or gave me an idea. You're going to change your height to 6'1". You'll be good. You'll be good. J&J, I looked at it earlier. I bought MPW today. That one's already down, but J&J, I don't think it dropped when I looked at it this morning. Yeah, I still need a little bit more. It's lower, actually, the last couple of days. But watch out here. We're coming down. Again, a couple of banks are already down. Fed emergency fund for long-dated bonds may run. I think it will. I mean, like I told you guys yesterday, never believe if it's actually going to be a crisis, what's going to happen is they step in, they implement a solution, and then the solution fails. And that's when you know this shit is about to hit the fan. So it's possible. I mean, so it's like I don't really care if it does or it doesn't. But what I'm trying to tell you is if that Fed facility, if it hits a limit and then they find out it's not enough and they need to do more and they're like, oh, and then no, we don't want to approve more or whatever, the second time, that's when you go hard on everything. Because at that point, if you implement something and then it gets clapped, then you know, then there you go. That's how you know the problem is way, way bigger. So no one buys their bonds? Well, no, pretty much too many people request the backstop and then they tap out the $25 billion that they have set aside. And then we find out that maybe we need $100 billion. And then if the Fed isn't willing to, if they bring up politics, then you'll know. But the second time they do it, that's just what happens. I'm speaking from history. This is what happens every single time. You know, even Bretton Woods, before they figured out the system of the dollar, they implemented a system. It would fail. They would come to do a solution to the failure. Then it would fail again, anywhere from a couple of weeks to a couple of years later. And then the second time around, that's the one that usually is the glue. But that's how you know the problem is about to is about to expand. Got another Bear Stearns. Well, that's what some people are saying because they were like, what happened with SVB in these banks, it's not necessarily Lehman Brothers, but maybe it was Bear Stearns. Gasparino scoop. I kind of asked my best private equity sources who's looking at SVB. He said every dope with $10 billion. I wouldn't be, bro, Apollo buys everything, so I wouldn't be surprised if it was Apollo. We're at the daily downtrend. It's not good, man. 388. Again, I was telling you from here. I was just in slow motion, just telling you, all right, if none of these bounces last, it's going to get ugly. But 38.50 is on the table. We'll even watch how it plays at like 38.80. That was really some action yesterday. But you're hitting a new low. You're at the low of the day. If this candle goes any lower, we set a new low right now. Chips are selling. Well, it's slow. Air brakes. Meta, Microsoft, most meat on the bone. Yeah. Even Apple, man. I think Apple with that news, I'm surprised it didn't have a positive effect. But even Apple's about to go negative. Apple was leading the market here today earlier. Apple is just a bitch to short because it holds up so well. But when it does die, it does die. That's just kind of the problem. And Apple still has the most meat out of the bone on anybody. They're still just holding near highs. 386, wall under 10, big red on Truist. Apple was up 2%. Even NASDAQ has slipped half of the gains. Here at 1.25. So earlier I was like, we're still up 2% here. But now NASDAQ is giving in. SPY gave up 1%. And then Dow Jones is still kind of in the middle. Meta's kind of giving up here. Apple is near the lows. Watch if any of them come down. Wall first. Even Schwab's coming down. Polyalti. Or what's the other one? Was it Pan W? Or no, what was it? Pac W. FITB still ugly. Cat hitting lows, or they get a lot of updates from the CEO. Damn. That's actually $4 since that news came out. Yeah, watch leaders, Meta, AMD, Uber, Citi, Pac W, Wall, FRC. I like that list. Yeah, Apple's coming back down. And I was saying for the meat on the bone, just Apple in general, I think that's just been a safe haven. And if people get worried, I think you got some downside. But it's just hard because Apple just holds up. All right, you're flushing now. New low on the day. 39.17 on the futures. 38.83. Watch 38.77 or even like 38.74, I'd say, or 72. And then we see where we go from there. Let me see the levels. At 38.79, that says the next level, and then 38.56. So it's either that or you fill the gap. You either hold from here, 38.79, or we if that flushes, you break. And the bonds are doing that little dance there. Apple, another new low at the bottom. MPW is turning red now. LMT even flipped red. Even Boeing, oh man. Bro, Boeing moves like $10 intraday every day. VIX new high. Still down though. VIX has been beaten. But he is running up there. He's waking up with the bonds. And now VIX is back to Friday levels of close. And this is also, I think, the SPY. I think this is where Thursday was. No, we're below Thursday's close right now. So now you're getting into the range of Friday. So you had a little wick and pop. Morgan Stanley to test OpenAI chatbot for advisors. Norfolk Southern sued by Ohio AG over train derailment. NSC. Damn. That was actually a good short. We shorted at like 230. But yeah, they have been sued by Ohio. Attorney General suing them. Let's see. No, I'm checking something. Getting the bounce there off that wick, it was good. This be a delay. It could be, but I don't even think today is CPI, sadly. That's it. The minute CPI failed to move the Fed futures and kind of kept things chill, that's it. All today was whether or not Powell was going to be in a tighter box. And today's data, I don't think it put him in a tighter box. But I do think it's borderline. Like, I don't even think this is a CPI day. I mean, wait till I show you. I'll check it right now. But I'm pretty sure this is one of our smallest CPI days after the last three were some of the biggest. Yeah. So look, I don't think any CPIs move. So as of now, nothing has happened. So this is your CPI reaction. This is where you're literally like right here, right now. So no other, I mean, I guess last CPI February moved like that, and then we started going down. But this time we went up a lot more in the morning. But there really was only like a couple of CPIs that were this flat. So this, besides last February, was the only one that was like this 6 hours later. So that was February here, and then you're right here right now. So it's very low. Wall on the low. Well, that's another bank, Western Alliance. So watch if we do round two of these. Remember, they were just halted an hour ago. They might get halted again into the low, but Wall's going down now. Caterpillar still two. FRC, another one. FITB still holding, but Wall and FRC, they were halted a little bit earlier there. 3M, I would like it at $100 for part number 2. Oh, shit. We're almost there, huh? So you're at 101. I keep my reserves in cash for the long term. I keep them getting me, at this point, getting treasury bonds. Or short-term cash or any interest account paying me 3 to 4%. All right, get ready if we come down. Again, it's all starting with banks number 2, or the bank sell-off part 2, but this is where it just gets weird because every single one of these drops, we haven't had any updates from any of the banks. So as they start to die, everyone's just going to start getting worried that there's news around the corner. Remember, just like yesterday, after hours, there's a good chance you're going to get some info. And if they start giving up these fat gains, that's not going to be good. Altria went negative. Again, FRC and Wall are both at the lows. They're not flushing the same way, but we'll find out. 3M below 90, 95. I think so. Again, we're almost there. One more down day. That sucks. I just bought in the long term. Damn, and MPW already got clapped. But we will be going. I will be grabbing some 3M there. I don't know what the yield is at now at this price. 5.9. Jeez. All right, flushing a little bit. The low is 38.80. Remember, 38.79. That is the level. If that breaks, then next level is fill the gap at 38.50. You have an hour and 45 left, so we still actually have a lot of time. It's only 11:16 now. FRC, they might. Wall is on the low too. And then bonds are starting to climb. Bonds, I don't know if they're going to go positive on the day, but they are fighting back on all of this. That's actually wild. Deposit fight. Yeah, that's the bull ETF on regionals. Excuse me. Meta dropping. Wall just had a candle off the bottom. Everything's still up, but now Dow is closest to going negative. Small caps up 1.3. SPY is up 0.7. And then NASDAQ is up 1.1. But you've given up a lot of the cushion from earlier. But it feels like the air brakes are being applied, but you're very close to that level up once again. Zimex Divi, is it? I'm not too sure. It says XDivi is April 4th. So I think you have time. Yeah, and dividend is $6.40. That's crazy. So a little bounce. Air brakes are working. Apple's even bouncing. JPM. Yeah, JPM's just holding. Put up Ally. Is that another one that's already... They're about to go negative, so they were up a decent amount. But this is what I was talking about. This is the second half today of this bank stuff that we have to watch out for, is that you're getting a lot. The ones that were positive by a lot and going negative, that's a very bad sign. That means a lot of people rushed in, but to change 30 to 40% in a day is mad. So that is, I think, the danger sign here. And then even banks right now, financials are like in the middle of the day, or I guess they moved up to number 2 because everything else dropped, but they're up 1.3. They were up 2.9 at the morning. We are near the danger zone. They're air braking it, but this is the second time. I mean, as long as you don't test this other low, you could be good. Charles sees inflows. Does that mean regional banks must be seeing outflows? That's what people were saying this morning. So Wells Fargo, Bank of America, JP Morgan, they all reported new accounts created and deposits going up because pretty much people are pulling their money out of one area and then sticking it to the big banks. PPI can move the market. It just depends on what comes up related to real estate. SVB FTX-backed chipper cash is said to weigh sale. Or U.S. should guarantee all bank deposits, House GOP says. That's crazy. What if the government did make regulation and every bank deposit in the United States just gets guaranteed by the government up to any amount? No risk banking. It's beautiful. Mm-mm. They tried to create it by keeping all deposits at the Fed, but they weren't allowed to. This is how the I don't know. Why do some of you guys want a CBDC? I've seen some chads and they're like, give me a CBDC. But I'm like, why do you want that? Am I the only one terrified of a CBDC? Is that just me? Me too. We don't want it. I don't know, because some people say they want it. It's really, really weird. Yeah, it scares me. Yeah, that's okay. Good. I'm glad to see you made me feel good, Chad. I'm glad to see. Thank God. Give me a CBDC or give me death. That's what I'm saying though. But you don't believe that, do you? Is that a joke? But I'm glad to see most of the chads were like, no, I don't want it. Thank God. That would be terrifying. A central bank digital currency. Yeah. Then they would track everything. And then they would say, you used way too many carbon credits today. You can't buy food. What? Monero, I would just be careful of all of them. Right now, I'm not a big fan of crypto on anything. What would that do to the value of gold? A CBDC? I don't know. I have no idea. I feel like gold would be gold would go up more, because then I think maybe people would transact with gold because it's not tracked. You've exhausted your monthly beef allowance. Please buy plant-based. Gold is God's money? I don't think so. I mean, sadly, it sounds like, if you're uninitiated, it kind of sounds crazy. But it's like, I think the currency of the Lord is blood, believe it or not. Because they're not like, he died on the cross for your sins and shed his gold. He paid for your sins in gold. Like, no, you know what I'm saying? Like, that's why it's there's a lot. I get deep into it. I'm not the one to tell that to be honest. Schwab is ripping. Oh, it is now. I bet you people are just getting news probably that the guy bought the shares. It's up I mean, that's what, $3 since that news case. It's crazy how much it moves. That's already 3-4% right there since his speech. The streets of heaven are paved with gold, though. I mean, it's still a street. You know what I'm saying? It's like, that's what God thought of gold. He said, just throw it on the street. So I don't know. Y'all not making your case right now. Listen, I got gold here. Let me tap on a gold coin for you. Hold on. Listen. These are 2 gold coins touching each other. You see that? Don't worry. I'm on your team. It's okay. I'm just saying. Is asphalt our currency? No, that's why. It'd be crazy. They gave gold to baby Jesus. That's a great gift for a child. I'm just saying. You could play with it. It's shiny. I think there's more utility value of gold at the ages of 0 to like 10 than maybe like 50 to 90. I don't know. I'm sorry. I'm just clowning on gold right now. I love y'all guys. Don't worry. I got my gold. I got mad silver bars. Honestly, I should actually take a picture of my silver bars right now because they look funny because like they're covered in dust right now. That's just like, actually, I'm going to post that. I'm going to post that on my Snapchat. You'll see what I'm talking about. The best investment. They're just covered in dust. I don't even want to touch it right now, actually. I'm just looking at these things, looking back at me, just covered in dust, bro. Oh, excuse me. I'm trying to see. Can you see it? Yeah, it looks mad dusty. Okay, yo, I posted it on my Snapchat. I should post it on my Instagram, too, since some of you are above the age of 12. I understand. And then some of y'all on Snapchat, y'all got to stop going to high school parties, okay? You graduated college 2 years ago. So please. Trying to find your future wife on Snapchat? That's good, man. I'm glad you know how to look in the right places. Proud of you, man. That's good, man. I hope that works out for the best of both of y'all. Hope you have a nice long marriage. That's going to be good, man. That's good. Email them. I'm trying. You want me to email? I can't even. My other phone, dude. Because I don't put a case on my camera or a camera on my phone, and then everything is just messed up. It's bad, bro. It's bad. When I take pictures, it looks hideous. Just another bullish, bearish day. This pump is absurd. But yeah, this is how you know it's a bullish, bearish day, because nothing's ever good enough. It's like if we fall, it's like it's not good enough, and then if we bounce, it's like, why does this keep bouncing? You're looking for financial advice at the casino? Good luck. Who's the doll next to the gold? That's Nancy. Honestly, I haven't put her in a video in a long time. She was just chilling there today. I'm kind of sad she's not there anymore. None of it makes sense. It does. It's just slow. I mean, just tell me that wasn't my same answer in January and February. Right? We were dropping, and then we start going up, and everyone's like, none of this makes sense. And I said, give it time. None of this makes sense. Give it time. Wait, the market's not down, but the bonds are. Just give it time. Okay, now the market and the bonds are down. Just give it time. You see, it's just time. That's it. The problem we have is that we sit here every single day. I hope you all recognize how much more difficult it is to watch everything minute by minute every single day. So it's good, you know more stuff and you understand more stuff and you're getting all of the information, but you got to understand it's like you're watching everything like digest second by second, minute by minute. So naturally it's going to make it seem like some things don't make sense or not, but it's just like you got to give it time. I mean, remember, it's a big boat and things take a lot of time for it to go through. But I mean, if right now things not making sense, give it time and then watch as it comes true. I mean, if that hasn't been the story of this year, then I don't know what to tell you. Because like I told you, it was a couple days ago, yesterday, we hit the level. I remember in the beginning of this year, how many of you had FOMO right here and thought you missed out on the bottom? Yes or no? Come on. You honestly had FOMO and were like, oh my gosh, I missed it. And then look at where everything was. Just think about that. That was in the beginning of this year. And then everybody was like, no land in this. And then you started hearing everyone talk about it. You go on Instagram, Twitter, you got memes of it, all of it. Everybody was getting into all of it. And now look at where you're at today, even from yesterday. But it's the same thing. And it never, sometimes it plays out different. But when it's all said and done, I mean, this year already has given you a crash course on be patient and things. They take time to develop, little by little at the very least. So don't worry. You need a FOMO anonymous. Yes, FOMO is big. But just especially with like the broader economy and this whole situation, it's a slow moving beast. So even though we get the news fast, even though, we go through it and you deal with it day by day, just keep in mind, you do need time. And if you really want to understand it, that's all you got to do. Like you just got to just give yourself time to let things play out. But the last thing you want to be doing is changing your mind every 10 minutes. Hopefully you have a good criteria to what makes you change your mind. But hopefully you see where I'm saying here, where it's like you know, don't be so quick to say it doesn't make sense when it's only been a day or two, maybe even a week, and we see how quickly and how drastically things can change in 4 to 6 weeks in the stock market. So, you know, nothing's ever promised tomorrow today. Do, and I heard her say, nothing's ever promised tomorrow today. So that's it, man. Why is everyone so bullish with rising rates and banks going under? Because everybody wants to make money. And it's fun when it goes up. Everything goes up. Everybody starts tripping out. You get to have money. People love it. And then everybody, the latest FOMO from January, bro, people didn't want to miss a generational rally. That's what they were saying. So it's just crazy, the emotions of the market. That's all. It's just it's not like when you go up a little bit, everybody's like, oh, okay, maybe it'll go up and maybe we'll balance it out with the risk. It's like, no, the minute it goes up, everybody nowadays is like, it's going to the moon. This is going to be the biggest rally of the next generation. This is going to be no landing. We ain't ever landing. It's going to go, you're going to make 30,000. And then guess what, though? The stocks did go up 50% on some growth names. I mean, we were up, 300% on Redfin? Get the fuck out of here. Like, what? So it's just like, that's just kind of a sign of the times. And honestly, I would say that's credit to late stage cycle. That's how it is at the end of the cycles usually. Like I've told you, usually right ahead of the recession is where people make and lose the most amount of money. Just because people are still thinking it's going to react a certain way from the past, and then people still have money, and then they're willing to jump at things because they see what has already occurred. And I heard her say, it's because of the volatility. And it's just emotions. That's it. I think this year, though, like so far, the word I'm getting at, even when I see it, because I felt it at times this year. But I just think the word of the year so far, even though we just started, but I don't know. I might be early. I might be calling it too early. But I think the word of the year is emotions. That's it. I think everything has just been characterized by emotions. And in the beginning, it's very emotional. Even the downside, very emotional. The banks and what's going on, it seems like it's all on emotions. I think emotions is probably going to be the thing you need this year, because that is what I think is dictating a lot of things, or that's what's adding the extra tailwinds and headwinds on everything. It's just extra emotions and then getting a wild reaction. Time. You're numb? No, you're not. We're bearish and we're numb. No, you're not. That's it. I'll tell you when you. Ooh, what's that? Italy opens fiber. No. A little bit of a red chicle. A little bit. MRTX on the high. Maserati. Like a Maserati, but a Maserati. I'll tell you. I'll give you a sign to look for. Are you ready? Some of you might get mad. I'll tell you, though. I'll tell you. This is where you know. This is where peak panic sets in, and this is what will happen when the market actually crashes. Actually, Can I get 10 likes? Can I get 10 likes? I haven't sold y'all likes in a while. I just want y'all to know I'm still in the market. You know what I'm saying? Like, we still selling likes. We got them available. So you let me know what you got, what you need. But if you got likes, I mean, I would just want you to know we're still available here today. So we're not closed. So feel free to drop that thumbs up on the video right now. Oh, you liked it early in the morning? Okay. Oh, okay. I didn't know. Okay. But if you could like it right now. No? Okay. I'm just making, I don't know. I'm trying to, so thank you for liking the video. I appreciate you. We love you, man. God bless you. MRTX still on the high. So here it is. Are you ready? This is where emotionally you will be able to identify that the market has actually changed and either things have crashed or panic has set in. Are you ready? It will be when memes and stock market memes disappear. Not disappear, but they will not be as popular. And that is when you know the end will be there. Very simple. That's why I'm saying this as a response to you telling me I am bearish, I am numb. Have you ever been around somebody who would joke around a lot and then they went through something in life and then they stopped joking as much? Yeah, it's the same thing here. Simple as that. There will be eventually, I've seen it with people. You run away. There will be a point people will actually, the jokes will be insensitive towards people and they're going to be like, fuck this. And then that's when you really get numb. You're not even going to joke about it. So right now, people are still LOLing on the up and the down. So I think everything is fully the same. But until you get to that point where you actually have a real numbness and people actually serious, then there you go. I lost lots of money before. I'm not joking. You didn't lose enough. What I mean by that, most people go in a hole. They get quiet. They don't talk to people. They don't even joke about it. You know what I'm saying? It's like if you have a small peepee, you don't even joke about having a small peepee. You see what I'm saying? So it's the same thing. So that's good. You're in a good spot. But that's the one thing I've definitely noticed is like you could tell when somebody is actually down and out versus not. And most people are still, that optimism hangs, and people being excited about it are actually there. So I think most of the jokes in the market still exist because nothing has really changed. Peita, welcome, my friend. Oh, you think Burry is still short? I don't think he is. After yesterday, but who knows? Remember, how he reports his shorts are very, very weird. I don't think Burry is, I think he's patient, but I think Burry's just learning about social media and dealing with all of it in the process of trying to call everything out. It's a tough game. But follow me on Instagram at The Trading Fraternity. I just posted a picture. You could even get it on my Snapchat too. But I love you. I'll be right back. I need to go to the potty. Good luck. We're still near the lows. Nothing has happened for the last hour ever since that sell-off. So let's see what happens. I'll BRB.
They came up with a brilliant solution, which was to issue preferred, and they did so. Today, they got approval from shareholders to merge the two share classes together, make them all common, and reverse split 10-for-1, and then increase the authorized share count by another 550 million after the split. So, in other words, let's just assume that the value of a share is $2 today, and after the split 20. They have the ability to raise as much as $11 billion in capital by issuing new shares, and that'll go a long way toward paying down their $4.5 billion of outstanding debt.
It makes a lot of sense on paper. You, of course, know that there are also a lot of legal challenges to this, and I am curious as to whether this is going to complicate things for AMC and its executive team there.
I don't think so. I think that they should have been bankrupt 3 or 4 months into the pandemic. And in fairness, they managed this better than any. No one could have expected them to manage as well as they have. You've seen Cineworld go bankrupt since. AMC had even more debt, and this is really truly the crew and the captain of the Titanic steering past all the icebergs. I mean, they managed not to sink. It's amazing.
Yeah, you sound impressed by their ability to stay afloat.
I am, and float, pun intended, I guess. Yes, I am, and realistically, they took on a lot of debt. Not all this management team's fault. I mean, it started several years ago. They decided to become the biggest exhibitor in the world, and they kept buying assets. And they bought when the movie industry was really healthy.
Yeah.
Then the movie industry turned against them. They were stuck with a lot of debt and a lot of underperforming assets. They are managing this down. I think they'll issue some more stock, pay down some debt. Arguably, they're going to be around for a long time. I think theaters are going to be around for a long time.
So you mentioned that they now have the ability to issue new shares. They have the flexibility to do so, but that doesn't mean that whatever they do or whenever they decide to do it, it'll be well received, especially if the timing is off, given that you said that they were expanding right when the movie theater market was at its high. What's the best path forward here for AMC?
I mean, my expectation is that they'll probably, upon maturity of their outstanding debt, start to issue converts. So you'll probably see them renegotiate their current coupon rates from in the 6-7% range down to 1 or 2% with a conversion feature. That'll be an easy way to issue equity without actually issuing equity. The banks that they have outstanding debt with may or may not choose to refinance, but they can also do this as an investment vehicle for institutions. I don't think very many institutions are interested in the stock down here because they're not committed to the business. But debt holders will certainly take this as a reclassification, and so I think there's an opportunity here. I really do.
Well, I'm curious, and I mean, of course, we've heard from the chairman and CEO has kind of made it clear that retail investors are pretty much all that he's focused on right now. But is there a long-term story here, Michael? Because everything you're saying here just seems like they're just kind of buying time.
Yeah, the long-term story is interesting. The movie studios have really screwed up by pushing everything to streaming immediately. I saw Everything Everywhere All at Once on a streaming service, and I didn't even know it was out in the theaters. I don't remember it being there. Babylon is on a streaming service right now. It's been out for like 2 months. But you'll notice that Top Gun just barely made it onto streaming services a month or so ago. Avatar's not there yet. So the studios have to figure out how to respect and maintain the theatrical window. They're going to do that. So there's a place for theaters. That's the most profitable distribution of all film. So, it's in everybody's best interest to maintain the theatrical window.
Interesting.
I think you're going to see that expand again.
Do you think the theaters or the studios themselves would maybe consider investing directly in AMC at some point?
Yeah, it's a good question. They weren't allowed to until 2019. There was a Paramount.
Hello. I like that. Slapstick humor is bullish. Makes you wonder why the popularity spiked and waned during 1800s and 1900s. I like it. We should make a research article. We should correlate humor and comedy as it relates to asset performance. Because I feel like things are bullish when people are more funnier, and then when things are bearish, people get less funnier. Yes, no? I feel like you're more open to humor when it's bullish versus not. Ask ChatGPT. I don't know. ChatGPT is I don't know. Yeah, dude, Friday's going to be nuts. Even after Friday, I think that's where we get the real move. But then sadly, you have to wait till Tuesday or Wednesday because of Powell. But following expiration, if we get another bank clapping, it's going to be hideous. And the banks are trying to work their way up here from early. Is that Wells Fargo or is that Wall? Wall keeps dumping. FRC trying to hold on. Schwab came up a lot since CEO. Can I do South Park voices? I can only do okay. I don't even know if this is even a good voice. Okay. So let's figure this out. The North Corn. Okay. Bitcoin. Coin is on the low after squeezing again. Bitcoin going to break 25,000. It does that like every other day. Is today? No, Friday's the big expiration. Today is just the CPI, really. This is where a lot of things were at. I went to the bank to pull out my money, and everybody in there looks stressed. I did it yesterday, and everybody was happy. Dude, I was shocked yesterday. That's why I made the video, bro. I was just like, all right, let's put this to the test. Because you know how many people in the chat were telling me? They're like, I couldn't even get $10,000. They wouldn't even let me do this. They wouldn't even let me do that. Oh my gosh, I can't. And I was like, let's see, man. Let's see. But nobody was like pissed. It's very, very weird. UUP red, UUP drop. Bolivia banks are limiting withdrawals. You sound like my mom now. That's what my mom, it don't matter what I tell her. She's like, did you hear what happened in Egypt? I'm like, no, Mom, I didn't hear what happened in Egypt. Bonds are ripping right now. How big is this dollar drop? Dollar down, bonds up again. The bonds are still in the red. B&J could soon end ultra-accommodative stance as wage negotiations conclude. Where's young 6J? No, it's not moving that much. Even the yen is down 1%. I mean, after that monster rally, though. CL getting smacked. I haven't even looked at oil, actually, all day today. Check US. Oh, wow. USO's down 4? What the hell is this? Oh, my goodness. Oh, wow. $70. Holy shit. Yeah, oil's down 5% right now. Yeah, that's actually crazy. Bro, oil is about to get murked. That's what? That's 21? Yeah, all 2022. You're about to give up all of 2022. It's very 2008-ish. I didn't buy more 3M. We might if it goes below 100. I will have to sell out a bill, though, because that's where my cash is at. So we'll think, Bill has been a solid trade this year. We got 20 cents a share. I'll tell you, dude, the inflows in Bill have been wild, though, low-key. I'd argue these are some of the biggest inflows in the last, 12 months. Yeah. It's not 2008 phrase of the year. Oil down, bonds up. You called Bill before news. You good? We got it. A lot of the timing was ridiculous. The Bill timing was beautiful. But then it's like, it's so wild that I made the Bill video, and then my next video is like, oh my gosh, banks are collapsing. Then the next video, it's like, oh my gosh, everybody going to cash is actually having an effect, and it could further. Oh my goodness. So yeah, I still have the UUP. I think they're down now, but I'm actually chill. We have April and June on that. So I think with enough time, it'll do its thing. 21, do its thing. I'm ready. It's 2023, yes. All right, candle's getting a little bigger. I mean, we're about 3 minutes from power hour. So get ready. Maybe we actually start moving a little crazier here. Hot dog. What's oil? I was like, wait a minute. Why is the market down 5%? So 38.91. Again, this is kind of earlier. 38.79. That's the level. Bounce tomorrow midday. Well, tomorrow we have PPI in the morning, so we'll see. Oil crashing, short EV. I see where you're getting at. That is an interesting take. Lower oil prices. But Priuses held up for a while after 2008. So the oil effect on gas, it has a crazy idea. Mm. $30 till power hour. Indeed, it's not a good sign to be starting off low. So that means leading into power hour, your first 30, 40 minutes was mainly upside trying to bounce, but now you're going down. So we may start off power hour. You may get tempted to hit another low. Argentina says inflation rose 103%, passes levels since 1991. Raul hidden VTech. Raul's flooring services. That's what we heard. That was the best one today. So 38.90. You still got like what? 10 more points? We'll find out. Oil is that one in the next coming days is going to be key, but you would think oil would help with inflation now. It sucks. I mean, honestly, I think up until Powell, it is going to be very hard to interpret the news. And what I mean by that is that everything has just gotten so convoluted, because you got to realize a couple of weeks ago, oil going down meant inflation was going down. You see what I'm saying? So now if oil goes down, people are going back with demand destruction, but then they're saying it's going to lead to the economy and then this and that. And then even today, you got bad news actually reacted bad. And then we have the CPI. It's the most important thing until it's not. And then now it's just really about the rate hikes, and then the rate hikes won't matter depending on what happens with the banks. So realistically, until Powell, let's get rid of this Friday expiration, but then Powell, I just think it's getting to the point, though, where, like, you're not, things are changing. That's the only way I could tell it to you without being so convoluted about it. But I think it just simply, the news is going to read a little different, because now you're reacting to the same news or information in 5 different ways. Again, bonds going up and down used to mean something, and they still do, but it's just like every other week that is flip-flopping. And then things like oil, like we just mentioned, it's like this is putting the market in a very weird spot, because one day we're going to get something and it's going to be good, and we're actually going to respond good, or it's going to be bad and we're going to actually respond bad. But then the same thing that's signaling one thing today, it may not even give you that signal tomorrow. And that kind of is the problem now, especially when the moves have already been this massive. MPW's long-term, so we're just going to hold that and get the divvy before they go BK, hopefully. And hopefully it never goes BK. The big expiry days are choppy. I'm not really worried about Friday to trade. I'm more along the lines of after Friday. I think after this Friday, the market's going to be able to move a lot crazier, just because you're going to clear out 3 months of all of those purchases. I'm putting all my money in Shiba, the way these markets move. Well, listen, man, based on that comment, you have just activated give half of your money to Josh. So this is special for you, since you're contemplating it already now and you're already ready to go. I understand the volatility in the market, but what you can actually do right now for a limited time only, you could give me half of the money you were going to put into Shiba. And if you could give me half of that money, I will have something ready for you in the future. Okay? It's not an investment. I'm not a registered financial advisor. It's not a recommendation. Options trading is extremely risky. Can't lose so much financial investment. Lose a financial advisor. Educational purposes only. Okay? But what I'm saying is you could send me half of that money now, because who knows what will happen. It will protect you from volatility, because then that way you're not going to wake up one day and say, oh, where did half of my money go? What happened? You're going to be like, oh, half of my money went to Josh. I know exactly where my money's at. You see what I'm saying? So by doing that, you'll have more confidence on where your money actually went. And you'll know it went to a little Egyptian boy who was planning you a Vegas trip, if that's the thing. I don't know if I'll give it back. That's the thing. But shit, you don't know if you'll get it back on crypto. Why the hell you asking me these questions? You ain't even asked Coinbase this question at all. The fuck you mean, am I going to get my money back? When was the last time you said, hey, Coinbase, will I get my money back? Question mark. Enter. You ain't never do that to Coinbase. Why you treating me so different? Makes no sense. I don't know what I did to inspire this unfair treatment. Yeah, man. He's saying, will I get my money back? What do you... Shit, man. You imagine Shiba? Go tell me when you find the Shiba who you could ask that to. Okay, and I'll double your money up. You find me the actual Shiba, and you could ask him that question. I'd love to. Who made Shiba? Exactly. Anyways. Am I underwater on long-term treasuries? I am not. Thank God I'm not a boomer. Because why in the world would Josh be buying any fucking treasuries in the last 10 years? I was just buying real estate, dog. I said, hell nah, man, I don't get it. So, no, I don't have any treasuries I'm underwater in. Actually, any treasuries I've purchased are all recent. Mm. $388. No, we didn't go over PPI. We can. Argentina's annual inflation. $388. Just watch out if we break again. $39.87. No reason to have so much love, but you do appreciate you for it. Special thanks to Carissa holding it down every yeah, let's go. Hey man, God bless you, man. I got love for all of y'all. You know, maybe we'll have a nice little philo. I do the best I can, you know. I'm not here, you know. I know some of y'all. I pray for y'all 100%. You know, I wish I could be there for every single person day to day, minute by minute, but you know, we're only here 6 a.m. to 1. So whatever I could do to make your life easier and answer any questions, I really hope I can, and it's my pleasure and my honor. But you know, I'm very, very thankful for the people who understand that and hold it down on a day to day. So God bless you, bro. We love to have you. Okay, Chicle time. MOL takeover bid ended successfully. I'm seeing like S&P ratings actions, but nothing related to bank. 3880, that's big. Watch out here. If this breaks, Apple red too. Even Microsoft, a big candle. Meta is now giving it up. You might be getting your end of day flush. Disney red, Vertex. Everything's dropping now. Watch the banks. Even I think it's oil now. Low key, I think oil is the second half of this because now they're plunging like the banks were just plunging not too long ago. And like FRC, Wall, all of those are coming into the low. I think this is oil now. You're unwinding oil. Energy is negative on the day. They were in the middle. Now they're negative. They went negative. Energy went negative 0.5% before healthcare lost 0.25%. All right, you're flushing now, Chad. 38.57. That's probably going to be your next spot unless this could recover soon. And we're, only 10 minutes into Power Hour, with Power Hour starting off with a downside bias. And now you are back to where we were at most of the day yesterday, give or take a couple of drops and pops. 38.77, you're flushing now. I needed this 2 hours ago. They know. That's why they gave it to you 2 hours and 30 minutes later. incoming. Enemy UAV online. Enemy AC red candle inbound. 38.77. So baby levels here. 38.79 is a bigger level. This 38.75 here is a small one, but let's see. I'm just worried about filling the gap now. That's crazy. We're tanking for a couple of reasons. I mean, realistically, it's banks giving up their gains. The banks are definitely that, right. You know, if you were thinking banks are going to rally and show some signs of strength today, 1.3 is not confidence inducing. So literally XLF banks are just, they're not doing too hot considering how they opened. And then you had a Russian news earlier. And then now energy, I think, is weighing on the market. Boeing is about to go red. That's crazy. People are saying Russia because apparently a U.S. drone was shot down over the Black Sea or collided with a Russian jet. U.S. approves military sale to Romania worth $104 million. Danger. I think it starts with U.S. banks, and then if the problem spreads with U.S. banks, it will undoubtedly hit Europe to Canada to Latin America. But as of now, this is all U.S. related until the dollar starts going up or until we see more heightened outflows from banks. Nasdaq's still up 1%. I think right now the SPY is 0.5% from filling the gap. That's the next level lower, and then we see what happens from there. The Boeing's insane. Well, let's see. 38.76. It's kind of like trying to air brake, but it feels like we're one Clifford away from just getting all the paranoia back. That's what I said even on the stream alert. I think this is energy and banks leading us down, but it's just like we're still green, but I feel like it's a long day and there's just low-key paranoia there. I think paranoia from the banks and anything else. Is Bitcoin still running? At least Coinbase is coming down. This is going to get nasty. It would. I mean, remember, today's CPI day. This now brings us back to unchanged, I'm pretty sure. So here's to give you some. You're now in the lower candle of CPI. So now this is actually turning to a slightly negative reaction. Well, you still got a little bit more. I think, if anything, 386.50 all the way down to like 384.60. I'm just using the CPI candles, but other than that, 38.57. Fill the gap, and then there you go. Help package for oil companies. Oil companies are getting mollywopped. I'm worried about that just because it's harder to read now. The question is, how is the market going to take dropping oil prices? Are they going to take it recessionary? What's it called? Recessionary, or are they going to take it inflationary, recessionary, depression, Powell, God knows what. But let's see. And then Friday, and then you guys wanted to go over PPI, right? Bank of America, yeah, a lot of banks did that. That's why I'm like, oh no. Let's see, CPPI. Let's see when this slows down. So what you're getting volume here, it's going to bounce. But like I said, it just looks like we're like one Clifford away from getting clapped. But then tomorrow, PPI is expected to come in 0.3 month over month, 0.4 on core, or then 5.4 final demand, core excluding food and energy, 5.2. And then manufacturing supposed to be negative 7.9, and then retail sales expected to be negative 4 month on month. And then that's it. All right, so there you go. That little green volume's coming in. This could be the Clifford, 38.75 now. see the other bank, even Tesla, giving Tesla and Meta a watch because that's where the easy gains came from on the market today. It was energy initially, but energy flipped. Was it FCH? FRC. They're holding up. Wall is getting clapped. Okay, that little red turned into green now. Pack W on the low, still up 30. Yeah, Western Alliance has erased gains of 53. Do you guys realize how crazy that is? Bro, that's a wicked... That's what I'm saying. That's the paranoia there. Because that shouldn't happen. I mean, for the most part, if you're up 50% on a, like, relief rally, you usually don't sell that off. Wall is halted, yeah. Dude, they just went 50. So let's see. Last time they halted them into the low, we kept dumping, but let's see because the market was tripping out at that point. My goodness. What was the LT divvy? MPW. It's got clapped, though. I've already lost 3%. A little bit more, I think. Maybe we buy more. No, okay. I'm going to wait. I'll wait till 3 a.m. You know, just make it start putting some money out there. MPW. Could have been worse. Could have been worse. I mean, I'm worried about MPW. That one scares me. Bro, when was the last time I bought? Last thing I bought was a 10% yield on HBI, and they cut a dividend 2 months later. Well, the last time I bought a 13% yielding stock, it was IRM. So I don't know how I feel about this, because then that means either it's going to be the next IRM or it's going to be the next HBI. And honestly, that's a very wide range. You know what I'm saying? That's like a very wide range between the two. BST or Jeppy. I like Jeppy. It looks decent. Stable Steve. I like Jeppy. It was down there the other day, but yeah, we still made money with HBI, but I wish I would have loved to hold that and keep the dividend. That would have been cool, but I'm glad. I mean, MPW, that makes up for, I'm actually getting 30% more yield, but, you know, we'll see what happens. We will see. Let's see. How much are we already down? Dude, we already lost 5% on MPW? Yeah, what kind of shit is this, bro? It took me a whole month to lose that on 3M. This is bullshit, man. We made 30% on HBI. I think 38% is what we walked away with after being up 100%. So, not bad. Not bad at all. They announced activity today. Jeppy, I like it around these levels. Listen, I don't think Jeppy, I mean, I just took a 13% high yield in REIT. I don't think Jeppy's bad at this price. This is exactly the price I wanted Jeppy at. Like $50. I think you're near the low. It can go, I think like $50 really. 51 is like a perfect price. So you could pay high 50s, but I don't think it's too bad of a price here. I think there's downside. The problem I have with Jeppy is that there's no real good history. Like, it's a baby. Western Alliance unhalted. That's a 2% move on Western Alliance right there. That unhalted move is 2%. And then what time is it? 40 minutes left, 38 minutes. You had a little bounce off the low, but it looks like this is about to fail. If it could hold up, it'll be nice. You'll probably close at 3,900. But if this fails, I mean, hello, gap fill. Chiromarnic Biopharma, KRBP is popping. It's been doing this a couple days in a row here too. Jeppy made it through COVID. They did, and that was big, but COVID was like, it lasted like 3 months, then everything ripped. But I do like Jeppy. I'm still not against it. And I think now you have a way better price on, I mean, simple as this is mother effers. I was telling them I wanted dividends. They were saying buy Jeppy at 55. I mean, you're getting almost a 10% discount right here. So you're probably at like 7% discount, maybe 6. So, and then it's somewhat more stable than something like MPW, hence my 5% loss already. We added MPW for the small account too. Second half of March goes both ways. Usually by the second half of March, though, things flip, and then the NASDAQ doesn't really like them too much. I read about it, same with BST. I like Jeppy. We've heard about it a lot. And I like the yield. I kind of like the philosophy of it. I'm just like, it's a new and it's a fund. That's it. I mean, everything in our portfolio is equity into some level of company or business. So I haven't added a fund, but that's it. We tried. You guys did tell me about MPW. I bought it 20% cheaper. So that's the beauty of it. And then you guys did tell me it's a piece of shit. Hence, I bought it 5% higher than where it's at now. So we'll see. But in the meantime, 13% me. And then let's see what happens from there. That Clifford, nah. It was looking, here was very precarious. Let's wait for it. Just see if it comes down there. ICANN News. Icon. Well, he ran things up the other day. Meta price target raised to 230 from 215 at Truist. Icon says he can't justify price of some tech stocks. Carl Icahn, I don't know. Carl and all I know is you usually hear Carl and Bill Ackman. They both love to talk and start making moves. I like Carl better than Bill. Bill's an asshole. Not Bill like Treasuries, but Bill Ackman. Yeah, Walgreens, that's one I could consider here too. We talked about it breaking down this little trend, how it was kind of pinned. Actually, Walgreens could be decent. Low key, let's just let this thing flush. Well, Walgreens could be good. Walgreens and 3M. 101.50. CNBC's down 20% on FRC. Bro, I mean, just today's a wild day. It sucks because like it's like we had big events and we're all waiting for it, but like compared to the last couple days with banks, you didn't get any new updates, but it's just like this I don't like this. This is very paranoia inspiring. You shouldn't gap up 50% and sell off 50%. Same thing with like FRC. FRC, I think they're still up what? They've given up 30%. But that shouldn't happen, and it's kind of showing how fragile any sort of like, you know, bank hype in or out of really is. It just is very, very emotional. Why not? It's just not a good sign of an item. So like, let's say you are on eBay and you are shopping for an item and you notice the price was really, really low and then people bought it up for 2 days, but then in one day it's swinging 50%. You would be like, something's up with that. That's the whole point. You got to realize, even from a stock perspective, what do you think is going to happen now if banks go down 70% gap up 50%, and then sell off in the last hour and go back to break even. I mean, how would you feel about buying a bank stock in that environment? You see what I'm saying? That's the real kicker to it, is that this is not good. It's not going to help out inflows, and it's not going to, you said sad. Well, yeah, you'll be sad, but just think about anybody on the sidelines. This isn't going to try to, it's going to raise the burden of evidence for these stocks to bring in money again. Sounds like fear. I'm greedy. Well, no, but like that's what I'm saying though, is like, so you got to think about it. The other day, it sounded like fear, and that's why everybody bought it. And everyone's like, yeah, I bought the fear. You know what I'm saying? And then now the fear that you were supposed to buy turned back into fear. So now the fear comes back. So now it's like, it's really confusing. First week of earnings, I know. I feel like we just ended earnings, but it's probably going to start up again. Wall has a 6% dividend. Yeah, Wall has moved 50% in 7 hours, up and down. I bought 450 shares in the big account and then 45 shares in the small account of MPW. Yeah, for the long term. Actually, how much would 50 more be? I might just raise it to 500. Damn, that's another 400 for 50 share. Oh, no. I only wanted, yeah. So we double up the investment. Oof. Okay, I'm going to do it. Just for the small one. I bought 50 more shares because I want 100 in the long term or on the small one. So now we lowered our average. Oh, wait. I still need 5 more shares. Fuck me. I only bought 40? Well, shout out no commissions. I only did it on the small account. So I didn't add it to the big account because we already went in big. But the small account, we had a little bit more cash. No, you would get it. Nothing's good about MPW. It's extremely risky. So again, I hope you guys know that. This is just for dividends. It's a 13% yield. It's a medical REIT. I mean, they have decent exposure. They've recently had some problems. They are covered well by analysts, which I like. But for the most part, I'm just going for 13% yield. And if it could pay me back most of my dividend in 4 or 5 years, we'll be good to go. So same philosophy about there. In general, it's just a REIT and pays a high yield. That's all. Yeah, pretty much MPW replaces HBI. Exactly. 100%. It's not monthly. No, it's quarterly. And then ex-dividend is today or tomorrow. So that's why, even in a weird way, we're taking a weird risk by buying it today. Papa Mustafa, welcome, baby. Welcome back. Schwab dumping. SPY's running here, so that little test, this is actually a good sign. Since you didn't flush from there, it'll at least buy you time here. Dude, Wall is crazy. Schwab is coming down now. Dude, Wall is, that's down 6% now. Dude, I don't like that. Bro, that means Ken Griffin, I don't know what price he got in at, but remember, they took a 5% stake in that today. That's actually wild. And then Marathi MRTX is still up. He bought in at 8, sold at 60. Oh, shit. This thing did go as low as $8. That's actually wild. I told my boy I bought MPW, 13% yield. He said it sounded like I staked the shit coin. That's pretty funny. Kind of is. It wasn't always 13%. That's the thing. It's like if the price goes back up to like its kind of normal levels, it's like I think it's a 6% or a 5% yield. That's it. Yeah, waiting on 3M. So like it's not like the dividend has it's not like they raised the dividend, but it's not like it was always too crazy there. Yeah, it's for the long term. But I mean, again, I just don't ever forget the lesson. Anything yielding that much is probably a shithole. Yeah, so their dividend, I mean, it was yielding pretty much the same thing for a very long time. So, like, even in 2019, the stock was at, like, what? Between $15 and $18, $19. And then in 2019, it was paying out 26 cents a share. So that's like, what, $1 a year at $20, yielding about 5%, most of its history. Yeah, so because it's been at that price for a while. At $15, you're yielding like, what, 7%? Here you're yielding like 5 or 6. Here you're yielding 3 or 4. Wall halted again. I would never buy HBI, no. Not unless they brought back the dividend. That would be interesting. Yeah, Wall, bro, Wall is terrifying. This is what we got to watch out for, because now if they keep selling off, they may run into another problem. So again, if everything stays stable, bank stocks don't die, people are going to feel good about that. But if that changes and these guys start selling off again, that everything is going to come back here again. Saving money for 3M is better. I think 3M, I mean, I think 3M has more upside, but you have half as much yield. So you could put half as much into MPW and get the same yield as the full amount of 3M, but 3M has a higher chance of making you more money on the equity, not to mention 3M has a lot more stability. The yield on MPW, assuming things don't get really bad for them, it should be safe. Because they've kept it relatively, so like pretty much from 2013 till today, the dividend went from 20 cents to 29 cents. So it's not like their dividend has gotten out of hand or anything like that. The only problem is if any of these things come true with what they're doing bad on and they run into more problems, I mean, people will get worried of how they're going to pay the dividend. Yeah, we could still buy 3M. I plan on buying 3M. I'm waiting for 100 and below, and then we'll go from there. FRC is dumping now. Suave is up 6. Yeah, FRC might get clapped next here. And I think it is. Halted 37. They're up 18, but if they do what Wall did, they're done. What's the other one? Pack W? Pack W's next. They're the same one, all of them. Pack W, FRC, and the other one, they were the ones up 30, 50, 60% today. And a good, but yeah, we still got a lot of cash. I mean, that's why I want to put all of that cash in the MO at the right price, or get like a fat growth play at just a stupid of a steal discount. But other than that, we're gonna hold. No. Yeah, FRC isn't halted. I thought they did. You already bounced right back up though. So even though the banks are dumping and we're looking at all that, watch out, because the market is back to 39. This is a good sign. If it rejects it here, you still have time to go back down. But if you could get above here, you might be able to hold on to some of the gains. 1%. The risk is if you go higher, NASDAQ goes 2%. Can't believe KRE and XLF. Wild. They were up 3% this morning. I mean, XLF looks decent, but you get those individual names that have gone 50 to down 20 or negative. That's the problem. That just means a lot of this fear of buy the dip. I'm assuming sales of the stock, pretty much outflows, are outweighing these fear buys, and it's weird. It's just kind of showing the paranoia. That's what I'm calling it, because it's kind of hard to judge. I like VZ, but communications are kind of limited in some areas. I'm not opposed to it, though. I'm not opposed to it. MPX dividend is tomorrow. So today should be your final day to buy the stock. MPW is 315. Today is 314. So by tomorrow, if you buy the stock, you can't get the dividend. If you buy it today, you can. We'll get just like yesterday, we'll probably get a headline or two. SVB collapse heightens U.S. recession risks. Bro, Wall again. KBE is on the low now too. Bro, Wall. Bro, this is like a mini panic in and of itself. You just watched a 50% rally fade, and now you are getting absolutely demolished. You're down 12% on Wall right now. Very, very wild. Killing spree. Straight double kill, triple kill, kill-tacular. Killing spree, killing frenzy. Yeah, even Ken is down, most likely. I don't know what price he got in at. Kilimanjaro. Microsoft bounced. Apple had a wicked sell-off earlier, and then Meta still 5.8. Early market on close, 500 million to the buy side. I don't like that. Buy side, maybe do opposite. I think FRC or PAC-W. I mean, if WAL gave up the gains, I think these would be the next to go. But you don't know. We don't know anything about any of these today. Pretty much there's been no news. It looked like things were calming down. But like I'm telling you, it's not a confidence-inducing move to watch a name get bid up 50% and then sell off. Unless it's like AMC, then you'll still buy it. But it's just like in this case, that's very, very odd. And then there's only a couple of other names in the regional banking world that did the same thing. To the window, to the wall. to the wall, till the deposit runs on my balance sheet. All these unrealized losses. Oh, loss. Oh, unrealized loss. God dang. Then let me see you buy the bonds. It's Fed. On your ass to the bonds. It's Fed. Okay, I'm sorry. Oh, these banks, they fall. Oh, right. The pumps on the small banks are the banks buying their own. It could be, or it could be these people inside of the banks trying to buy it. And then there's a lot of people, I mean, buy when people are fearful. There's a lot of those out there and people willing to take the risk, but it's very weird it would sell off like that. I mean, my theory is either other people are selling there or the banks are even using it to shore up liquidity, but very hard to say. Why we're pumping? I mean, we're not really pumping. This is just, I mean, we were selling off for like 2.5 hours straight, and then we finally wicked into the low and then kind of bounced and then chilled because it was about to get ugly from there. So really all it did was just calm down. Bought the bank stocks rock bottom. I'm holding long. A lot of people did. I mean, people saw the opportunity. I mean, your risk is just the fear of it going under, which is what we surprisingly have just witnessed. But other than that, like, I don't know. I can't believe Wall was at $8. Honestly, I should have bought it at $8. But then it already went up 100% by an hour of doing that. That's crazy. But everything is just fear. That's it. That's all I see is just fear and uncertainty. Is it that FUD? But it just does not look, it's just not inspiring the confidence, you know? Oh, Meta went down. Oh, Suave, why do you do this to me? Suave goes up and down 6% every day. I've been holding that since earnings. Lob is another one. Oh, yeah. Live Oak, they're killed. And then FITB. That was the first one. Dude, Lob is disgusting. That one looks the worst. I guess they were even lower, too. Yikes. Schwab for the long term. The yield is low. If you really wanted to pick up a bank, I would get one that yields a decent amount, but also that has safety. Realistically, I would just use this opportunity to pick up a big four. Wells Fargo, Bank of America, JP Morgan, Citi, Morgan Stanley. I think that's more than four, but any names like that, that's kind of your opportunity. But I still think JP Morgan's expensive. I mean, somebody brought it up there the other day. It's just like JP Morgan without any of this stuff going on was a lot cheaper. So we'll see. Apollo asked VCs to back their bid for Silicon Valley. PAC-W put 60% from the call out. Damn. Well, what's attractive to buying banks? If they could actually hold up, like JP Morgan is an attractive one because they're not going to go bust. I don't know about the price, but if you could go and get a high quality bank that is not going to run into a bank run and all of this blows over, you just got a 10-15% haircut just off of fear. So if you could get a high yield on a brand name bank that is going to be well capitalized and stay around, it's just a good pickup. I mean, that might be the best deal you'll get. I don't think it'll be your best deal all year, but it's still a good deal. You see what I'm saying? It's like if you could go buy now Bank of America, Wells Fargo, get a decent yield, 3-4%, and you know they're going to kind of have that stability, I mean, you're good unless worst case occurs. I am worried that the banks could cut their dividends. That is my fear, because if Wall Street or if White House in Washington wants to regulate it, and that's what people are thinking about next, the next thing they're going to do is start cutting dividends or force that. Oh, you got to add? My bad. All right, let me go pee. Is it ad time? Oh, yeah, it's 45. We started early today. My bad, bro. Okay, I'm going to go to the bathroom. Follow me on Instagram at The Trading Fraternity. Okay, I love you. Okay, follow me on Instagram at The Trading Fraternity. Say what's up, okay? Say what's up. I posted something on Instagram and Snap. You can see my silver dusted gold. Or is it dusted silver? I don't even know what the hell I just said, bro. Okay, I'm going to BRB.
Today, the tech giant announcing plans to lay off about 10,000 workers and cut about 5,000 vacant roles. Jess Menton, deputy team leader and equities reporter for Bloomberg News, joining us now with our stock of the hour. Meta Platforms, it's rallying because they're cutting jobs?
Right, and it's a head scratcher to some because you would think, how is the stock making this move? But we've seen this time again, actually, this year with not just Meta, but other companies, whether it's Salesforce, Intel, Microsoft. But it's actually the top of the NASDAQ 100 right now, on pace for its best day in about 2 weeks if those gains do hold. But again, when it comes to these cost-cutting efforts, if you think, so this is the second big tranche of job cuts that they've been doing. So the first one was around 11,000. Now this is around 10,000. But if you look back to November when they had announced that other additional job cuts, it stocks up a little over 100% in that time frame.
But isn't this what we've seen from a lot of these companies?
Yes.
They're getting rewarded for tightening their belt.
Right, they have. And Salesforce is among the companies as well that have done that. And so when you think of Meta in particular, its headcount, if you look back to 2018, 2019, going into last year, it had risen about 92%. So far, if you look at the culmination of these job cuts over the past 6 months, this is about a quarter of its workforce. So CFRA, they actually have a hold rating still on the company, but they do feel like what they're seeing so far with what's been happening, they think Mark Zuckerberg is taking sort of these cost-cutting efforts a bit more efficiently instead of just focusing all in on the metaverse.
Yeah, I was shocked when I looked at their employee count because I remember when it was something in the thousands as opposed to tens of thousands.
Right.
It's interesting. We live in a bizarre world where tech companies cutting jobs is rewarded the way that industrial companies used to be rewarded for these things. You're also looking at Apple, which is delaying bonuses for some staff. It's not necessarily cutting jobs like some of the other big tech companies have, but this is its own way of managing expenses.
And it's been a bit of an outlier, right? When you think of what its counterparts in big tech have been doing. So Apple has been, so far, when you think of the job cuts that it's had, it's been more towards, say, non-contractual type of workers. So this is interesting because they just had their investor day last week, and some of the big things was looking at the package for Tim Cook's pay. It would have been the third year if it would have been around a 100 million again, but it actually got cut to close to 50 million, and that did get approved. So you're seeing those cost-cutting efforts not just at the executive level, but now actually some of the structure.
At the structural level. It's weird. Apple, Bungie, they're the ones who replaced SVB on the S&P, so they're up 16%. Damn, they're killing it. So Bungie may just get, that could just be funds buying here, but that's really, really running. BRKR, is that an interactive? No, Bruker, they're going up there too. Oh shit, that's the 10-minute rigged. Wow, I took a bathroom break that late? I didn't realize it. In and out, that's what the long term is all about. Hey, happy Honda days. We heard you guys save 10% in your long term, and we hope you know your future self is smiling. As a present, we just bought MPW. I have nothing else to give you, but thank you. Happy Honda days. All right, NASDAQ might go 2% here. 10-minute rig likes it. 3906. So see if you get above 3907. Remember, we were slow motion talking about this, and 3907 was that level. That's it. Bank stocks gave it up. Rest of the market might hold. Very interesting. $4 billion to the buy side. Well, that's bad now, but let's see how that plays out. Oh my goodness, is Meta still up? Again, Bungie added to the S&P. Wall is just literally, looks like it ran into a wall. It actually just ran into a wall and bounced. That's now, what, 8%, 10% off the bottom? Hideous. That's crazy. Well, usually last couple of days I've just been seeing, like, when it's like imbalanced to the sell side, we usually get bid up. When it's imbalanced to the buy side, we usually sell off. So I say usually very tentatively, but that's just over the last couple of weeks I've noticed. So that's why, like, I've really been liking opposite of market on close. It's kind of been a little bit better. 4 billion's a lot. Yes. But that means somebody will have to sell it. You know what I'm saying? I hope it blows up tonight. Okay, you're a very positive individual there. That's good to see, man. It's good to hear. I wish that it blows up by the time I waken my eyes. And when I look around, I want to see death and destruction. Okay, bro. I love you too. God bless you. So I understand. Yeah, UAL guided lower after guiding up 3 weeks ago. I guess that was 2 months ago. It's been a long time, bro. This year has been flying by. No news on Abivi. I think it's just a defensive. That's it, right? I mean, defensives the last 3 days have been going up and staying up. So that's the thing. It's like we've been reacting to the bank stocks, but if you actually notice underneath the surface, tech stocks and defensives, they've been slowly inching up. So I wouldn't be surprised by that. I'm down with I covered my JPM short. I think if you want to short JP Morgan right now, I think it's going to be very frustrating because it's not going to move like all the bank stocks. But then again, it is a bank stock, so it will be exposed to everything. So I like the idea of it, but I closed out on my short. It was kind of being annoying. I had Goldman in them. I thought it would have been a little quicker, but it honestly was just a pain in my ass. And then that thing could move big still. So I like the idea, but execution of it is going to be difficult, and you're going to have to find your way on that one, young one. Wall is up 8% now. How much time we got? 7 more minutes. Not bad. Not bad. Yeah, PPI is an hour before the bell. We will not be on early, but you'll probably get a big reaction to it. But then granted, it might be like today. I mean, I was talking about it, but I mean, let me just tell you, does this feel like a CPI day? That's up to you to make your decision. Oh, Democrats unveil bill to repeal bank deregulation law. So hold on, we got something coming out here now. There's some government action. The Democrats want to repeal the bank deregulation law, which I believe is the rolling back of Dodd-Frank that Trump put in. Where is it? So it would rewrite parts of, this isn't, I'm just giving you the 2018 bill. This would be the rewritten parts of 2010 Dodd-Frank, the landmark financial regulation. The bill cleared Senate back then. The bill would adjust the size at which banks are subject to certain regulatory scrutiny and exempt small banks from some requirements for loans, mortgages, and trading, among other measures. So it was passed in 2015. The House even passed their own deregulation bill, even more severe rollback of Obama rules. So this bill changes what size banks regulators scrutinize. So the bill was passed in 2010 to finance regulations in response to financial crisis, aimed to decrease various risks in the financial system and increase regulatory oversight to prevent a meltdown. Banks with 50 billion or more are considered systematically important. So I think they're gonna increase that to 250. So I don't even think Silicon Valley would have applied still. So then pretty much small banks, any bank 50 billion is going to get regulated like it was a big bank with 200 billion. So I don't know, not too bad. Not too bad. I wonder how the actual implementation will go. But market may like it a little bit. You're already responding off that. Again, you got your market on close and everything else, but you're making a pretty big move. Defensives look to be leading the way. Watch like energy, if that could even come up here too, and then the rest of those banks. Procter & Gamble up. Yeah, Wall is up 12% now. Even more from the actual bottom. Yeah, all right, ladies and gentlemen, we're making our final approach. As we make our final approach, you guys are holding on to any bags. Please stow them in the overhead bins above or firmly beneath your seats. We'll be coming through the aisles with the trash bag if you'd like to dispose of those bags. But as we make this final approach, we're going to be landing here into the second link terminal. Second link terminal in description. That's going to be your nightly Watchlist and main channel layover around 4 p.m. Pacific time, and then we're going to be taking off promptly around 6 a.m. out of sunny San Diego, California. As we make this final approach into San Diego International Airport, it's about 56 degrees, slightly cloudy, showers on and off. Kind of sounds like trying to buy or recover in regional bank, but other than that, no other problems. We are no longer under COVID guidelines, so no masks are required, but we do ask that you exit one row at a time and drop a GG on your way out. As always, we appreciate you guys' business. If you're interested in your Colt Rapid Rewards program card, please flag down your flight attendant, and we'll get you that as soon as possible. As always, thank you for flying with the Colt, and hopefully have a wonderful evening. Amen, baby. Amen. Let's go, Chattadonia. Time to bring it home. I hate to break it to you. The NASDAQ has gone up 1% in 20 minutes. So you're back at 39.20 now, well above any of the other levels. You're bringing it home right now. This is quite amazing. Democrats' news of repealing the bank deregulation bill could have some good insights. We're going to see, but that's your really only update that you've gotten all 7 hours, and the bank stocks have gone crazy. 1 minute! Go, 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 go. Ladies and gentlemen, boys and girls, you've made it to the final minute. The market is unwinding it all. CPI day is kind of crazy, but we're going to see. You have PPI data tomorrow, as well as a couple of other consumer points in retail sales. So we're going to see how you play it out. But, Chad, you got to wrap it up now. Speak now or forever hold your peace. You got less than 15 seconds remaining. Are you going to buy the dip on the banks? Are you going to wait till tomorrow? The Fed is now pricing in only a quarter basis point. What are you going to do? 5 seconds remaining. 4, 3, 2, 1. It was 0. Ding, 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 ding. Ding, 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 ding. Oh, no. Oh, we did it. We made it. We did it. We made it. Chattadonia. Chattadonia, how do you feel? Oh, let's go. Oh, they already started my audio. Let's go. I need that GG. Let's go. It don't matter if you made money or lost money. I need everybody who learned something with that GG. Let's go. All the members, all the non-members, all the stream alerts. Where's that good game? That's how you play the game. All the laggers, all the lurkers, all the lovers. Why are you being so shy? Let's go, baby. God bless you. Good game. That's how you play. Wow. Wild day. CPI. You made it till the end. Tomorrow's going to be crazy. Oh. No, I don't think we have it. No other end of banking news. Let's go. Good game. Good game, baby. I see you too, Twix. Let's go. Hey, man, good game. Ford on the low. Oh, man, good game. Wow, what a day, Chattadonia. Are you ready? Are you ready for tomorrow? We still got to watch the banks in the middle of a bank run, in the middle of the markets, and Powell next week. Good game. Let's go. I need me to rock. You won't see me a lot. Monday through Friday, you need me to talk. Let's go, baby. Let's go. WU on the low. Ford on the low. A lot of things on the low, but Chattadonia, that is it, man. That is it, man. That's all. That's all I wanted to give y'all, man. You know what I'm saying? That's it. Check out. That's it. It's done, man. Wow, 2.8 thousand likes. Bro, I wasn't even selling likes that hard. God bless you. I appreciate you. Thank you, Chattadonia. Horna. Amen, amen, amen. So listen, I love you all. Thank you for being here. I actually got a good question in the chat related to the market, so I'm going to get to that in a second. But before anything, we've talked about a lot every day, day in, day out. I just want you to know, man, if you got to get going or maybe you stick around, I just want you to know I love you and thank you for being here. And I want you to know how thankful I am for every second of your time. I really hope I made the most of it. I hope we were able to provide info. I hope you see I garner information from the chat as well too, and the chat has been extremely helpful. So for real, thank you for your time. Thank you for your contributions. I hope we made the most of it, and just thank you for the opportunity. It is an honor and blessing to be here, and it is my honor to share history with you. So I'm glad we get to go through it together, baby. But God bless you and thank you. It don't matter if you got a badge, a non-badge, a stream alert. It's all free 99, man, but also, too, thank you for the people who support, all the people who throw donos day in, day out, all the membership badges, all the people on stream alerts, even the people building up their long-term on the long-term alerts, even if it's free, because I know one day you're going to buy me a house, baby. So God bless you, and thank you, my friends. So God bless the chat, man. Probably the best community I've ever encountered. I'm biased, but I love it. God bless you all. But now here's the question. Somebody asked, the latest set of news that we got was that Democrats are voting to roll back the banking deregulation bill. So what happened, Donald Trump in like 2015 or 2018, they had a bill where they were going to lower the standards to how big banks could be regulated. So pretty much Donald Trump, his law allowed that banks with $50 billion or less would not be regulated the same way as 250. They deregulated it, and they said, okay, we're only going to require X amount of scrutiny on banks that have $250 billion. So that's what people are blaming. Again, you know, Biden, yeah, I'm afraid that train wasn't my fault. It was Trump. The bank's not my fault. It's Trump. What the fuck are you saying? Why would I be the one? If I was in charge for 3 years, why would you blame me? Fuck you. But essentially, what they just announced here about 10, 20 minutes ago is that they are saying that they want to go back on the deregulation, and pretty much now banks that have $50 billion will be regulated as if they have $250 billion. So there you go. Very, very simple. We'll see. Sadly, that's our only update on the banks today, besides, besides the whole WAL and FRC going crazy. That one was wild. But, Chad, that is the day. Check out the links. First link for the Scream Alerts Bootcamp and Real Estate course. And look at that, Colt International. Oh, wait, I thought today was Wednesday. Damn it, it's Tuesday. But even then, you get Colt International Real Estate tomorrow, baby. That's going to be live. But guess what? Free long-term alerts. If you a real one, you could get that stream alerts. It's all up to you, man. But check that out. First link. Second link for the nightly watch list in Maine. Did y'all see the watch list yesterday? I don't know if you saw it yesterday. I tried to pull out money from the banks. Oh, wait, where'd it go?
All right, it's March 3rd.
Yeah, that's me, bro. Look at they let me pull it out, bro. They let me pull some money out, bro. So Edgar! So it was an interesting one. Maybe I'll show you clips from, I recorded some clips there, but it was very interesting. There's some unrealized bond losses if you haven't been watching it. Again, we've been going over it, but check out the watch list. I appreciate all of y'all. Y'all have been running it up lately, so that's what I'm talking about, man. Let's go. Keep the watch list alive. There you go, baby. There you go. But check it out. We'll give you an update, and we're going to pretty much talk about everything that's happened and what happened today. That will be also a big one. So we're going to talk about it. I think I might be talking about WAL today and what really happened there. It will be very, very important. So, Chad, check that out. Second link, third link for that membership badge, baby. Amen. Shout out to all the members. Fourth link for the merch if you could get it in your size. But there you go. This is the only thing that's not free. It's beautiful. It's beautiful. Run it up, baby. Run it up. Don't be so shy. Check out the channels. Cult Real Estate again tomorrow. We're going to have a special moment there. Cult PHILO, Cult Music. Follow me on Instagram at The Trading Fraternity. Again, I am the private Instagram page, so don't fall for it. I even posted on my Instagram and Snap today, so you can see stuff if you want there. How option pricing works, a great tutorial. If you don't watch this and learn something, I mean, you know, I don't know if you actually heard, but if you watch this video and don't learn anything, I will actually be giving you a once in a lifetime, and that's for everybody. So if you watch the video, you get, and it will be sent to you right away. Whatever amount is up to you, but that's all you got to do. You watch that video. If you don't learn anything, you are going to get a guaranteed And then that's it. So it's very simple. So check out the video. You don't want to miss out on that. And then how we set up our long-term. We did make a purchase on the long-term high-yield dividend stock, a.k.a. dividend trap, a.k.a. we'll see what happens. But check that out and learn how to set up your long-term. And then the final thing is the prayer request wall, ladies and gentlemen. Me and my mom pray for y'all. That's what we do. That's what we do. Uber borrowed $700 million in loans on March 14th. But Chad, we love you. And this is what me and my mom do. And thank you for praying for me, man. If you ever want to do anything, pray for me. But this is our philosophy, bro. If it can't flow through you, it won't flow to you. So you know what that means? We praying for all of y'all. We pray everybody gets it, man. I hope all of you are living good, man. I know everybody goes through challenges. And like I said earlier today, man, I wish I could be there with y'all minute by minute. And I know we all got our own lives there. But I hope you know we're praying for you and we're rooting for you. And if I could always encourage you guys, you know, a mental toughness, staying in the game, thinking positively, it'll always take you a long way, and just don't forget about that, okay? But we praying for y'all, and pray for me, pray for your brothers and sisters in the chat, and it goes a long way, baby. That's all you need. Amen, 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 amen. So I love y'all. God bless you, but that's the day. That's it, man. That's it. That's it, man. That's it. That's all we have for today. You know what I'm saying? That's all we have for today. I'm sorry. So that's it, man. I'm done. That's the day. No other earnings. I think there was a couple. They don't really matter as much. And, yeah. Let's see, bro. Let's see. Let's see, bro. So I'll be right back. I'm going to give you some uncle. And then we'll see what happens.
Yeah. Go music. Yeah. Benny, yo, Benny, you bullish. But baby, I'm not from Chicago. Heard me talking about Ivy and dripping the bad. They thought that I came from the hospital. No, I just came back from trading. Chest to the sun, no vacations. I'm really not trying to be flagrant when I tell you that most of my calls will be naked. Funny when I make a bad play, I get a standing ovation. It's like I'm addicted to antibiotics to try to get rid of this clap. But fuck it, I always come back in the AM to the GG. What's that stand for? I am not a drug dealer, I'm a landlord. On my Tennessee the roof, that Mercedes-Benz don't need one. I went from Bailey to Bel Air, from the slums to the Ville to the top of the hill to a street where you can't park a car without a parking pass. I'm trying to chill with my boys in the island off the coast, bar hopping like it's Alcatraz. Watching make moves like a salsa class. Plus I got so many bars like the women in church. I already know you can't handle it. You ain't making moves, you a mannequin. You ain't got that flame, that candlestick.
They ain't got that flame. Tell them it's a cold, not a game. Walk through the mud and the rain, just bring a little hope to the people in pain. I don't want lies, I want honesty. Negative vibes bother me. Stay up on your grind until you make it out of poverty. You ready? I'm ready. Let's get it, my bag on heavy. I'm zoom to the Fetty. My pockets look full, not empty. You loaded, I'm loaded. We never gon' fold, you know it. That's fast right there, go quote it. It's coke, we goated. Different level, it's level, untold. They watching, we popping like options. You know, it's real, it's really real. Like PHILO time. Cause you can't help but make a meal if your people blind. Restless, cause I've been up grinding, I just want the Lexus. Cooking up like I'm making breakfast. Oh, I'm eating good, but you know I had to bless it. Looked inside the mirror, told my demons hit the exit.
That was Benny, that was level. Fuck the demons, fuck the devil. Throw the pebble, be successful. You can't tell me code ain't special. I got rich, I made a stencil like a chair. It's really simple, the framework is intellectual. Ay, like Curry on the chain, my brother, you know, wait, I know you know name. You ain't never seen my face, probably watch us in the game. Did it with a couple plays, let me kick a little lesson. You ain't never get a chase. What's yours, you always guess what I'm really trying to say. Longer that you on the stock, more that's getting safe. You ain't like to shit I say, I ain't trying to make it stay. Hey, I'm hitting plays, I'm hitting weights. Your portfolio all day, smiles filled with mostly grace. Apple, Amazon, and Facebook. You probably know the names, you probably thought that you should wait, then went and bought a course to trade. Benny, get some clothes and buy to close this shit. Clap them if they talking on some hopeless shit. Cause I've been there and going back. I told y'all that I'm focusing. I know they getting mad. The news is fair as well as motivating. Let's go and a shout out to the vets. Hit the players, then we sending in the jets. Don't be shy, you could send a prayer request. And the list got everything you missed. I love y'all, baby. It's a cup. 2020. Talk to me in 2030.
Oh, yes.
You know what it is, baby. Cold music, 2020. We coming. Watch out. On the radar.
Tell them I just want the Lexus. We out here making moves, baby. Let's go. Oh. Always hype. Always hype. Always hype, Chattadonia. Always hype out here, bro. Oh, yeah, it's PHILO time, bro. Of course it's PHILO time, bro. Of course it's PHILO time, man. Yes, Chad. Yes, I'm glad you're here. I'm glad you made it. You know that. Some people, they like, where's PHILO? I'm like, so you weren't here at all last week. We had a lot of PHILO even last week, man. I'm just saying, I saved the best for last. Why y'all getting mad at me for saving the best for last? I ain't going to throw no pearl to no pig. I'm just saying, if you want it, you got it. I got it. I'm just saying, y'all already know. Y'all got enough PHILO. Y'all had enough PHILO to take y'all a long way, but it still keep going. So, amen, baby. Now, here's what I will tell you for today's PHILO. Do I think you could get something practical out of it regardless of your belief? I do. Because there is 3 principles that are just very, very important. Very, 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 very important. However, I will tell you, this PHILO might be a little bit too spiritual for some of y'all. Because this PHILO, I'm going to be diving deep into something. And something that it correlates, everyone instantly likes to think a certain thing. So if you on the borderline a heathen or not, and there's a risk you might turn into salt, I don't know how you're going to feel about this one, but it's okay because I still love you and the Chad still loves you, and, we welcome anybody. And that's all it comes down to. So I hope it doesn't bother you too much, but I do hope you're ready, and I hope if the wisest of you will take the practicality in what I'm going to share with you. So, Chad, it's related to prayer. Today we are related to prayer. That's what today's PHILO will be about. However, I definitely think you could apply this in many, many ways of your life. So here's the first thing. This is I'm going to give you 3 words to remember while you are praying, and I hope you understand these. And I hope you understand how far it goes. I heard this the other day. This was from Arthur Pink, that guy who wrote the other book, and I just heard this little thing from him, and I was like, damn, that's actually interesting. Related to prayer. Like, Lord, I pray to God that you let my spy puts go green. Like, you know when you make that prayer? So we're talking about those prayers, but not necessarily related to spy puts. But here's the first word. Are you ready? Are you ready, Chad? Sincerity. Being sincere. I have news to tell you. One sincere prayer, and the moment you actually have a sincere prayer, will take you farther than any person who prays 1,000 times a day without sincerity. And I hope you know a lack of sincerity takes away the potency of your prayer. Now, like I told you, I think you could get something practical out of this. Why? Because guess what? I realized, because the whole nature of what I'm trying to tell you is that sincerity is probably one of the only things that we could all universally value as a very good ideal. I mean, you tell me, do you appreciate somebody being sincere with you or not? Doesn't matter if you hate the person, like the person, if you could feel that someone is being sincere, do you not appreciate that? Tell me, do you have more mercy on somebody who is sincere or not? How do you feel about a question that's asked in sincerity versus not? How do you feel about an answer that is given to you that is a sincere answer towards what you were looking for versus not? It's funny because saying that out loud, I kind of realize why I clap back on people sometimes, Because sometimes I'm like, you're not even being sincere. You don't really even care what happens with the market. You don't even care about your question. You already know the answer to your question. That what you are asking is not out of sincerity. You're not even being sincere about it. Oh, man. It's something else. When I heard that yesterday, I thought it was crazy because I was thinking about even criminals and murderers. I was even thinking a murderer can even be sincere to other people. And you could even, like, if somebody isn't sincere, it doesn't matter who they are, what they have done, but like you could tell sincerity or not. And being sincere or not really does make the world's difference. So, like I said, I'm talking about praying sincere, but I really hope all of you can apply this everywhere else in your life. Very, very simple. I hope you recognize how far being sincere would take you. I think for the guys in real estate, this will help you a lot. That's something called real estate does amazingly. And guess what? Any business you want to pursue, you want to get into business, you want to work with people, I don't know what it is. I hope you are sincere with your efforts. I hope you are sincere about what you want to do for somebody, for yourself, your goals. But more so, like, here's the main point. The lack of sincerity will kill you. Oh, man. Chad, do you feel me? See, so not only will it hurt you in other areas in your life, and I hope you realize it, people could pick up on it. Yes or no. You may not realize it yet, then that's something you're going to have to learn. But even for your prayers, seriously, man, what's the point of sitting down there praying all the time? What's the point of praying the invisible sky daddy if, like, all you're doing is just coming out emotions? And you just saying it to say it, or you feel bad today, I feel good tomorrow. Are you actually sitting there with the time that you have? If you are going to meditate, pray, whatever you call it, are you doing it in sincerity? Is it something that you sincerely believe in and believe about? And it's like, this is what is weighing on my heart. I'm going to pour out my heart. I'm going to actually look in the mirror and be honest about it and be sincere that this is why I'm stressing. Like, okay, I have stress in my heart right now, but you want to say you don't know why? I think you know. You got to be sincere about it. Open it up, baby. Don't let me get too crazy. But do you get what I'm saying? This is very important. Sincerity. Sincerity is very important. So that's lesson number 1 for life. Okay? And prayer especially. And I hope you do open up your heart when you do sit down to pray. And I hope you give a sincere prayer. And I hope, even then, it's okay if you don't. It's okay if you haven't. What I'm trying to tell you is I hope you make an effort. And I hope maybe you could sit down and ask yourself, how sincere am I being with what I'm asking for and what I'm looking for and how I'm dealing with other people? I just hope you can make the effort. But now, number 2, here's the second word I want you to keep in mind. It's called mercy. You ever play that game growing up? Me and my brother played that game a lot. I don't know why. We would play a game where you would try to hurt the other person until they said mercy. So you would put them in a choke lock until they said mercy. You would twist their arm until they said mercy. You would just do something. You would sit on them. I would get sit on because I'm small. They would sit on me until I said mercy. Yeah, you forget about that game? Well, don't forget about mercy because mercy is very important. Now, like I'm telling you, I'm talking about this in reference to prayer. But like I'm saying, I do really believe there's a lot of practicality that you could apply to this outside, whether it's business, life, anywhere else. But with mercy, I hope you recognize that a sincere prayer, simply asking for mercy, is probably one of the most powerful prayers you can give. And everywhere else in your life, asking for mercy is probably one of the only elements where you actually have to be sincere and people can tell or they can't tell very obviously. And those who can actually show mercy, you have a long life ahead of you filled with blessings. I mean, I think you could do the math. But if you go and actually, do you realize how many times in the Bible either an apostle, a disciple, or even Jesus himself had a prayer for mercy? Literally, you know what it was? It was them crying. It was them weeping. It was them breaking down saying, I have failed. Like when Peter denied the Lord. When Paul realized what he was, I'm prosecuting them. And in his moment, he realized, do you realize his prayer, his only powerful prayer, even Jesus on the sermon, right? Or on the Mount of Olives, praying, he was praying for mercy. Do you realize a sincere humbling of yourself, whether it is with God or it is with another man, where you are relying on the mercy of a human, which is terrifying. But that is one of the most powerful things, and that could take you a longer way than anything. You realize that? 1,000 insincere prayers, asking about this, saying, no, I got this, that'll take you way less further than an open-hearted prayer that is sincere, just simply breaking down, recognizing I need mercy. Going up to somebody after making a mistake and being able to say, I made a mistake, this is my problem, this is what I did, that will take you a longer way than making a mistake, going up to somebody and saying, well, actually, no, that'll take you a longer way. Mercy, my friends. It's a very interesting concept, and it's funny because we love it when it is given to us, but it is actually doesn't apply the same when we give it back, which is the irony of it all. And that's even maybe the irony of the whole God thing, if you really think about it. And that's why we are so far off, if you really think. But anyways, mercy. And then finally, are you ready? The last one. God's plan, God's plan, God's plan. The will of God, my friend. The will of God. Like I said, I'm talking about prayer, but I really think you could apply this in your life. When you pray, don't pray against the will of God. What I mean by that is, why are you praying for things that don't even line up with who you want to be or what has been promised to you? Why are you praying for the things that are going to hurt your life rather than the things that are going to help you? Like I'm saying, God's plan, your destiny. Why are you praying for something right now? Again, every day in life, why are you spending your time working on a project that does not match up with your destiny or where you started when you began? Why are you praying for something that goes against what you, your family, people around you, you want something special from everybody else? Oh, come on, Chad. Oh, y'all don't feel me. What I'm trying to tell you is, I hope you pray in line with what is good for you and what truly is God's will. Honestly, do you think the will of God was for you to make $1 million on a YOLO? I don't know if that would be the best for anybody. I know it's hard to say, believe me. I don't think you're like, oh, I want to be able to, I wish I could go outside and have fun and do this and that. Is that really what is going to lead to the best version of yourself? Is the thing you're stressing about that you don't have or that you want or that you're praying for, it's like, come on, like, think about it. Does it line up? Again, I see this a lot. I'm talking everyday life, man. You know how many people, I know people, I've seen people pray for stuff and send in prayer requests that are contrary to what their significant other wants or the people around them are even wanting, or even the destiny and the plan that they laid out in the beginning. It's crazy. But I understand. You know why? Because that's the game of life. That's how we are as humans. We go up and down. Like I told you, it's a cycle. We go from wanting better future for ourselves, better future, and then somehow we low-key kind of wind up into the bottom, and then we're like, actually, I kind of want to backtrack. Oh, I kind of do miss this. Oh, come on, man. So all I'm telling you, man, don't fight it. Don't fight the plan. Don't fight destiny. Don't fight God's will. It's very simple. If you align yourself with the will, you're going to get everything you wanted. You're going to be taken care of, nothing to worry about. But if you're trying to go against the grain, maybe there could be the source of the problem. And maybe you're fighting really, really hard to get something that doesn't really align well with your destiny. And maybe you're beating yourself up over certain things that you have or you don't have, but maybe that may not be what the best is for the future self. Now, this is always the dilemma because we have to live here in the moment every day, and we don't always know, right? So I hope you don't get yourself into paralysis asking this question back and forth. But what I'm trying to tell you is kind of take a second and make sure everything that you want in your desires and that you're praying for and that you're crying for and that you're wishing for, I hope it aligns. And what I'm telling you is take this moment to maybe sit there and figure out if everything is aligning. Like I told you, I hope you take a look at those habits and write them down. But are you making sure these things that are giving you stress or excitement, does it align with what you set forth? Whether you set forth or what the book set forth, that's up to you, my friend. But do you feel me? And I'm telling you, in daily life, oh man, being aligned with your goals, making sure you are working on something that is aligned with where you set forth, built the foundation, and where you are moving towards. I don't think that's going to slow you down, my friend. I don't think it's going to slow you down. So, Chad, I hope you feel me. I hope a prayer tonight of sincerity, mercy, and just in line with God's will takes you a long way. But maybe you don't. At the very least, I hope you could apply this to the daily life you deal with and understand how sincerity, mercy, and being aligned is going to take you a long way. But Chad, take that one to the bank. That is your philosophy, ladies and gentlemen. Make sure you guys are subscribed. We're live Monday through Friday, 30 minutes before open. Drop your thumbs up on that video. You're on mobile. Press hot chat, X out the chat, hit the thumbs up button. Second link for the nightly Watchlist and main channel. First link for the Scream Alerts Bootcamp and Real Estate course. And the Chad loves you. And I love you. And God bless you, baby. That's it, man. That's it. That's the day. Yeah. So that was on my mind all day. I was thinking about that. I can't wait. I've been having some good prayers. I need to pray a little harder. I need to pray a little bit more sincere. But I'm glad I got to share that with you. I hope it helps you, man. I hope it helps you. You know, that's it. That was just something on my mind in 24 hours. So that wasn't directed towards anybody, but I hope it helps you as much as it helped me, my friend. You know what I'm saying? Amen? Amen. Let's get it, baby. Let's get it. But Chadadonia, that is the day. I do have to get going here now. I love you all. Thank you guys again for everything. I will see you on the watch list tonight. I hope you're ready for more activity tomorrow. And that's it, man. That's it. I'm out. So peace out. Read the books, Richest Man of Babylon, Proverbs, New Living Translation, and The Strangest Secret in the World. And don't forget why we're here, baby. Why we keep going. Why we don't back down. Why that faith, hope, and love ain't never going out of style. And why that sincerity, mercy, and God's will take you a long way, baby. Why? Finger to the sky, baby. To God be the glory, and through the grace of God alone. Amen. 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 All right, Chad, I love you. One more. I gotta poop, bro. I ain't pooped since 5:30, 4:30 today. This is poop time now, man. I'm out. But, Chad, I love you. God bless you. I'll see you on the watch list. Y'all haven't been watch holes lately, but we'll find out on the next episode. And then I'll see you in the morning, baby. PPI. Then Wednesday, then Thursday, then Friday. But, all right, I love you, Chad. Peace out. What are we preaching now? I'll show you a piece of my mind, huh? Listen, hey. We got to deregulate the deregulation on the deregulation of banks because the banking system is just superb. It's just hyperbole right now. No, seriously, I mean it. It's not hyperbole. What? Okay, listen. Hey, you little prick. Calm down. We're going to get through this banking crisis. We're going to bank everybody's bank. Don't worry. It's guaranteed. I guarantee it. Or your money back. Just kidding. What do you mean talking about guarantees? This guy want to guarantee. What are they going to guarantee? I de-guaranteed the guarantees. It's terrific. I don't know what they're talking about. They want to talk all this nonsense. I saved that, Frank. I saved the banking industry. Have you noticed banks go down when I'm not here? Okay, goodbye. I'm not good at this one.